So, hi guys, welcome to the video. My name is CA Varshith Gowda. I am your faculty for advanced accounting here at iProledge and Success Edge Academy. So, welcome to this marathon revision of CA Intermediate Accounts. Okay, so this marathon will approximately go for what, 20-24 hours. Okay, and for offline people it will go for 4 days. Okay, we'll first discuss the plan as to what we'll cover in this 4 days and other stuff, and then we will start with, and then we'll see, I will discuss as to how our revision sessions will go, how we'll discuss each and every topic, and then we will start with the revision. Okay, that's the idea. So basically we are first looking at the weightage of the paper as given by ICI. Okay, if you see chapter 1, 2 and 3 forms part of 55 to 65% of the total weightage. So what all will come in the first thing? Chapter 1, chapter 2, chapter 3. Okay, chapter 1, chapter 2 is here. Chapter 1 is all that standard setting process, IASB, Ind AS, all that we had learned, know that part. And chapter 2 is framework, where you discuss about what is asset, what is expense, what is income, liability, capital maintenance, etc. And chapter 3 is accounting standards, completely, fully. When I say chapter 3, it's applicability of AS, plus have written, no, plus all accounting standards forms part of 55 to 65% of the weightage. Okay, all accounting standards. And remaining, your company accounts, correct, no? Your schedule 3, final accounts, your buyback, internal construction, branch, buyback, internal construction, schedule 3. E-Muru will come for 30 to 35%, okay? So what about amalgamation consolidation? That is included there only, above, in accounting standards, because consolidation deals with AS 21, 23 and 27, correct? Amalgamation is AS 14, correct? Now that is covered in your above 55-65% only. Leaving that, your schedule 3, preparation of financial statements, buyback, internal reconstruction, this will come for 30 to 35%. And your branch accounting will come for 5 to 10%. This is your weightage as given by ICI. So therefore, in our first and second day session, what we'll do is we'll be discussing about accounting standards only. The first and second day, completely, our focus is on accounting standards. Third and fourth day is on the other items such as buyback, internal reconstruction, schedule 3, and console amalgamation will come in here third and fourth day. First and second day we'll be discussing completely about accounting standards. So that's the plan basically. So what all standards will we study? See, I have written the format in which we will study the accounting standards. Okay, but mostly there are chances that I will change it also. But the idea is first I'll start with asset-based standards. All the important ones will cover first, and all the least important ones will be covering in the last. Why we have done this? Because we have only 4 days now. We don't know whether we'll be having sufficient time to complete everything. So that's why I've prioritized important standards which needs my guidance. Those standards I'm covering first, okay? And the simple ones I'll cover it in the last. Alright? So that's the plan. So each and every standard, while we are doing what we are thinking to cover, the first thing is we will revise the standard completely. Then we will solve some questions on that standard which has come in the recent RTPs. Okay, I've done a compilation of questions, all the questions that has come in recent RTPs from that particular standard. Okay, there also, if it is a repeated question or something like that, I would have not taken. If it is a different question, which is something which is not covered during our class, that questions we will solve and we will close the standard. That is the plan. Revise the standard, solve 1 or 2 questions from the recent RTPs or your previous year question papers, then go for the next standard. That is the idea. Okay. So then let's start. So we'll start with applicability of accounting standards. Okay. So first of all, who develops accounting standards? Correct. For companies, the accounting standards are prescribed by Companies Act. For non-corporate entities, when I say non-corporate entities, what do you understand? Partnership firm, anything other than company, okay, your LLP, etc., etc. For them, the accounting standards are prescribed by ICAI only. Aita? And ICAI only has given the criteria for applicability of accounting standards also. Okay. For companies, it is MCA and your Companies Act. They will take care about the applicability. So accounting standards cannot override laws and local regulations. I think we know this before also. If there is a conflict between accounting standards and company law, for example, who prevails? It is always the act, which is powered by law, government and anything. Okay, law is always overriding the accounting standards. So very important, enterprises to which accounting standards apply. This is one basic thing. Most of you would have missed it. Aita, please focus now. See, accounting standards is applicable to any entity engaged in commercial, industrial or business activities. Commercial, industrial or business. If your business, if whatever you are doing, your entity, if it is not into this any three things, then accounting standards is not applicable only. So basically what they are telling is, if you are a non-profit organization, for you accounting standards is not applicable. So just because I'm a non-profit organization, AS is not applicable. I'm not telling whether it's profit or non-profit. If you are not engaged in any commercial, industrial or business activities, then AS is not applicable to you only. And your business is what? Collect donation from people and do good things. Ishte sir nam trust kelsa. Andre accounting standards is applicable? No. Okay. Now tell me, Isha Foundation is again a non-profit organization. Accounting standards applicable or not applicable? So they are non-profit organization, not applicable. They are involved in your commercial, industrial and business activities, no? They have their e-commerce website. They are doing all the commercial activities, business activities. Now, though they are NPO, for them, accounting standards is applicable. I am not telling whether it's profit or non-profit. Okay, I am telling no matter what it is, commercial, industrial and business activities should not happen. Even it happens in a part manner, even it happens little bit, then AS is completely applicable. Did you understand the point? If you're a trust and your only business is to collect donation and do good things for people, you don't have any commercial activity, no business, no buying something, selling something, no providing of services and receiving money, AS is not at all applicable. Very important point. All of you got it? Now what has happened is, for companies now, who has told to follow accounting standards? It has come under Companies Act only. Now if you see section 129, very clearly they have told, please follow accounting standards. Okay, there are various sections which talks about accounting standards. See, section 129, they have told companies must present financial statements in accordance with accounting standards notified under section 133. It is told for Companies Act. Then again in 143.3, if you know section 143.3, what does it talk about? Powers of auditor, powers and duties of auditor, okay, in your law. There also they have told an auditor must report financial statements. He should report whether the financial statements comply with accounting standards under section 133. So if you see, and also if you see section 129.5, if non-compliant, then company must disclose the deviation, reasons and financial effects. So basically what you have to understand, in section 129 they have clearly told companies to follow accounting standards. That's why companies will follow accounting standards, no doubt. What about non-corporate entities, partnership firms, Adala? Do you think in Partnership Act they have told, please follow accounting standards? No, in Partnership Act nowhere we have. Then, are we supposed to follow? Why should we follow? Who is ICAI to me? Say suppose I am a partnership firm. Who is ICAI to me? For Companies Act, for companies, Companies Act is MABAP. I have to follow Companies Act's instruction, of course. For Partnership Act, for Partnership, MABAP was Partnership Act. But Partnership Act is not telling anything, it is silent. So technically are we supposed to follow? No need. Because ICAI is an independent body. We already learnt, no? Who issues accounting standards for non-corporate entities? ICAI. ICAI is a normal statutory body, that's all. It has its own act. That's all. It does not have any power over citizens. It is a body recognized under the Act. So ICAI has no powers. It has prescribed accounting standards because it's an accounting body of our country. But for me as a partnership firm, no, I have no, obligation to follow what ICAI is telling. So that means, do I have the option to follow and not follow also? Yes. Partnership firm, you have the legal obligation illa. Okay. But still, what has ICAI done is ICAI has given applicability criteria. Who has given? Government. No. ICAI has given applicability criteria, which we generally follow. Are we mandated to follow non-corporate entities? No. No, it's not a mandatory to follow. All of you understood? But for companies, it is mandatory to follow because it has come in Companies Act. Similarly, it has not come in Partnership Act and other stuff. That's why it's not mandatory. It's good because as we know, what is one of the 4 features of financial statements? It is comparability. Correct? If investors comes and if they want to invest in your company, no, they expect accounting standard compliant financial statements, because if everyone has followed accounting standards, then good only, no, for us to compare and do the investment. So that's why everyone prefer AS, but it is not mandatory for the non-corporate entities to follow AS. Okay. So they have told one materiality concept. You know now what is materiality? Materiality means anything which influences the economic decisions of the users is called materiality. Correct? If it changes, if it alters the economic decisions, whatever information you give, no, by listening to that information, if they are altering their decision, no, then it is called material information. Okay, shareholders. Now something happened within the company. The moment they came to know about it, now they are altering their decision. Maybe they are selling the shares. They are not holding it anymore. Now that becomes a material information. Okay. Now one more thing what you have to understand is these accounting standards is applicable only for material information. For immaterial information you can avoid applying it, because what they are thinking is they don't want you to waste time on applying accounting standards for immaterial items. Waste of time, no. You are applying your AS 19, 5 conditions, only for 5 rupees. Okay. Does that matter? No. So accounting standards is applicable only for material items and not for immaterial. Whenever we say material, no, in accounting standards, it's not only quantity. It's both qualitative and quantitative. Just now in my example I told, say 5 rupees. If it is less than 5 rupees, why will I do for it? Because it's very immaterial. So whenever I'm judging whether something is material or immaterial, is it only quantity? No, quality also. Okay. For example, here we have given one example. See, a penalty of 50,000 paid for breach of law may seem small for a company with a crore rupee turnover, yet is material because of information it conveys. There's a company which has crores of turnover. They have paid penalty of 50,000. Tell me, is it material or immaterial? Crores turnover, 50,000 is material or immaterial? By looking quantitatively, no, of course it is immaterial. Where is crores and where is 50,000? But just because it is just 50,000, you cannot classify it as immaterial. Why is? You also see the intention. It's not about paying 50,000. Why have they breached the law? That also we have to see, no, what is the intention behind breaching the law? That is also material here. Okay. While you are judging whether something is material or immaterial, it's not only quantitative. Sir, it is 50,000, very less. It's immaterial. Just like that, you cannot decide. See the qualitative aspects also. Why has he breached the law? Law breach ಮಾಡುವಂತದ್ದು ಏನು ಮಾಡ್ತಾ ಇದ್ದಾನೆ? Judge's intention. That also matters, no? So whenever you decide whether something is material or immaterial, it's both quantitative and qualitative. Did you understand the point? All of you? Then we have something called as ICDS. You have heard of ICDS is Income Computation and Disclosure Standards. Accounting standards is for our purpose. Accounting in our books. At the ICDS are the standards given by Income Tax Act. In Income Tax Act also you have PGBP. Correct, no? Business and profession. Correct, huh? Now, to calculate profit for the purpose of Income Tax Act, the standards you are supposed to follow is the ICDS standards. It's the same accounting standards only. They have 10 standards, if you can see here. These are the 10 standards. It is very similar to what standards that we are learning, no? It is very similar to that only. No need to worry. But know this much, that ICDS is issued by Income Tax Act and our accounting standard is issued by ICAI for non-corporate. For corporate, same thing is copied and pasted by companies. MCA, Companies Act. Same thing. Whatever is issued by ICAI, that only they have copy pasted in their rules. under section 133. So same thing, no need to worry. So let's now come to the actual applicability. Okay, we have applicability divided into two parts. For corporate under companies ge separate, non-companies ge separate. Okay, earlier for companies and non-companies we had separate, full classification only was different. For companies we had classification called as SMC and non-SMC. And for non-corporate entities we had level 1, level 2, level 3, level 4 and all. It was very crazy, but now it has become very, very simple. Okay, after the amendment, for both company and non-corporate entities, it has become very similar. Okay, in companies we do two kinds of classification, on the SMC and non-SMC. What is SMC? Small and medium company. MSME andre it's micro, small and medium enterprises. MSME, non-MSME will use when it is non-corporate. MSME word I will use when it is non-corporate. SMC word when will I use? When it is corporate. Are we clear here? Now it is very important for us to understand what is MSME. See, same conditions for SMC also. Okay, close the door, man. Be it SMC, be it MSME, okay, the conditions are same. We have 5 conditions. If it satisfies all these 5 conditions, then it becomes MSME or SMC, whatever. Depends on its company or non-corporate entity. What are these 5 conditions? First, it should not be a listed company. Second, it should not be a bank, financial institution or insurance company. It should not. All the 5 conditions should be satisfied, and it should not be a bank, insurance or financial company. Third, the turnover should not exceed 250 crores when in the preceding financial year. Say suppose you are finding out applicability for 24-25. Which turnover will you see? 23-24. I thought 23-24 whatever was the turnover that you will see. That should not exceed 250. Exceed andre up till 250 we are okay. 250 crores 1 rupees we have a problem. Exceeding 250 crores. Then fourth one, borrowing should not exceed 50 crore. When? If you are seeing applicability for 24-25, when should the borrowing not exceed? In the previous year. Okay, same thing. But the deadly dialogue in this one condition, what you have to understand is, any time during the immediately preceding financial year. That means what? Say suppose you are borrowing. My question I will ask you. The borrowing, say 1 year, no, we are seeing applicability for 24-25. So that means I will see financials of 23-24. In 23-24, somewhere in June, the borrowing was 80 crores. But by 31st March 24, by the end of that year, it has become 35 crores. In balance sheet, the borrowing has come to 35 crores. Now tell me, have we breached the condition or not? We have breached because of this one deadly 9. Because they did not tell like this immediately preceding year. Did they tell that or no? At any time during the immediately preceding financial year. That means if you have breached that 50 crore criteria any time during the year, that means the condition is breached. Correct? In June we have breached, no? The borrowings had become 80 crores. So I don't care what is there in the balance sheet in the end. If it is breached in middle, also gone. Even for 1 day, say suppose your borrowing level throughout the year is 35 crores. 1 day you have taken a loan which is exceeding 50 crores and you have repaid it again in that 1 day back. Still for you, this condition is breached. Okay, I don't care. Any time during the previous financial year. All of you understood this one point? This criteria, this point, no, most of the times they will question in your exam. Please keep that in mind. Fifth condition is, it should not be a holding or subsidiary of any entities which is satisfying the above 4 conditions. And they say suppose you are a subsidiary of an insurance company, gone. You cannot be a MSME. You are subsidiary of a company which has exceeded its turnover of rupees 250 crore, gone. You are holding of that company, gone. You cannot be holding or subsidiary of any of the 4 companies which is mentioned above. Did you understand? If you satisfy all these 5 conditions, then you will be classified as SMC or MSME. Did you understand, all of you? What are the 5 conditions? You should not be listed, you should not be banking, insurance or finance company, your turnover should not exceed 250 crores in the preceding financial year, your borrowing cannot exceed 50 crores during any time in the preceding financial year, and fifth one, you cannot be holding subsidiary of the above four. Then only your MSME or SMC. Okay. Then even if you breach any of the one condition, then you will become non-MSME in case of non-corporate entity, or you will become non-SMC in case of companies, even if you breach one condition. Okay. Okay. Now let's come to SMC. What is the benefit SMC is getting, Papa? See, they are getting lots of exemptions. Okay. But of course, it is very difficult for us to remember all the exemptions. So how we'll remember is, or what you can do in exam also is, we'll only remember those standards which are completely not applicable for SMCs and MSME. That means what you have to understand, other standards are either applicable fully or partially. So in exams also you write like this, like that only. This particular standards are completely not applicable for SMC. The other standards are either applicable fully or partially. No need to remember this nonsense. Okay. So for SMC, which all standards are completely not applicable? Very simple. SMC, and I'm talking about what? Companies. For SMCs, AS 17 alone is not applicable. Rest all other standards, it's either applicable partially or either applicable fully. When I say partially, what you're understanding? Entire standard is not applicable. Some of the standards is applicable, some of the standards is not applicable. But AS 17 ಅಂದ್ರೆ ಯಾವುದು? Segment reporting. The segment reporting is completely not applicable for SMCs. Okay. Then for MSME, which all standards are completely not applicable? AS 3 not applicable, AS 17 not applicable, AS 20 not applicable, and AS 24 not applicable. Okay. These four standards are completely not applicable. Other standards are either applicable partially or fully. Okay. So 3 is cash flow statements, 17 is segment reporting, 20 is EPS, and 24 is discontinuing operations. Okay. If this much, if you remember, I think more than enough. Okay. Sir, for non-SMCs, what do you think for non-SMCs? Everything is applicable. For MSME, I mean non-MSME, large entity, everything is applicable. Okay. One more small thing you have to understand about this non-corporate. Safety side we will know. See, for MSME, okay. See, which all standards are not completely applicable? Can you see? Which all standards completely not applicable? It's AS3, AS17, AS20 and AS24. That we have learnt. There is 2 more standards which you should know. AS18 and AS28. Okay. Further, these standards are also not applicable. Yavadu? AS18 and AS18 is your related party. AS28 is your impairment. When we have some conditions. What is the condition? If the turnover is less than 50 crores and if the borrowings is less than 10 crores at any time, again that any time component is there, at any time during the immediately preceding financial year and not a holding or subsidiary of an MSME, that is not covered above. Andre, if you are a holding or subsidiary of an entity whose turnover is more than 50 crores or whose borrowing is more than 10 crores, then for you also this 1828 exemption is not available. Are we clear? For MSME, which are the 4 standards not applicable? 3, 17, 20, 24. Further, 18 and 28 is also not applicable if your turnover is less than 50 and your borrowing is less than 10. and you are not holding a subsidiary of any company breaching these limits. Clear, huh? One more thing that you have to know is coming here, okay? They have asked questions on these points also, that's why I'm covering it off, okay? So transition, okay? Now for example, what happens? You're an already existing company, right? You were earlier, you were a non-MSME. Non-MSME andre large entity. Suddenly you are classified as MSME for this year. Right? All these years you were non-MSME. Suddenly you became MSME. Why? Maybe all the 5 conditions you have satisfied this year. Okay. Can you immediately shift to MSME? No. What you are supposed to do? You have to wait for 2 consecutive years. Under that MSME status you have to maintain it for 2 consecutive years. Then only you can convert it to MSME, and then only you can take advantage of the exemptions that you have. Okay. But if you are a new entity, first time you are born now, and you are classified as MSME for the first time, then are you supposed to maintain 2 years? No. From the first year only you can be MSME and start claiming the exemptions. But if you are an existing company who was a non-MSME in the previous year and you have become MSME now, then for 2 years you have to maintain the status of MSME. Then only you'll be allowed to do the MSME. Then only you'll be able to claim the exemptions. Clear? This one point, keep in mind, important. Then what all we have? An entity that was not an MSME and subsequently, next, when MSME no longer qualifies, relevant standards become applicable. Say suppose ulta happened now. You were an MSME in previous years and now you are becoming non-MSME. Then nothing. From this year, please start applying all the standards. Because earlier you were an MSME, no, you had some exemptions. Okay, now that you have become a non-MSME, now start applying all the standards, and please disclose that from now I am a non-MSME, I am applying all the standards, and they have to disclose. Understood? That is one thing you should know. So yeah, I think that is about your applicability of accounting standard. That much you should know. Okay, let's see if you have any RTP this time. We'll be completely covering May 2026 RTP, okay, in our discussions. No need to worry. See, one RTP question we have. Virat Traders, an unlisted partnership firm. So are we talking about corporate or non-corporate entity? Non-corporate entity. Had a turnover of 249.99 crores. Okay. And borrowings of 25.01 crores during financial year 23-24. It's not a bank, financial institution or insurance company. And also not a subsidiary of any other entity. The firm wishes to avail MSME exemptions for FY 24-25. Is it eligible? What do you think? So it wants to avail the MSME exemptions because MSME has exceptions, no? A3 17 2024 not applicable. What to do? Has it breached any of the following conditions? Andre, breached as in it should satisfy all the 5 conditions. If it has satisfied all the 5 conditions, that Virat guy will become Virat Traders will become an MSME. So first one was unlisted. This guy is an unlisted. Second, it's not a banking, financial or insurance company. Third, revenue is not exceeding 250 crores. So good. Next, borrowings is not exceeding 50 crores because it's 25. Then fifth one, they have already told it's not holding subsidiary of any of the above 4. Henceforth, it's a MSME, and it is eligible to avail exemptions. But one thing you have to keep in mind. The question is Virat Traders a new guy or old guy? Where they have told? Okay, you are telling just because they have a previous year, they might be existing. But how do we know whether he was an MSME or non-MSME before? Oh, next level. The thing is, the question is silent about whether he was an MSME or non-MSME before. See, it's about availing exemption this year. Alva? Last year an exemption avail ಮಾಡಿದ್ದೀನಿ, ಈ year avail ಮಾಡ್ಬೋದಾ ಅನ್ನೋದು ಪ್ರಶ್ನೆ. So the question comes every year. So the question is silent about it. Okay. So what you have to write whenever the question is silent, write both. Assuming that this guy is a new guy. Andre, this is his first year of operations, very initial. First time he is getting classified as a MSME. Then from this year only he can apply the MSME rules. Aita? But if he was a non-MSME in the previous years, then he has to maintain this MSME status for 2 years. Then only he can apply MSME. Okay. Assuming that, see, since they are telling previous year, so last year also he was existing. So last year also if he was an MSME, this year he can become MSME. Either first year of operations adrunu he can become MSME. It is not possible because previous year data ide. If last year if he was a non-MSME, then this year he cannot be a MSME. 2 year he has to maintain the status and then he can become a MSME guy. All of you understood? See, they have also written that this thing, it meets all the 5 criteria. It has been assumed, see they have only assumed, it has been assumed that Virat Traders is not a newly qualifying as an MSME in FY24 because a non-company entity that newly qualifies as an MSME can avail exemptions only after it remains MSME for 2 consecutive years. Okay, all of you? Non-company entity that newly qualifies as a MSME can avail that newly qualifies andre assuming that before it was already there and now newly qualified as a MSME avaga 2 years. Okay, don't get confused, it's a new entity anta. Okay. Okay, so with that whatever is supposed, and also you have to understand one thing which I was supposed to tell in beginning only, which I will tell now. This is revision session, okay, and we have only 4 days, so everything in detail and all we cannot cover. Okay, whichever is important, that we will ensure that will be covered and we will solve questions. Every detailed thing, very small things we cannot go right now. Okay, all of you also, those who are watching, please note that this is revision session. Okay, which will happen only for 4 days or maximum 20-24 hours. So my default assumption here is you already know accounting standards, you have already read it once. Okay, that is the assumption here. Okay, if you are watching it and understanding it for the first time, then this is not the video. Please come to our offline class or please buy our lectures. Okay. So let's come to the first standard, that is accounting standard 2, which talks about inventory, valuation of inventory. Correct? No? Inventory comes in 2 places generally. It comes in your P&L account also, in your changes in inventories. It also comes in your balance sheet. Since inventory is coming in your P&L, it will affect your what? Profit. So that's why valuation of inventory is very important. If you overvalue it, profit will become more. If you undervalue it, profit will become less. So that's why we have a particular standard which deals about accounting standards too. Right? So whatever inventory you will be having, no, whatever inventory you have, the accounting standard it's telling it should be valued at cost or NRV, whichever is lower. Correct? No? What is cost? There are 3 kinds of cost. Now let's understand cost separately and next we'll understand what is NRV. NRV is your net realizable value. When I say cost, first cost of purchase. When will you consider cost of purchase? If you have purchased the inventory. Now inventory can be purchased, inventory can be manufactured also. Alva? So first we'll understand cost of purchase. You will take purchase price, andre whatever you have paid to purchase the goods, that you will add. Then if you have any other taxes and anything, and if it is non-refundable in nature, then you will add that also. Aita? You understand what is non-refundable in nature. Now GST is a refundable tax. Why? Because you get the benefit of input tax credit. That you cannot add. Anything which will not get refund, no, those taxes you can add. And if there is any other expenditure which is directly attributable for acquisition of the inventory and directly related. That also you can add. Sir, till when? From the point you buy the inventory till it becomes ready to sell. Till it comes to your go down. Till then whatever you incur, directly attributable expense, all that should be added. Very clear? So my question is, then if you have any trade discounts, what is trade discounts? Discounts given at the point of purchase. All that, any discounts and other nature can be subtracted from the cost. Now my question is, storage cost will be there, no? Storage cost will be added to the cost of purchase. Storage cost and the cost that you are paying to store the inventory. What should we do? Is it directly attributable? Now again, what did I say? All those costs which are directly attributable until your inventory comes and sits in my godown, until it becomes ready to sell. At the moment you put it in the godown, no, or in your premises, it is already ready to sell. After that, whatever you are spending, no, that is coming, storage will come after that, no. Once it is ready to sell, then you are incurring the storage costs. So that means storage costs cannot be added to the cost of inventory. Only one exception is there. What is that exception? If storage cost is also part of production, then you can add storage cost. For example, very good example from foundation we have been learning is that wine example, correct, no? Remember that wine example. In wine you have to ferment it for 2 years, then you have to store it for 2 years. Now in case of wine, storage cost can be added, but in general cases where storage is not part of production, you cannot add storage costs. Okay? All of you understood? Whenever I say inventory, what all will come in your mind? I don't know what all will come in your mind, but as per standards, many things will come. What all will come? When I say inventory, raw material, FG, WIP, if you have any tools, spare, etc. That also, if it is not classified as PP under AS10, then even tools and spares will be considered as inventory only. If it gets classified as AS10, PP, then here it will not come. All this RM, FG, WIP, then one more, SIT. What is SIT? Stock in trade. So what is stock in trade? If you are a trader, and your business is to buy and sell the goods, not manufacture and sell the goods, then in that case, those stock in trade is there, no, which you have bought for the purpose of selling. That is also inventory for the purpose of your accounting standards too. All of you clear? Then cost of conversion. See, cost of purchase you will use when you are purchasing it. Cost of conversion will use when you are manufacturing it. So what all will you add? If there is any raw materials, please add the cost of raw materials. Then please add any cost relating to direct labor. Of course, now manufacturing and the labor and all will be involved. So DM, direct material, direct labor you will add. Then if there is any overheads, first of all, overheads is what? Overheads is your indirect expenses. Can we add that also? Yes. Now overheads can be divided into two parts. Here, we'll discuss it here only. Overheads can be divided into two parts. One is fixed overheads and one is variable overheads. Okay? Sir, both we are supposed to add, yes, both can be added. But one thing you have to keep in mind while doing this. If it is variable overheads, sir, what is variable? And the overheads cost will increase as and when the units are increasing. Variable overheads you can directly add, no problem. But when it comes to fixed overheads, no, they are telling you have to see one criteria. There is something called as normal capacity and actual capacity. What is this first of all? Normal capacity is the actual, the capacity of the plant, your factory will be there. Now I will tell that my capacity can produce, my factory can produce 2 lakh units. That is normal capacity. In normal conditions, it can produce up to 2 lakh units. Actual capacity is what I have actually produced. Both are two different things. All of you? Now 2 lakh is the capacity. That means, can I produce more than 2 lakhs? No, no, no. I thought, but maybe due to inefficiencies and other reasons, there are chances that I'll end up producing less than 2 lakh units. Okay. Now what they are telling is, if normal capacity, okay, is equal to actual capacity, then there is nothing for you to worry about. Normally you can add fixed overheads also to the cost of inventory. So please understand, whenever we are finding out this cost of inventory, we generally find out cost per unit. So of course, while allocating the fixed overheads also, I will take the total fixed overheads divided by number of units. I will get per unit. That per unit I will allocate it to the cost. That's the idea, alva. So while doing that division, we'll do this division now. Total fixed overheads divided by. While doing this calculation, if normal capacity is equal to actual capacity, I don't care. If normal capacity is greater than actual capacity, and what has happened? Your normal capacity is 2 lakhs, but actually you have produced only 1,50,000. Now what to use? They are telling, in this case, in denominator you are still supposed to use normal capacity only, and then you have to amortize on them. Did you understand? How much have you actually produced? 1,50,000 only. But while doing the division, what you have to use? You have to use normal capacity only. Then one more case. If AC is greater than NC by chance, your actual capacity is more than normal capacity. Then while doing this division, in the denominator you can use actual capacity, and the actual units only you can use. So what did you understand, just to summarize? If your actual capacity is equal to normal capacity or greater than normal capacity, you can use what in the denominator? Actual capacity only. If your actual capacity is lesser than normal capacity, then you have to use normal capacity for doing this, finding out this fixed overheads per unit. This logic is applicable only for fixed, not for variable. Variable, whatever per unit they would have given, directly take it. But if it is fixed, you have to find out per unit. While doing that division, in numerator what to use is the question. The criteria is this. Do you understand the logic behind why we do this? See, generally in all other cases we are using actual capacity only. Only in one case we are using normal capacity. Yavadu? When normal capacity is greater than actual capacity, I will divide it using normal capacity only. The problem was, say suppose my fixed overheads is 5 lakhs. And my normal capacity is how much? Say 10,000. And normally my plant is able to generate 10,000 units. So I'll do 10,000. How much will you get? I will get 50 rupees per unit. This is normal. I have not yet started the production only. My normal capacity is 10,000. Now on that basis I have calculated. Now in reality what happened? Say suppose your capacity, actually you have produced only say 5,000 units. And say suppose you use that 5,000 units only to find out the overhead per unit. Then what will happen? 5 lakh divided by 5,000. This will become 100 per unit. Okay. Now what happened? Same inventory. Inventory into same. In the first case, the plant has utilized the capacity of the plant fully. In the second case, it is underutilized. Correct? 10,000 capacity, they have produced only 5,000. Is it good thing, bad thing? Bad thing. Why? Inefficiency. Alva? But see the valuation. Where you are efficient, your valuation of inventory is coming to 50, and where you are inefficient, your valuation of inventory is coming to 100. And the other things will also come. I am talking about only overheads. You are understanding? Is that correct? And we know that if closing stock valuation goes up, profit also goes up. And so what your P&L is doing now is, you are in an inefficient situation, but your profits are more. You are telling, I am inefficient and I am making more profit. Is that a fair presentation? No. That's why what they are doing, whenever your actual capacity is lesser than normal capacity, they want you to divide it with normal capacity only. This nonsense should not happen. Okay? All of you, I hope you understood the point. If you have any fixed production overheads, we will consider that. If you have variable production overheads, that also we will add. All the other production indirect expenses. Then any other costs which are directly attributable to bring the inventories to the location. That also we will add. Then we have something about joint products and byproduct. So what is joint product and byproduct? Very simple, we have discussed in our class. No? Joint product andre when you are already in the production process. Okay. Say suppose in same one production process you are able to produce two products. This becomes joint production. When will you call it joint product or byproduct? Very simple, intention. If you have intention to produce another, say suppose you are doing a production process for A. There is one more product that is coming, which is B. Now A, B, we are jointly producing. If you have the intention to produce both A and B, then it becomes joint product. If you don't have the intention to produce product B, it becomes byproduct. And you are doing production of A. B is just coming like that and you are unable to stop it. That becomes byproduct. Intention iddu innond product na produce madidre it becomes joint product. All of you clear? Okay. Now, what to do about it? How to value joint products? You understand now? Problem will come when you are valuing joint products because you have same production process, same production cost, everything. But how will you bifurcate it to two products? There is a problem we have, no? So we should know. So what we'll do is, for joint products, I think costing and all is over, no? For you. You know what we'll do, correct? What will you do in costing? Same thing we'll do it here also. So what, see for both products A and B, you would have incurred same joint costs, correct? Now how to bifurcate this joint cost among A and B? In which ratio? Say suppose I have incurred 1 lakh rupees till now. It is for both A and B. I have to bifurcate, no, for the purpose of valuation of inventory. How to do it? In the ratio of, exactly, in the ratio of sale proceeds. So I'll take the sale value of A, I'll take the sale value of B. In that ratio, I will divide this 1 lakh rupees. Are we clear? Sir, sale value at what stage? After the production, at the separation, anything. Did you understand when I say separation or end? Separation andre till now joint production was happening. At one point they will separate. And from then further processing will happen. At one point they will get sold, alva. Sir, which sales value to take? Either take the separation stage sale value or you take the end stage last when you are transferring it to your customer. Both are allowed. All of you clear? Okay, sir, we have done with joint. What we'll do for byproducts? See, byproducts are generally immaterial. Best example of byproduct is if you are manufacturing paneer, okay, then buttermilk is what? It's a byproduct. You cannot avoid the production of buttermilk. What? While manufacturing paneer, do you have the intention to manufacture buttermilk also? No, it's a byproduct. You cannot avoid it. And generally byproducts are immaterial in nature. Since they are immaterial in nature, we will value them at NRV. NRV andrena net realizable value. So for now you understand at whatever price that buttermilk will realize, no? That means if I sell it, that is NRV. Okay, for now you understand. Detailedly we'll understand what is NRV. So byproducts are valued at NRV. Joint products, what you will do? Allocate the joint cost in the ratio of sale proceeds at separation stage or at final stage. Okay. NRV is what? We'll try to understand NRV now only. NRV is generally it's estimated selling price minus further costs of processing, then minus will also subtract this also, scrap value. So your NRV is nothing but this only. It's estimated selling price minus estimated further cost of processing minus selling expenses. What is selling expenses? Selling expenses are those expenses which you incur to sell the product. And without incurring that, you will be unable to sell the product. Aita, these are called selling expenses. Now I have to sell my mic. Aita, but my factory is somewhere in very far. It's somewhere near Bannerghatta. If I just produce and if I simply sit, will the product get sold? No. I have to give money to distributors. I have to go everywhere and distribute my product. For that I will incur some money. That is called selling expenses. Okay, without selling expenses, I'll be unable to sell it. So if 5 rupees is the selling price that my product will fetch, and 1 rupees is the selling expenses, NRV will be 4. You're understanding? Huh? They have given one more line, further cost of processing. Sir, why further cost of processing you are selling? This will come only in the context of WIP. Generally FG and anything other than WIP, no, it's completely processed, no. Why will cost of processing will come generally? It will not come. Only WIP is partly processed. See, anganta FG gidan apply manangilva andrella, you have to apply. You're understanding, no, the context is, it's generally applicable for WIP. Okay, because WIP are partly processed. Okay. Now imagine, for you to produce a complete inventory, one finished goods, it will take 100 rupees. And there is a work in progress. What is work in progress? Halfly baked, half done. So one work in progress is there and you have spent only 50. And still 50 you are yet to incur. But the NRV of this product is say coming to 200. Is it fair to do this comparison? Because we know for valuation we do cost or NRV, whichever is lower. Is it fair to do the comparison? Why not? Because the inventory is partly done, whereas this NRV 200 is for full 100% product. NRV is for 100%, but cost is for 50%. Is that a fair comparison? No. I should also take correct NRV, no? Now what is my estimated cost of further processing? Still I have to spend 50. So I'll subtract that 50. And if I have any other selling expense, I'll subtract that also. How much I will get? 140. This NRV I'll compare it with 50. You're understanding? Comparing 50 and 200 is not correct because 200 is NRV for full product, whereas 50 is the WIP product. That's why we also further subtract further processing costs. Did you understand, all of you? That is NRV. So we've understood joint product by products also. Then what to understand? Which are the costs that you should not consider and which you should not add? Pakka. You are not supposed to add at all. Yavadu? First one, abnormal loss. If you have any kinds of abnormal loss, you cannot add it to the cost, which means normal loss can be added. Abnormal loss cannot be a part of cost of inventory. Next, storage cost. We already know no, about storage cost. Can you add it to the cost of the asset? No. Unless, when we can add? Unless the production process requires such storage. Example here, wine. Next, admin overheads. Admin overheads, and generally, our entity we have lots of production units. Admin and the people who sits there, like your admin people, those who sits in our reception, no, they are like admin people. They don't pertain to any of our courses. Are they related to CA Inter? No. Do they work for CMA Inter? Do they work for ACCA? No. They are there generally, no. Whoever walks in, they will talk to everyone. They become general admin overheads. General and admin overheads cannot be added. But if I hire a reception only for CA Inter, can we add them? Yes. That can be added. But those people who do it for everyone, those indirect expenses, we cannot add. Are we clear? Selling and distribution cost is incurred at the selling stage. That will not be considered for the valuation of inventory. All of you clear? So what's all 4 things? Very important. It is asked. Abnormal loss you will not add, storage cost you will not add, general and admin overheads. Any other indirect expenses which is incurred commonly for all the processes, that you cannot add. Then selling and distribution we cannot add. Okay. That is okay. Common classification of inventories. So this is their disclosure requirement. You know, standards will be divided to 4 parts. All the standards. Another? Remember, recognition, measurement, subsequent measurement, presentation and disclosure. So we are coming to the last part, which is disclosure. Recognition deals with when you should recognize an asset or expense. Asset or liability or expense, etc. Recognition. Measurement andre at what value to recognize. Subsequent measurement andre at every balance sheet date, at what value should I show this particular thing. And presentation and disclosure is what all other additional items I'm supposed to disclose with respect to these transactions. These 4 parts will be there. Now we are discussing about disclosure. What all you have to disclose? Out of whatever inventory you have, total inventory, no, you have to classify it. Sir, classify it as what? As this. Raw material, work in progress, FG, stock in trade, stores, spares, loose tools, others. So you have to classify it and show their values separately. That is one thing you have to disclose. And I already told this part, no, stores and spares, loose tools. These 2 things are there, no. If they are classified as PP and AS10, then it will not come as inventory here. If they are not PP there, then there will be inventory here. Are we clear? Dana? Then the financial statement should disclose the cost formula used. Sir, cost formula, na? You know, no. For valuing inventory, we use FIFO, weighted average method, etc. These are considered as cost formulas, which you would have done in your CA foundation only, no? Then we have some other methods also. You know, retail inventory method, FIFO, weighted average. LIFO is not allowed. Standard cost method. These are stone methods. Why? To value inventories. Sir, which one to use? You can use whichever you want. It's an accounting policy choice. Okay. You have to tell them out of these 4 which I am using for valuation of inventory. Okay. Next. The total carrying amount of the inventory. That we already discussed, no? This part. So with that, we are done with accounting standard 2. We'll solve some questions from RTP, then we'll go to the next one. Some interesting questions we have for ES2, I guess. It's from RTP June 2026. Very simple question, but still I've added. Okay. A private limited company manufacturing fancy terry towels, so they are into manufacturing of towels, had valued its closing inventory of finished goods at realizable value. Oh, next level. They are directly valuing their inventories at NRV. What was our criteria as per ES2? Cost or NRV, whichever is lower. They are directly valuing it at NRV. Nonsense. Inclusive of profit and export cash incentives. And this export cash incentive means export is good to economy, no? So whenever you do export, government will give you some benefits, duty drawbacks, antarella heltivi. They have included that duty drawbacks also and they have valued the inventory. NRV and selling price alva, whatever money you are getting with respect to that inventory. That profit, whatever drawback, export benefits you are getting, that also they have included in the selling price. And using that NRV, they have valued the inventory. Is that correct? First of all. Correct or wrong? By definition, it's wrong. No. What have we learned? Inventory should be valued at cost or NRV, whichever is lower. However, they have considered export cash incentives also. Firm contracts had been received and goods were packed for export, but the ownership in these goods had not been transferred. Inno transfer agila. Okay, but firm contracts are there. Firm contracts andre we have already signed that I will pakka sell it. Anta. Now comment on the valuation of the inventories by the company. Is that correct or wrong? They have firm contracts. Andre pakka they will sell it in the next year. But right now it is not yet sold and the risk and reward is not yet transferred. What should we do? So first of all, see, whenever this export incentive, all these items will come, suddenly we will get digressed. We get nothing. Whatever you know, you apply it still. What did you learn? First of all, inventory should be valued at cost or NRV, but they are valuing it at NRV. First thing, whatever they are doing is wrong. Then your export incentives, all this, whatever you are getting, it's revenue. It comes to the ambit of AS9. So follow AS9 for that. All of you understood? And here, is the risk and reward transferred? No. You can recognize the revenue only when risk and reward is transferred in the goods. That means you have not yet sold. If it is not yet sold, that means it should still come in closing inventory, and closing inventory should be valued at cost or NRV, whichever is lesser. But these people are valuing it at NRV, which is wrong. Anta, you have to write. Understood? Directly question number 3. Okay. The following information is available for Zing Limited. It's a question from RTP September 25. Very important question. There are chances that they might ask this. The following information is available for Zinc Limited for year 24-25. Hey, one more thing we did not learn only about raw material, about AS2. Where is it? Over here. This one point we have not learned. This raw material is there now. Is raw material also an inventory? Correct. How to value it? Same logic only. Cost or NRV, whichever is lower, but one additional condition is there. What is one additional condition? You will value raw material at cost. You will value raw material at cost if the finished goods are sold at or above cost, otherwise at replacement cost. So you understood? This raw material iruttalla, they are telling, see, raw material is used for producing finished goods. Now, to see the raw material valuation, you have to see the finished goods first. If the finished goods are getting sold at a price higher than their cost, if the FG is being sold at a price higher than their cost, then raw material can be valued at cost only. Or else you have to value it at NRV, assuming NRV is lesser. Did you understand? 100% you did not understand. My question is, I have a raw material A. Okay, I have raw material A. The cost of the raw material is 100. And the NRV of the raw material is, say, 110. You will value this raw material at how much? Cost or NRV, whichever is lower. That means you will value it at cost. Normal. Now, small change I will do. NRV is 90. Now you will value it at 90, sir, because NRV is 90. Directly you cannot decide like this. They have given one more additional condition. Before coming to this conclusion in this situation, see FG. Is FG sold above cost? See, and they say suppose the cost of FG is 200, whereas FG is getting sold for 250. If this is the case, if the FG is getting sold at a price higher than its cost, then even though NRV is 90, you can value this raw material at 100. Did you understand that? So 90, no, that is the exception. Do you understand the logic behind this? See, why are we doing this cost or NRV, whichever is lower? It's a conservative measure, alva. When I know the selling price, the estimated selling price of the raw material itself is 90. Then sell madre namak barad 90 rupees. How come you show it at 100? I know your cost is 100, but is that fair to show it at 100? No, it will realize only 90 rupees. Anta AS2F prescribed cost or NRV, whichever is lower anta. But RM, will you sell it to people? No, RM will be used for production. I don't care whether the NRV has become 90. I will use it for production, and my produced good, which is finished good, that is fetching a price more than its cost. Then why do I value raw material at NRV? Did you understand the point? And NRV martane illa andmele 90 rupees gainake value madli. I will use it for production. A produced good correct ಆಗಿ fetch ಮಾಡ್ತಿದ್ಯಾ profit na? Yes. Cost 200 to selling price 250. So there it is okay only, no? Why should I simply value it at 90? Doesn't make sense. That's why you have to see this criteria first. If the FG is getting sold at a price higher than cost, then you can value raw material also at cost, even if NRV is lower than cost. Did you understand the point? All of you. Now come to this. So the following information is available for Zinc Limited 24-25. See, raw material, we have a closing stock of 700 units, and the cost of the raw material is 35 rupees per unit. Okay. Replacement cost. This we did not understand. We did not discuss the other part only. If the finished goods later, if that is getting sold at a price lesser than cost, then what to do? Then you have to value raw material at cost alla. You have to value it at replacement cost. Replacement cost antandre, to simply understand it, it is the fair value of the raw material. Today if you have to buy the raw material, how much you have to pay? That is replacement cost. Ivat nanu aa raw material buy madbekandre how much I have to pay? That becomes replacement cost. Which is in our case is 90 only, no? Net realizable value is almost replacement cost only. Artha agtidya? So what did you understand? RM, if FG is getting sold at a price higher than cost, RM can be valued at cost. If not, then RM should be valued at replacement cost only. All of you clear? So coming here. So the cost price of this raw material is 35 per unit, whereas the replacement cost is 20 per unit. You will value it at what? Sir, cost or NRV? I will value it at 20 rupees only. Directly you cannot come to that decision. We have to see the FG first. So we'll see the FG. We have two kinds of finished product, FP1 and FP2. FP1 we have produced 3000 units. FP2 we have produced 1600. Closing stock is 500 and 300. See, 3000 is what is produced during the year. 500 is what is remaining closing stock. What is the RM consumed? 3,20,000. And direct labor is 1,60,000. Direct expenses is 78,000. Fixed overhead for the year is 95,000. Okay. Can we add all this? Yes, no. We can add, no problem. But here is the question, which includes go down rent of 15,000. Should we add it? Not add it. This 95 is including go down rent of 15. Should we add it? Not add it. Not add it. Why? Storage. Correct? No. Storage will not be added to the cost of production. So this 15,000 I cannot take. Go down is used for storing finished products. Besides two main products, 1000 units of a byproduct is also emerged. See, FP1, FP2 are the main products. There is also one joint product. So one more thing, I don't know whether there is also one byproduct. What will we do about byproduct? We will value it at NRV. One more thing you should know, which I don't know whether we discussed. If you, whatever NRV you get, no, by selling byproducts or whatever that NRV which you got, that will be subtracted from the joint cost of production. Did you understand this point? Say suppose there is two products, A and B. I am spending joint costs for the production of these two products, A and B. Then whatever NRV I am valuing it at, no, byproducts in the, ultimately, what will I do ultimately with the byproducts? I will sell it off at NRV. Whatever money you get now from that NRV, what will you do? You can subtract it from the joint cost of production. Did you understand this point? Why are you subtracting it from cost of production? Byproduct was not intentional, no? But still it is produced. Now you have got some benefit. Why simply show it as an income somewhere? The better presentation is reduce the cost of production, no? That's the better production. So whatever money you realize by selling byproduct will be reduced from what? Cost of production. Are we clear here? So besides two main products, 1000 units of a byproduct is also emerged. In the production process, it was sold at rupees 12 per unit after incurring an expense of 2,500. What did they tell? They have sold the byproducts for 12 rupees per unit and some cost they have incurred. How much it is that? 2,500. Rupees 4,800 was realized from the sale of scrap. During the production of inventory, some scrap you have realized that you have sold. What to treat it as? Scrap. Separate income, or is it better presentation to reduce it from the cost? It is better presentation to reduce it from the cost. So whatever money you get from scrap, that will be reduced from the cost of production. Byproducts also, whatever money you get by selling byproducts, that also will be reduced from cost of production instead of showing it as a separate income. The average market price of FP1 is 160 and FP2 is 100. Calculate the value of closing stock of Zinc Limited as per accounting standard 2. Okay, so we'll first start. RM we'll do it later. First we'll focus on our main products. Your FP1 and FP2. So what all cost of production I have incurred? Tell me, in the question only it is there. I have incurred 3,20,000, 1,60,000. I have incurred 78. I have incurred 95. No. 95 minus 15. I have incurred 80. Okay, I will take only that much. See, 3,20,000, 1,60,000, 78 plus 95 minus 15. I am taking 80. So total comes to 6,38,000. Then two things I will subtract. What are the two things? Value that I have got from scrap and value that I have got from byproducts. What is the value I have got from byproducts? There were 1000 units 1000 byproduct. I have sold it for 12 rupees per unit. I have realized. Is 12,000 the NRV? No. What is NRV? Selling price minus processing cost. We have further incurred 2,500 processing cost. So minus 2,500. And the remaining is? So 9,500 is what I have got by selling the byproducts. This, what should I do? Subtract it from the cost of production. So I have subtracted 9,500. Further, how much I have realized from scrap? 4,800. That also I will subtract from cost of production. So ultimately, what is my joint cost of production? It's 6,23,700. All of you clear till here? Now my question is, I have two products, sir, but one cost, that is 6,23,700. How to divide? In the ratio, we learned, no, they are joint products. We have to divide the joint cost in the ratio of sales price. So what is the sale price of the product? In the end, they have given 160 is the sale price of FP1 and 100 is the sale price of FP2. So in 160 is to 100 will divide, Hey, why not? Sale price now. You have to take the units, or else quantum, what? Both are equally produced. No. The quantum also should be taken for consideration. How much you have produced? FP1 produced is 3,000. FP2 produced is 1,600. So you have to divide the joint cost in which ratio? 160 into 160 into 3,000 and 100 into 300. 160 into 3,000 and 100 into 300. How much you'll get? So 4,80,000 and 1,60,000. In this ratio, you have to divide the joint cost, which comes to 3:1. Okay. So 6,23,700 should be divided in 3:1 ratio. Okay. So if you divide, how much will you get? 4,67,775 and 1,55,925. But we need per unit, no, for our calculation. How to convert it into per unit? This you have to divide it by how much? How much FP1 did you produce? 3,000. So this should be divided by 3,000 and this should be divided by 1,600. So how much you'll get? So it's 155.93 and 97.45. We found out cost of production per unit. All of you clear? You want me to solve, or is it okay if I discuss like this? It's okay, no? In the interest of time. Now I found out the cost. Now I will go for valuation of FG. Cost or NRV, whichever is lower. So come here. What is my cost per unit for FP1? It's 155.93. What is NRV? NRV we already know, no. Sale price is nothing but NRV. So 155.93 is the cost and 160 is the sales price. I will value it at what? FG. Cost or NRV, whichever is lower. So this I will value it at 155.93. FP2, cost is 97.45 and sales is 100. I will value it at 97.45 because that is lower. So FP1, FP2, I am done. How did I get NRV? That selling price itself is NRP, no? 160 and 100. Now I have to go for RM. RM mu namatra closing stock ide ಎಷ್ಟು? We have 700 units. Will I value it at 35? No. I have to see. What was the condition? Is the FG getting sold at a price higher than cost? Was the question. What do you think? By looking at this statement, your sales price is greater than your cost in both the cases. That means it is okay. I can value my RM at cost only. So cost was 35. Sir, but replacement is 20. No, it's okay. If FG is getting sold at a price higher than cost, then even though if the replacement cost is lower, you can value RM at cost only. I will value it at 35. 35 into how many units we have? 700. So 35 into 700, 24,500. That is the valuation of RM. All of you understood? What is valuation of FP1? You will take 155.93 into how many units we have? Yeah, produced ado. Closing stock eshtiದೆ? 500. So value of closing stock is 155.93 into 500. FP2
97.45 into how many units we have in closing stock? It is 300. Then RM is 35 into 700. This is your total closing stock, FP1, FP2 and RM. Okay, all of you got it? Any doubts? Let's go to the next question. This is also an interesting question from some RTP. Okay. SR Limited is a manufacturing company and engaged in the production of finished goods for which raw material RP is required. The company provides following information for the year ended 31st March. See, MP is what? Finished goods, and RP is raw material. See, they have given units and value. How much raw material you have purchased? 40,000. Labor 3,23,200, fixed overheads 3,15,000. Sales 11,20,000, and you have sold how many units? 40,200. Of course, what you would have sold? Finished goods, no? Will you sell raw material? No, that is used for production. We have closing inventory of both raw material and finished goods. 4,200 units finished goods, 4,000 units raw material. The expected production for the year was 45,000 units due to fall in market demand. The sales price of the MP was 22 per unit, and the replacement cost of the raw material was 11.5 on closing day. You are required to calculate the value of closing stock of MP and RP as on 31st March 2025. So we have two things we have to value. One is MP and one is RP. So first, let's try to do the valuation of finished goods. Okay, what all will I take? So I have purchased, first, since we have manufactured, what all will come in cost? Raw material, labor, overheads. So raw material, how much to take? Tell me. Shall I take 4,80,000? Why not? Correct. No, always while finding out cost of production, this is raw material is what is purchased. Whatever you have purchased, you have used for cost of production. No. So you have to take whatever is used in the current year for the purpose of production. So how much I have used? How to calculate? How to calculate RM consumed? It's opening stock plus purchase of RM minus closing stock. So opening stock is 2 of RM. It is A, that is units. Directly will come to value, no? So 52,000. 52,800 plus how much you have purchased? Minus what is the closing stock? Closing stock, actually we have closing stock of 4,000. For that I need valuation, no? What we'll do is, how much we have purchased, no? How much is 1 unit of raw material? Just check. 4,80,000 divided by 40,000. And the one comes to, it comes to 12 rupees. Okay, so that is 12. Better we'll do that only. So we'll take it in units only and then multiply the units by 12, which should be okay. So what is the units opening stock? 4,000 plus what we have produced? It is 40,000 is what we have purchased, sorry, not produced, minus how much is remaining? That means how much you have consumed during there. 44 minus 4. We have exactly 40,000. It's again, it is coincidence, okay? 40,400. Oh, okay, opening is 4,000. Okay, then that is FG. Okay. So how much is this? 40,400. So it means how much RM we have consumed? 40,400. And each RM is how much? We have got, no, it is coming to 12 rupees. Even if you see opening stock, it is coming to 12 rupees valuation only. See here, 52,800 divided by 4,400 madadru, no? How much you are getting? 12 only, yeah. So that means per raw material is 12. So if I have consumed 40,400 and per raw material unit is 12, so total cost of material is 4,84,800. Then I will add labor. How much is labor? 3,23,200 only, directly given in the question. Then overheads fixed. So whenever fixed overheads come, what should come in your mind? Whatever we discussed, no, actual capacity, normal capacity. Any idea matter? See, 45,000 units is your what? Andre, can I call that 45,000 as normal capacity? Yes. But what is that you have actually produced in the year? Can we find out? How? By doing the same thing. How can I find out actual production? Opening stock of FG plus production of FG minus closing stock. So how much you have opening FG? Opening FG is coming to 4,000. Then production they have not given. That is what we have to find out. But we have sales and we have closing stock which is 42,400. So can you find out the production? So can I say that opening stock plus production of production minus closing stock is equal to what? Is nothing but sale units. Correct, alva? So opening stock unit is 4,000 plus how much I have produced we don't know. How much closing stock is remaining? It's 4,000. 4,200. How much you have sold during the year? It's 40,200. Correct? That means how much is the production? Minus 200. So production is 40,400. No? All of you understood how we got this? Aita simple alva. Nama hatra opening eshtiದೆ plus how much we have produced. Ivat closing eshtiದೆ. The remaining is what? It is what is sold, no? All of you. So we know sold, we know closing, we know opening, but we didn't know produced. So produced is 40,400. Now tell me, actual capacity is lesser or more? Actual unit. Is it less or more? Less, no. My normal capacity is 45,000, whereas my actual production is. Now tell me, while dividing this overheads per unit, can I use should I use normal? Should I use actual? I should use normal. So keep that in mind. So I'll take 3,15,000 divided by normal capacity, which is 45,000. You'll get per unit. That you multiply with the production. How much you have produced during the year? Into 40,400. Understood? Because that is what is actually produced. You cannot just directly allocate it on the basis of actual capacity. Now what you would have normally done? 3,15,000 divided by 40,400 you would have done. Correct, alva? That you are not supposed to do. You still divide it by normal capacity only, and then you will allocate it to cost of production. Are we clear? So that is 282, and the total cost of production comes to 10,90,800. Okay. But I need per unit, no? Cost of production. So how much we have produced during the year? So how much is the total cost of production? It's 10,90,800. How much we have produced during the year? 40,400. That means per unit cost of production is 27. This is the cost per unit that I will take. Because this is cost of production for how many units? For whatever you have produced during the year. How much you have produced during the year? We have already calculated. We have produced 4,400 units. Are we clear? So cost is 27. NRV? How much is NRV? The sales price of the MP has become 22. So cost per unit is 27. NRV is 22. You'll value at what? Cost or NRV, whichever is lower. You'll value it at 22. So 22 into, how much is the closing stock? It's 4,200. So 22 into 4,200. It comes to 92,400. This is how you will value your FG. Are we done now? We still have RM valuation now. How much is RM? See, RM's replacement cost is 11.5, whereas cost is, we already know, cost is 12. And replacement cost is 11.5. Should I value it at 12 or 11.5? How? First you have to see that. Is the goods are being sold at higher than cost or lower than cost? Directly you understand here, no? Your cost is 27 but selling price is only 22, lower than cost. That means RM should be valued at replacement cost only. Replacement cost is 11.5. So what is the closing stock of raw material? 4,000. So I have to value it at 4,000 into 11.5. This comes to how much? 46,000. Okay. Did you understand, guys? So with that we are done with AS2. Let's go to the next standard only. Which is the next standard? Let's go to AS10. Okay, let's come to property, plant and equipment. Okay, again very important and simple standard. So first, let's understand the scope of the standard. PP is what? First of all, property, plant and equipment. Let's understand what is PPE first. PPE. PPE. See, PPE are tangible items. Tangible andre, which can be, that one thing we know very well. No? Tangible, which can be touched, felt or seen. Are tangible items that are used in the production or supply of goods or services. And they, one of your thing will be either production of goods or supply of services. You are using this asset for production of goods or supply of services, it's a PPE. You are using it for providing rental to others, then it's a PPE. You are using it for admin purpose, this thing, furniture. It's a tangible asset, but I am using it for, this I am using for teaching only. That table which is there in reception, that I am using it for admin. Still is it called PPE? Yeah? Yes. And is it used for more than 12 months, then it is classified to be a PPE. Now one more question you have to ask. Sir, for rental to others, will it actually come to PPE? Yeah? See, there is a small gap there. If you remember, in accounting standard 13, investment properties will come there. Remember, any property, land and building held for investments will come under investment property as per AS 13. Then how come rental to others is here? Don't forget, AS 13 is covering only land and building. You can also rent furniture, you can rent plant and machinery, you can rent other things. The rental of other things will still be classified as PPE only. Did you understand? If you rent out building, if you rent out land for extra income, will it come under AS 10? No, it will go where? It will go to AS 13 investment properties. If you rent out plant and machinery, if you rent out other items, other tangible assets, it will come under AS 10 PPE only. All of you clear? Your intangible items, why only tangible items is covered here? Because intangible we have a separate standard, AS 26. So AS 10, okay. So we understood what is PPE. See, biological assets related to agricultural activity, to this item AS 10 is not applicable. So very simply I will tell, what is biological asset? Anything that you are getting as a result of biological activity. For example, agriculture, whatever you are growing. For example, rearing of animals, correct? If you are rearing sheep and you are getting sheep as a result. All these are what? Biological activity, correct? Those things are not considered as PPE for the purpose of AS 10. Now you have a cow. What? PPE, yeah? Biological assets are not covered. All of you? Then, but they have told one thing. For example, you have a mango tree. Mango tree, but I'll come back there later. You have some crops. You are growing jowar crops or rice crops, etc. All these are biological activity. These are biological assets. Can those be treated as PPE as per AS 10? No, no. All these are biological assets, which are as a result of a biological transformation. At a biological transformation, you put a seed that will become a plant. No, that is called biological transformation. If it is a result of that, it will not be considered as AS 10. But even in that biological assets, one thing there is an exception, that is bearer plants. Bearer plants will still be treated as PP. So what is bearer plants? You have three conditions for it to be classified as bearer plants. Right? What is bearer plant? It's there. Here. Here we have bearer plant. Okay. So there are three conditions. First one is, first of all, you should be using this plant. When I say plant, it's an actual plant only. That means, is animal covered under bearer plant definition? No, no, no. I'm only talking about plant. Some people, they'll directly apply these three conditions and they forget that they have used plant here. So when I say bearer plant, it is literally plant a tree, not any animals will not come. So animals is completely excluded. First of all, it should be used in the production or supply of agricultural produce only. Andre, name a plant in the some kind of agricultural produce you should get. All three are and conditions. Okay. It is expected to bear produce for a period of more than 12 months. Andre, whatever you are getting as agricultural produce. The best example for bearer plant is your coconut tree. Is it used for producing agricultural produce? Yes. Will that be held for more than 12 months? Of course, coconut trees will come for more than 12 months. And third condition is, has a remote likelihood of being sold as an agricultural produce itself. If you are having a coconut tree, what are the chances of selling that coconut tree only as produce? Less or more? Less only, no, because coconut tree is of no use. The only use from coconut tree is coconuts. Okay, now they are telling, okay, it is producing agricultural produce. It is held for more than 12 months. But if the chances of that plant itself getting sold as a produce is more, then I will not classify it as a bearer plant. Did you understand? Now say suppose there is one tree. I don't know what tree, okay, biologically, but I'll give you an example. There is one tree in my imagination. That tree is producing fruits. So is it producing agricultural produce? Yes. Is it producing for more than 12 months? Yes. But this wood is there now of this tree. That is also very valuable. Some sandalwood. Assume sandalwood is giving fruit. Assume sandalwood is giving fruit. Now sandalwood also has, there are chances of selling sandalwood also, no? There are chances of selling fruits also. There are chances of selling the sandalwood itself also. Now this tree cannot be classified as a bearer plant. Tree itself. So now I cannot call it as PP. Sir, ultimately, in the end, all the trees will be cut, no sir. Once the life is over, once the life is over, if you cut it, it's okay. That I am not telling. Okay, in the life only, if you think, more than fruit, sandalwood is only greater. And tell you, if the chances of cutting the tree itself is more, and then it cannot be classified as a bearer plant. So that's the third point. Has a remote andre, very less likelihood of being sold as an agricultural produce. We are talking about the tree itself. All of you understood? Now mango tree, is that a bearer plant? Is it? Of course, yes. Apple tree, of course, it's a bearer plant. Ido, tea bush, tea bushes. They'll pluck. Bearer plant, not bearer plant. It is bearer plant. Why? So in what happens in tea also, no? We'll just pluck the leaves every now and then. We'll not cut the plant itself. So tea bushes are also bearer plants only. This jowar, rice crops. Why not? That also is giving rice, no? Agricultural produce. Two things, less than 12 months, and that itself will be cut off. You only pluck rice and let it be there only. No. So only those things will be considered as bearer plant. Did you understand? For those bearer plants, AS10 is applicable. For anything, any biological assets other than bearer plants, AS10 is not applicable. Now tell me cow. Cow is also a biological asset because it's a result of biological transformation. Correct? No? Is that a bearer plant? That is also giving produce, no? Milk. It is giving calf and all. Why not? Because when I said bearer plant, very clearly they have told plant. Now you cannot say, cow itself will, it will give more than 12 months. It will not be sold as an agricultural product. That is a different thing. Understanding? It's only applicable for plant. So cows, horse and all is not, though they are biological assets, but are they bearer plants? No. Are we clear? Biological assets are anything out of biological transformation. It can be plant or animal. But bearer plant, I am telling it's only plant. Are you clear? Then So let's come to recognition criteria. When will you recognize PP as an asset or liability? A PP is an asset. When will you recognize? It should satisfy these two criteria. There should be probable future economic benefits from the asset. And second, the cost must be estimated reliably. So probable future economic benefits, when you classify something as an asset, there should be some economic benefits which should be for more than 1 year. Then only you will call it as asset. Second condition is the cost of this asset you should be able to estimate reliably. Now this TV, can you estimate the cost of this TV easily? Aram se go to Flipkart and search this model, you will get. This mic, easy. This fan, easy. Varshith's goodwill. Is it easy to measure the cost? No. So that means that goodwill I cannot recognize as an asset. The same conditions will go for asset also, not only for PP. Same two conditions for asset also. So that cost I cannot measure. Anything which you cannot measure the cost only reliably, no. They are telling don't record it only as an asset because there are chances that you are window dressing your balance sheet. Goodwill yaar kelora? Nani 2000 crores andre. Will you come and ask her? I will say Varshith's goodwill 2000 crores. Can anyone prove me wrong? Now if you are an auditor, if I show this TV as 1000 crores, you'll immediately come to me, you'll show, hey, see the Flipkart, it is showing at 20,000 rupees. You can show me and you can negate. When I say Varshith's goodwill is 1000 crores, can you negate me? No, that's why people will do that. That's why they are telling if you cannot estimate the cost reliably, then don't recognize it as a asset only. Okay, these two conditions should be satisfied for it to be a PP. This spare parts, standby equipment, servicing equipment. Standby equipment gotala. Standby, which will be in standby. For example, your fire extinguishers. Red color. That is a standby equipment. But it's working every day. No, it is just kept. The fact that it is kept itself is it is working. Okay. So standby equipment, any equipment which you are using for servicing the main plant and machinery, all this. Is it AS10? If it satisfies the definition of PP, it will come under AS10. If it is not classifying AS10, it will go to AS2 as inventories. We learnt. Correct? Now there are two chances. No, PP can be purchased from someone or PP can be self-constructed. That is the cost. Whatever you incur for purchasing a PP or to construct a PP, all that will be capitalized as an asset in your balance sheet. Okay, it will become asset. It will go to balance sheet. Now the question is, what all should I add? Here we have, no, when I say cost, what all cost you can add? It's very similar to your AS2 only. Very similar. Purchase price, whatever you have paid to purchase price, that you can add. Any directly attributable cost, till when? All the directly attributable cost of the asset, till the asset becomes ready to use. The moment it is ready, you are done. Ready to as well, ready to use as well, whatever you incur, that we cannot capitalize. For example, inauguration cost, can I capitalize it? No, because by the time inauguration happens, the asset is already ready to use. I cannot capitalize it. Correct? Then we have decommissioning, restoration and similar liabilities. What is this? Decommissioning, restoration. Maybe you took the asset. At the end of the useful life, you know there is one obligation. What is that obligation? Hey, now you have taken this asset, no? Okay. At the end of the term, there is some obligation I have. Just to take an example is, I have bought a pollution, an equipment which generates a lots of pollution. Now there is one legislation which says that whenever if you are purchasing this machinery, at the end of the useful life, you have to plant some 50 trees. It's an obligation. Once the asset is reached the useful life. Generally, whenever we take a land on lease or something, we will construct our own building. Then the landowner would have told, hey, at the end of the lease or useful life, you have to give the land back to me in the same manner. Okay, now right now you have constructed building. No, while giving it back, it should be khali. In the manner how I had given it to you. So of course, if you have to demolish the building at the end of the useful life, but it's free, directly. Destroying is easy, free, no, demolition also involves cost. Now, while purchasing the asset only, you know that at the end of useful life, you have some obligation. So is that a related cost? Of course, yes, no. Without incurring that cost, no way you can purchase the asset. What they are telling is those costs also you can add it to the cost of the asset. But sir, that we are incurring after useful life of the asset. Now say if the useful life of the asset is 20 years, I am incurring this when? After 20. When I add it now only, yes. At what value? At present value of the future cash flow. Because that is happening when? At the end of 20 years. But I am adding it to the cost when? Today only, no? So I have to bring it to the present value, then I have to add it to the cost of the asset. Did you understand? All of you? So please note this, directly attributable costs till the asset becomes ready to use. Aita? So you only tell me. It excludes what all? Cost of opening a new facility, inauguration. Will you add it to the cost of the asset? No. Why? By that time asset is already ready to use. Cost of introducing a new product or service, I don't care. By that time our asset is ready to use. We cannot add it to the cost of the asset. Cost of conducting business in a new location with a new class of customers. Adella beda. It's all nonsense that you are doing. Our asset was already ready to use. You cannot add it. Any other admin and general overhead? We learned no in AS2. The common people. Common people I cannot add. If I have an admin specifically for this asset, asset which I am building, for that construction only if I have a specific admin group, that I can add. But general admin, I cannot add. Are we clear here? Okay. Then you have something called as cost of relocation. Many times they are asked this question. We are constructing a building in area A. Okay. Whenever construction was happening area A, whoever employees was there in area A, we shifted them to area B. So this cost, should we capitalize it? And many times they have asked. Please note down that cost of relocation will never be added to the cost of the asset because that will not give any economic benefits for us. Relocation galala. Only directly attributable costs, those can be added. Relocation, and since construction is happening here, I am relocating everyone to there. For there I am paying rent. Ivella nonsense. All that cannot be added to the cost of the asset. Only anything related to the asset can be added. All of you clear? Cost of it's not there here, so you can note it down. Cost of relocations cannot be added. Once the asset becomes ready to use, what is happening? The capitalization of cost will stop and immediately depreciation will start. The moment asset becomes ready to use, depreciation starts. Now in the question they will ask, the asset is put to use after 3 months of finishing the construction. When will the depreciation start? Construction mugdu 3 ತಿಂಗಳಾದ್ಮೇಲೆ we have started the usage of PPE. When will the depreciation start? After 3 months? No. The asset was ready when the construction was over. We are not income tax act. We are not using put to use. The depreciation starts the moment asset is ready to use. Very clear, very important. Okay, there are questions asked on this also. Sumne confuse. They'll give. Construction got over on December. The construction of the PP got over on December, but we started using it from February. Simply confusion for you. If depreciation December or February now, very clearly it is from December only. All of you? The following are not included in the carrying amount. Further, these are also not included. What is this? Initial operating losses. Management yet to be brought into use or is operated at less than full capacity. So they are telling, I created one PPE, okay. Maybe what I did is, maybe Wonderla, we are talking about Wonderla, okay. For them, all those rights are there. No, that itself is PPE for them, because that is how they are using it for what? Giving of services. They are using it for giving of services, correct? No. Now what I did was, the moment I launched Wonderla, 1000 people is the capacity of our park, but I let only 500 people. Why? Maybe I was in the testing phase. Or the people who came only was 500. Why? Because we have opened it newly, no? Because of that, losses would have happened, no? Your capacity is 1000, but you operated at 500. For whatever reasons, maybe because you are trying, or maybe people only did not come. You are facing loss. Because please understand, whenever you have big machinery and all, no? There is a risk of fixed cost. And to recover that fixed cost, no? You have to attain certain level of production. Andre, for Wonderla to operate, no? for them to be profitable, maybe at least the park should be filled by 80% every day. Then only they'll be able to recover their cost. But now you operated at 500, no? So you'll be having loss because you are supposed to operate at 800 to recover the fixed cost, but you operated only at 500. Now there is 300 loss. Can you capitalize this loss in the cost of the machinery? No. All that nonsense is not allowed. Okay, only the actual costs. See, cost of relocating, we already discussed, no? That cannot be added to the cost of the asset. Relocation, reorganizing. So reorganizing. So we are constructing a new PPE here. We are training the employees for the purpose of this PPE. Training, and again, can training cost be added to the cost of the asset? Training, you are building a PPE, okay? And to use that PPE, of course, no one will be knowing now how to use it. So you are giving training to those people. Can that be added to the cost of the asset? Training cost. You are training people as to how to use the PPE. Can you add it? Answer. Hey, we don't have time for you to sit silent. We cannot. Alva, why? It's a? That's why you should not add it, Antana. Or should we add it, as per you?
It might come under revenue expenditure because timely we need to train you.
Hey, no da. See, now you've bought a big machine. Okay, they'll train you within 2 months and they'll go. Company people only will come. They'll train your employees in 2 months, they will go. That training cost I'm talking about. Why? Okay, so training expenses, whatever is there, should not be added. Aita, why tell me? Very clearly I told, no. Whatever cost I incur for the asset, for it to be ready to use, I told. Aita, with or without the training, the asset is ready to use. You're understanding? Training kotre use madakagadu. Nan use madakke agadu ante enadu heladna. Till the point assets become ready to use, whatever you incur, you add it. Now without training, maybe your people don't know how to use it, but the asset is ready to use. That means this cannot be capitalized. At a training cost, you cannot add it to the cost of the asset. What is that? Trial run will do now. Before using the PP, actually you'll do the trial run. For that also you'll incur some cost. What to do about that cost?
If they collect money like partially for the ticket, then it cannot be like capitalized.
They are collecting maybe.
If they collect, then
See, trial run andre, first of all, there will be no people. Before even the commercial usage is started, what you are doing is, you are simply running it for safety purpose. There are no people involved. So it is a cost completely. Should we add it? Again, use the same logic. Ready to use. Without trial test, is the asset ready to use? What do you think? No. Without trial test, asset is not ready. Why are you doing trial test? Yenaru missing idya anta nodakke. Missing idya ilva anta gottagade trial run ಮಾಡಿದಾಗ. So trial run is very important for the asset to be ready to use. Once the trial run is over, if everything is proper, then green signal. So trial cost can be added to the cost of the asset. Okay. Then, while doing this trial, maybe one PP, you have started it, you did the trial, you have actually produced goods. Now you sell that produced goods, you get the money. Which goods? The goods which you got from trial run. What should I do about that? You can aramse reduce it from the cost of the trial run. And the cost of trial run is say 10,000. And by producing that goods, you have earned 2,000. So how much you can capitalize? 10 minus 2. 8,000 you can capitalize. Did you understand? Okay. One more, let's understand. One more discussion also. Now I started construction of PPE. Okay. Some building I am constructing. Building is a PPE. In my land, whichever land I had, some other part of land was unused as of now. As of now it was unused. Later we will use that area also for construction. But right now, since we are constructing this part, that is free. I have let it out for parking. And I am earning money. How to treat this money that you are receiving on parking? Should you reduce it from the cost of production or should you treat it as a separate income? related, so what AS10 tells about this is, whatever money that you are realizing, no, if it is related to the construction, if you are realizing the money, it can be reduced from the cost of PP. If it is not related to this, then you cannot reduce it from the cost of PP. Now tell me, parking related to the construction? No way. So that should be treated as a separate income, it should go to P&L. Okay. Maybe in the construction process you realize some scrap. Is that related to the construction? Yes, that can be reduced from the cost of the asset. Are they from some other unrelated activity only you are realizing money? That cannot be reduced from the cost of production. That is what AS10 tells. It should be related. Are we clear here? So this decommissioning, we got it. One more thing, okay. If it is a self-constructed assets, no, eliminate internal profits. Very important point. I am constructing something, building, and my business is purchasing and selling of cement. So if I am purchasing my own, constructing my own PPE, of course I will use my own cement. Say suppose the cost price of my cement is 80 rupees, but selling price is 100. Should I capitalize 100 or 80? 80, okay, and not 100. You cannot capitalize the internal profits because it's your own profit, not 20 rupees. Then, sir, to buy this PPE, I have taken one loan and I am paying interest. Can I capitalize that? Now that question is subject to another accounting standard called as AS16. It's not here, so we'll go there. AS16 will tell whether we can capitalize interest or not. Sir, we have purchased one asset. Very simple point. We have purchased one asset, and it is deferred beyond normal credit period. And generally, our vendor, where I purchased this plant and machinery, he gives 3 months credit. For me, he has given 2 years credit. Then how to do the accounting? So they are telling, if very simple, they are telling. If he is giving you 2 years credit period, whereas normally he is giving to others only 3 months andaga, one thing you understand, the money that you are collecting, the money that he is collecting from you, to whom he has given 2 years, of course he will be collecting more. Why? Because he is receiving money over 2 years, no. Therefore, that price contains the element of interest. Alva? So if the 10 lakhs is normal selling price, maybe he will be selling it to you for 2 lakhs including interest. 12 lakhs he will be selling, 2 lakhs including interest. And how to do the accounting? If 12 lakhs is the price including interest, then exclude interest component and capitalize only 10 lakhs. If you have deferred credit period, and the more credit period. For others they are giving 3 months, for you they have given 2 years. And the excess money is received for interest. So interest you cannot capitalize, it's subject to AS16. Alva? So that's why what you will do, capitalize only 10 lakhs. All of you clear? What if you acquire a PPE? Not by paying money, but by exchanging the assets. How to record? And you have bought one plant and machinery, not by giving money, by giving one more asset, some other plant and machinery or some other asset. Then how to record? Okay, they are telling the cost of an item of PP is measured at fair value unless exchange transaction lacks commercial. Okay, we'll first discuss here. Okay. So if you buy an asset by giving up another asset, okay, they are telling you have to recognize that asset at the fair value, of asset given up. Aita? Did you understand the point? I have got an asset, okay, which I have got. The fair value of that asset is 10 lakhs. The asset which I gave to him, the fair value of that asset is 8 lakhs. Okay. Now we will measure this asset at what? The new asset. At 8 lakhs or at 10 lakhs? 10 lakhs is the value of the asset that you have got. 8 lakhs is the value of the asset that you have given. So you will value it at what? 10 na 8 ah. See what they have told, no? See, you have to record it at 8 lakhs and the fair value of the asset given up, whatever I gave, unless the fair value of the asset received is measured reliably. So what they are telling is 10 and 8 they decide maduvaga, see which is more reliable. Aita? So if whatever the asset given up is more reliable, take 8 lakhs. ಆಯ್ತಾ? ಇರಲ್ಲಪ್ಪ 8 ಗಿಂತ the 10 lakh is more reliable. See, why I am telling reliable? Because estimating fair value is very difficult. Correct? No, what someone will easily give you fair value? No, that estimation takes a lot of thinking and other stuff. Yes or no? So first preference for what you have to give? Fair value of the asset given up. Sir, ಎರಡು ಸೇಮ್ ಇದ್ರೆ ಏನು ಮಾಡೋದು? You have to take fair value of the asset given up. Sir, the fair value of the asset given up is more reliable than fair value of the asset received. What will you take? Asset given up. Sir, the fair value of the asset given up is less reliable than fair value of the asset received. Now what will you take? Fair value of the asset received. Sir, ಎರಡು ಸೇಮ್ ಇದ್ರೆ fair value of the asset given up. Guys, given up is our cost, no? Generally we'll capitalize at what? Cost. Given up is our cost. So when both are correct, we will consider fair value of asset given up. If this is more reliable than this, then we'll take fair value of the asset received. Or else first preference is for fair value of asset given up. Did you understand? Clear? When will you do this accounting? For these two conditions they have told. All this fair value etc. and all you can do only when these two conditions are satisfied. The transaction should have commercial substance. ಆಯ್ತಾ? There should be commercial substance. Aita. Then either fair value of asset given up or fair value of the asset received. See, you should be able to reliably estimate any two of the one. Either you should be able to get fair value of the asset given up reliably, or you should be able to get fair value of the asset received reliably. ಆಯ್ತಾ? ಇವೆರಡರಲ್ಲಿ ಯಾವ್ದಾರ ಒಂದು ರಿಲಯಬಲ್ ಆಗಿ if you are able to estimate, then you can go for this accounting. Sir, both I am not able to estimate reliably, then you cannot do this accounting only. ಆಯ್ತಾ? First one. Sir, then what to do, sir? Then you will not record transaction only. We will record, but at book value. Understanding? Book value ಅಂತಂದ್ರೆ maybe I got one asset, I gave up one asset. ಅಲ್ವಾ? I will record this new asset also at the same book value only. You're understanding? The asset I gave up had a book value. Book value ಅಂದ್ರೆ ಏನು? Carrying amount in the books. I was showing it at 8 lakhs. ಆಯ್ತಾ? Now I gave up and I got a new asset. I will record this new asset at 8 lakhs only, that book value only, if I am not able to get the fair value. Did you understand? One more condition to be satisfied to follow this accounting is the transaction should have commercial substance. Commercial substance andre, now tell me one thing. I will very simply tell what is commercial substance. I have a tractor. Okay. It is 3 years old. Okay. I am exchanging it and I am getting some other asset. Which is that asset? That is also same brand, same tractor, 3 years old only. Anything ajeeb about it? No ajeeba? Correct? No. Mine was also same brand, 3 years old only, same tractor. Why would I do that? This is a transaction which is lacking commercial substance. So basically what they are telling is when exchange of assets happen, alva, some changes should happen to the entity. Maybe earlier I had older tractor. If I get a new tractor, now my efficiency will increase, my cash flows will increase, my risk will increase. I mean risk will decrease, alva. Earlier I had 3 years old tractor. Now I have new tractor. My risk of defaulting and other things is less now. So ಒಂದು exchange of asset ಆದಾಗ ನಮ್ಮಲ್ಲಿ ಏನಾದ್ರು change ಆಯಿತು ಅಂದ್ರೆ, change in what? Risk, timing and cash flows. Then I can say that there is a commercial substance. If exchange of assets ಆದಾಗ, if nothing change is happening, then there is no commercial substance. Example is the tractor. I had 3 years old tractor, only same brand. If I exchange the same thing, is there any change happening to me? No. This transaction lacks commercial substance. So in that case, you cannot do this fair value accounting. What you have to do? Book value accounting. Earlier, this older tractor you had at 8 lakh rupees carrying amount. When new asset came, that new tractor, which is of 3 years old only, you will record that also at 8 lakhs only. This fair value of asset given up, received, that and all you will not do. So which are the two conditions? what? Fair value of asset given up or received. Either any one of the two. You should be able to measure it reliably. And second, the transaction should have commercial substance. If any of the one condition is not satisfied, you cannot do this fair value thing. Aita? If both are satisfied, then you have to measure the new asset that you have received at what? At fair value of the asset given up, first preference. If fair value of asset received is more reliable than given up, then use asset received, fair value of asset received. All of you clear? Okay. Next, we learn it in here. So let's come to the subsequent measurement. We have two methods to carry PPL. One is cost model and one is revaluation. What is cost model? Now you have determined how much to capitalize. From that, every year you will subtract depreciation. That is your cost model. Revaluation, and in revaluation also you have depreciation, but along with that you also have revaluation. That means you are maintaining asset at historical cost. Correct, alva? If you want to bring it to fair value, you can do it. Maybe the historical cost is 10 and the fair value is 12. You can bring the value of the asset to 12. That is called revaluation model. Okay, whatever gain you are getting from revaluation model will go to revaluation surplus. It's a reserve, correct? No. So whenever you are doing upward revaluation, what should be the journal entry? 10 in the 12 ಮಾಡ್ತಿದ್ದಾರೆ ಅನ್ಕೊಳ್ಳಿ. Revaluation model. Journal entry. Asset is increasing now. So PPE account debit to, where will the gain go? 2 lakhs. Revaluation surplus 2 lakhs, 2 lakhs. Downward revaluation for the first time ಆಯ್ತು ಅಂದ್ರೆ it's upward revaluation. This is example for upward revaluation. A PPE asset increasing. You understood now? The cost was 10 now. You are taking it to 12. You are increasing the value of the asset. So PP is an asset increasing debit. 2. The gain will not go to P&L because it's not a regular income. Correct? And is it a realized income? No, notional income. So it cannot go to P&L. That's why you are transferring it to a separate reserve called revaluation surplus. Downward revaluation andre? Now the question is, most of you will tell, sir, revaluation surplus to PPE. That is also correct, only when, if you have revaluation reserve balance. If you are doing revaluation for the downward revaluation for the first time, will you be having balance in revaluation surplus? No. I want to where to put this loss. Then it can come to P&L to PP. The loss can go to P&L account. All of you understood? If it's upward revaluation, revaluation surplus. If it is first time downward revaluation, it will go to P&L. All of you clear? Now say suppose we'll come to this possibility. First I have done upward revaluation. Now the valuation has come to 12 lakhs. From 12 lakhs I am making it 9 lakhs. What is the entry? From 12, now it is becoming 9. So PP is decreasing, increasing, decreasing. So 2 PP. How much? From 12 if it becomes 9, 3 lakhs is gone. Debit what? What you have to do is, first whatever revaluation reserve balance is there, that you have to utilize it first. Excess will go to P&L. How much balance you have in revaluation? 2 lakhs. First utilize that. So RR account debit 2 lakhs. Excess 1 lakh will now go to P&L account. Aita? So always you should do this. Whenever you are increasing, whenever the increase in valuation of asset is happening, make sure that wherever you had dipped the P&L, that you will reverse and come back to the revaluation. Well, coming down also ashte. First empty the revaluation. If the RR is empty, further if you have to go down, then it will go to P&L. This normal thing we know. Okay. Next, what do we have? See, very important point. Maybe it can come for an MCQ. Revaluation is always done for entire class of PP and not for one single asset. Class of PP andre all the similar natured assets will be classified as one group. If all the furnitures will come under one, all the buildings will come under one, all the plant and machinery will come under. So if you do revaluation, you cannot do revaluation only for one plant and machinery. You should do it for all the plant and machinery that will come under that class. Aita? Selective revaluation for particular assets is not possible. You have to do it for the entire class. Sir, when to do it? See, generally they have given one guidance here. I thought this is guidance. if the PP is experimenting volatile changes in fair value, and the fair value of the PP keeps changing rapidly, graph is like this, then do annual revaluation. Every year do the revaluation. If the PP valuation is not fluctuating, which is the case mostly, why will PP valuation fluctuates the most? Very rare. If it is not fluctuating, then you can do it for every 3 or 5 years. Whenever you feel that there is a long gap between the carrying amount and the fair value, you can do the revaluation. Generally 3 or 5 years. If the fluctuation is more, do the revaluation every year. Okay. Then this we have done. Two times. Next. So what were we discussing? We were discussing revaluation. Then frequency is done. Now let's come to accounting treatment. I thought this again, you never know what they will test in the exam. So it's better to cover this one point. Now we learnt now how to do revaluation. Upward revaluation, downward revaluation. Upward revaluation gain will go to RR. Loss will go to RR to the extent of RR. More loss will go to P&L is what we have learnt. Alva. Now I'll give you one question. The cost of the asset, historical cost of the asset is say 10 lakhs. And accumulated depreciation till now, you don't know what is accumulated depreciation. That is depreciation given till date. That is say 3 lakhs. Okay. Now I want to revalue this asset to 15 lakhs. Tell me the journal entry. To do this we have two types of accounting. One is very simple, one is a little okay. So 10 lakh minus 3 lakhs. So how to determine I will tell you. First method I am teaching. First you have to take the carrying amount. What is carrying amount? Carrying amount is always cost minus depreciation. Cost is to 10, depreciation 3. So carrying amount comes to, from 7 lakhs you have to take the valuation to 15 lakhs. So that means you have to increase it by, so upward revaluation is to the extent of 8 lakhs. Aita? So first method what I will do is, sir, now what is the entry you will pass? Sir, very simple. PP account debit to revaluation account, revaluation surplus account, 8 lakhs anta. Now if you do like this, it is wrong. Because right now your PP account will be having a balance of 10, not 7. Now revaluation calculation by using carrying amount, no. If you directly add 8, then cost will become 18. Aita? 18 minus 3, it will become 15. Aita? So I don't want that to happen. So what will we do? First method is very simple. Whatever accumulated depreciation is there, remove it completely. Aita? Completely remove it. How much accumulated depreciation we have? 3 lakhs. Aita? And cost is the cost of the asset. It's at 10. That I have to take it to 15. That means cost component have to increase by how much? 5. Aita? So the entry that I will pass. But ultimate revaluation surplus for us is how much? 8 only. See how to calculate the ultimate revaluation surplus? You always calculate by using carrying amount only. What is carrying amount? 7. That you are taking to 15. So our ultimate surplus is 8. Now how much should go to RR account? 8. But entry engagate nodi. Entry is like this. To RR account, how much will go? 8 lakhs. What will I debit? You are simply telling PPE. No. If I debit PPE entirely 8, it will become what? 10 plus 8, 18 lakhs. So what I will do? Whatever accumulated depreciation was there, that I will make it empty. Accumulated depreciation account will generally have credit balance. When I remove it, to remove it, I'll have to debit it. So debit. How much was the balance? And asset I have to increase it by 5 because right now it's at 10. I have to make it 15. Increase it by 5. This is the entry you will pass. So PP increased by 5. Now what is the PP account balance? 15 lakhs. Accumulated depreciation? Nil, 0. So carrying amount has come to 15 lakhs, correct. All of you understood how we did the accounting. So whenever you are doing revaluation, in the case where you have accumulated depreciation, empty the accumulated depreciation completely, and from cost you take the difference to that asset account. Ultimate thing that should go to revaluation surplus is 8 lakhs. Understood? So ultimately when you do cost minus depreciation, it should match 15 lakhs. That's the ultimate goal. This is first method. Okay? Which is very simple and easy to use. Second method. Okay. In second method, the accumulated depreciation will not go. For example, what is the cost? 10 lakhs. Depreciation is 3. Okay. Now how much is our surplus? Our revaluation surplus is 8 lakhs by our carrying amount is 7 lakhs. So the increase is 8 by 7 alva. I am increasing it by how much? 8. So 7 plus 8. After revaluation, the carrying amount should become 15 technically. Alva? It should become 15. Right now the carrying amount is 7. Correct alva? So I'll multiply both by 15 by 7 into 15 by 7. See, the first method is only very convenient. No need to understand. It is for your understanding ashte. Okay, if you feel first one is convenient, don't even look at this. Ishtaididu? This one? 6 lakh? Alva. This is the value that will become. Okay. So right now cost is at 10. I have to make it 21. So I'll increase the asset by 11 lakh 42,857. So PPE account, I will increase it by 11 lakh 42,857. Now depreciation was earlier 3. I have to take it to 642,857. So I have to increase it by 342,857. So to accumulated depreciation 342,857, and remaining will go to, what is the remaining difference? 1142,857, 342,857, 8 lakhs. So in this case what is happening? Your depreciation is not going anywhere. That account will also be there, and your carrying amount will still come to 15 lakhs only, and your surplus is also correctly recorded. This is one crazy method. Okay, I feel now that after teaching I am feeling no need for you to know that method. Better do this. Empty the depreciation completely. So debit accumulated depreciation. Eshtitto 3 lakhs itto muguspudi. Aita. What is the cost of the PPE? 10. That you have to take it to 15. So increase it by 5. Asset account debit 5. All the remaining will go to RR, which is your actual increase. All of you understood? Depreciation and debit mabidi. Amel cost go, revaluation go, revaluation amount go. Any difference ide? Adena increase madi. First method only you follow. I am only telling you follow first. Don't follow second method. Okay, all of you? Clear, no? I'll ask one more example. No need, no? We don't have that much time. I normally feel that I am in the normal session. Okay, see, we have spent how much? 2 hours 13 minutes still in the second standard. Ee speed alli ನಾವು ಮಾಡಿದ್ರೆ ಯಾವ ಜನ್ಮಕ್ಕೂ ಮ್ಯಾರಥಾನ್ ಮುಗಿಯಲ್ಲ. Then what is important for us to understand? This one small thing. Sir, what will happen to revaluation surplus? Where will revaluation surplus account comes? It comes in reserves. When will it go? It will go when the asset is sold or disposed of. Yavat asset hogutte avat revaluation reserve hogutte. For any other movement possible for revaluation reserve? Yes. One accounting policy option is there. All of you focus. The accounting policy option is, now asset was 10 lakhs, you made it 15 lakhs. Alva? Since you made it 15 lakhs, don't you think your depreciation also increases? Till now, you are calculating it on 10. Now you will calculate it on 15. The depreciation increases or not? Increases. Now tell me, this increase in depreciation is because of revaluation. Is it fair if it goes to P&L? No. Revaluation effect is going to revaluation surplus, but the additional depreciation effect is going to P&L. Not fair. So what they did is, the additional depreciation effect should also go to revaluation antane helidru. That's why what option you have is, if you have any revaluations, if you have any additional depreciation on upward revaluation, no, that you can transfer it to retained antane another revaluation revenue. So how will we do it? Now how much is your additional depreciation? You increased the asset by how much? It was 10. You increased it to 15. Now the upward revaluation is 5 lakhs. And say your depreciation rate is 10%. So additional depreciation is, so for this 50,000 what we'll do is, I'll pass this entry. RR account debit to RE. 50,000, 50. And the RR in the Tegudu, 50,000, I'll transfer it to RE. Retained earnings is nothing but P&L account. Why? Because I don't want the effect of additional depreciation because of revaluation to go to P&L. Okay. This is one choice. Again, is it compulsion? No, it's an accounting policy choice. If you want, you can do it, or else it's okay. If you want to let it go to P&L only, be it. That is allowed. But if you don't want that to happen, then you can do this. Clear? All of you? Understood? Okay. Then we have component method of depreciation. Very simple. You have a very big plant and machinery, and you have significant components in that plant and machinery. Okay. For example, freight. Freight only the body will be having the life of 20 years. Whereas engine has the life of only, say, 5 years. The turbines have the life of 5 years. Body has the life of 20 years. But we will consider entire aircraft as 1 pp. Now, for purpose of computation of depreciation, in SLM, how will we calculate depreciation? Cost minus RV divided by useful life. Howda? Useful life divide madavaga. Will you use 5 years or 20 years? Because body has 20 years life. Engine has 5 years life. Should I use 5 or 20? So they are telling, no need to do all that nonsense. For engine you use 5 years and for body you use 20 years. So here what did we do? Same one big asset only, but we are dividing it into components. Correct? All of you? It's been 10:34 now. Understanding? So what they simply told is, it's okay. What you can do is divide the PP into components and do depreciation separately. For engine use 5 years, do separate depreciation. For aircraft body, you do separate depreciation. Understood? That is called your component method of depreciation. Then depreciation, matching concept. Correct? No? You have to allocate the cost of the asset over the useful life. If you have paid 10 lakhs, you are getting benefits from the asset for 10 lakhs. So you have to spread the cost also for 10 years only, no? 10 lakhs pay ಮಾಡಿದ್ರೆ ಅಂದ್ರೆ useful life 10 years ಅಂದ್ರೆ the cost should be spread for 10 years. Directly putting in first year is not correct. That's why we have concept called as depreciation, and we generally use which method? We have various methods, SLM, WDV, etc. But for our question purpose, mostly we'll use SLM. And how is SLM calculated? Cost minus scrap value or residual value divided by useful life. Aita? When will you stop depreciation? The moment you stop getting the date the asset is held for disposal and the asset is de-recognized. If you sell off the asset, of course, will stop depreciation. Or the moment you classify asset as held for sale, from this day you will classify that this TV I will not use. Whenever you get a good opportunity, I will sell it. That moment you classify it as held for sale, you have to stop depreciation. Okay. In Ind AS we have a separate standard for held for sale. Okay, Ind AS 105. Or whenever the residual value of an asset may increase to an amount equal to or greater than the carrying amount. The moment RV becomes equal to carrying amount. What is carrying amount? Cost minus depreciation is carrying amount. The moment carrying amount reaches residual value, you will stop depreciation. And one more is, if it is held for sale, you will stop depreciation. Or if you sell it only, then only you will stop depreciation. Okay. Land and building only, we know that land is a appreciating asset, so it will not be depreciated. Only building component will be depreciated. Okay. So I think we have discussed everything about PP. Now let's try to solve some questions from RTP. Okay. Yenri. So we have some questions from RTP. So let's solve. There is one more point, which is a psych point, okay, but we will understand. See, whenever we are doing depreciation, so there are lots of accounting estimates, while doing depreciation. What are estimates we have in depreciation? Useful life is an estimate, yes sir. Residual value is an estimate, correct? No. What will you do for accounting estimates? These accounting estimates, every year you have to review. ನಾನು ಹಾಕೊಂಡಿರುವಂಥ ಯೂಸ್ಫುಲ್ ಲೈಫ್ ಕರೆಕ್ಟ್ ಇದೆಯಾ, ನಾನು ಹಾಕೊಂಡಿರುವಂಥ ರೆಸಿಡ್ಯೂಯಲ್ ವ್ಯಾಲ್ಯೂ ಕರೆಕ್ಟ್ ಇದೆಯಾ ಅಂತ ಎವ್ರಿ ಇಯರ್ ಯು ಹ್ಯಾವ್ ಟು ರಿವ್ಯೂ ದ accounting estimates. Okay, that is one thing you should know. Then one more thing is, there is one more topic we'll understand in problem, but this I don't think we'll discuss. You know now, this decommissioning restoration liabilities. What was that? Today only you have obligation for the end of the useful life. Maybe you have to demolish the building and give it back to them, all that is there. What will we do that? We will add it to the cost of the asset. For example, 10 lakhs is the cost of the asset. Okay. And you know that after 5 years or 10 years, you will require 2 lakhs for demolition. Will you add 2 lakhs here? You will bring that 2 lakhs to present value. Maybe it comes to, say, to keep it simple, it comes to 1 lakh. I will add the present value of that decommissioning. So it comes to, and for 11 lakhs I will do depreciation. Don't you think this amount of 2 lakhs is also an accounting estimate? How do you know after 5 or 10 years how much we will incur for demolition? Do you know correctly? No. It is a accounting estimate. If it is an estimate, then it is subject to change. There are chances that your estimate is lower or your estimate is higher. Now, if that change happens, how to do the accounting is the question. So, two possibilities are there. The two possibilities. One is your accounting estimate, you have taken it as 1 alva, 2 and the present value 1. 1, it can increase in provision. One more possibility is decrease in provision. Tell me what is the accounting that I will do if it is increase in provision. That also depends on 2 more possibilities. Whether you are following cost model or whether you are following revaluation model. So if you are following cost model, very simple. Increase in provision. Provision is what? Liability. Alva? Liability increasing, what will we do? Credit. So to provision account. And whenever your liability is increasing, you are capitalizing to the asset, alva? That liability only. So your asset will increase. So PPE account, debit. Okay? Understood? Hello? If the provision increases, first what you would have done, that 1 lakh, you added to the cost of the asset, no. First time when you capitalize, what was the journal entry? PPE account debit to liability, no, provision. PPE account debit to provision is what you have passed first. Now further the provision has increased. What is the entry? Entry will be same only, no. It's PPE account debit to provision. So ulta aitu andre, if it is decrease in provision and we are under cost model. Ulta aitu andre, ulta entry. So provision will reduce, so provision to be debited and PP will reduce. Clear? Then coming to revaluation model. Okay. In revaluation, what to do? Increase in provision. There is no problem in increase in provision. Okay. Provision is increasing to provision account. Your provision is increasing. Debit what? PPE account. Should we touch PPE account? What will you do? Because whenever you are under revaluation model, the asset is already at fair value. You cannot touch asset. So what you have to do? Touch revaluation reserve account. Did you understand? So whenever increase in provision is happening under revaluation model, you have to touch RR account. RR account debit to provision. Clear? Similarly, decrease in provision is happening under revaluation model. What will you do? Similarly, here also the adjustment is same. Since it is decrease in provision, provision will be debited because provision is reducing. And will I touch the asset account? No, we will touch revaluation reserve. All of you understood? So if it is cost model, आराम से increase the asset, increase the liability. Decrease the asset, decrease the liability. If it is revaluation, increase the liability because provision is increasing, and you cannot touch cost. You have to touch revaluation reserve. Did you understand, all of you? Because the asset is already under fair value if you are following revaluation model. If you do any changes to asset, that will be wrong. That's why we'll give the effect to revaluation reserve. One more small point is there which you have to understand. See here, amount deducted from the cost of the asset should not exceed the carrying amount. If a decrease in the liability exceeds the carrying amount of the asset, the excess should be recognized in P&L. See, when decrease in provision happens, no need to go technically, just know this. If decrease in provision happens, what will happen to the carrying amount? Guess. Provision now cost of the asset ge add ಮಾಡಿರ್ತಿರ್ತಾನೆ. Hello, 1 lakh is added to the cost of the asset. 1 lakh. If that 1 lakh becomes 50,000 later, will our carrying amount increase or decrease? It will increase. No, carrying amount will increase. So they are telling, because of decrease in provision, if the carrying amount increase, okay, increase it, no problem, but it cannot exceed the carrying amount of the asset that would have been there if you had followed cost model. Did you understand the point? Say suppose you are right now under revaluation model. Assume you are following cost model. ನೀವು ಫಸ್ಟ್ ಇಂದಾನು ಕಾಸ್ಟ್ ಮಾಡಲ್ಲೇ ಫಾಲೋ ಮಾಡಿದಿದ್ರೆ ಇವತ್ತೇನು ಕ್ಯಾರಿಂಗ್ ಅಮೌಂಟ್ ಇರ್ತಿತ್ತಲ್ಲ, ಆಯ್ತಾ? While reversing this decrease in provision, your carrying amount cannot exceed this carrying amount which would have been there if you had followed cost model. Did you understand matter? Increase ಮಾಡಿ ಪರವಾಗಿಲ್ಲ. Decrease in provision leads to increase in carrying amount. Increase in provision leads to increase in carrying amount, and decrease in provision leads to decrease in carrying amount. Decrease in liability leads to decrease in carrying amount, correct? No, if a decrease in liability exceeds the carrying amount of the asset, the excess should be recognized immediately in the statement of P&L. Where is revaluation? See, here we have under revaluation model. Can you see this nota? In the event that a decrease in the liability exceeds the carrying amount that would have been recognized had the asset been carried under the cost model, the excess should be recognized immediately in the statement of P&L. Okay. Now decrease in liability, whatever you are decreasing. No, say suppose the provision was 2 lakhs. It got reduced by 1 lakh. Aita? Now the liability is decreased by 1 lakh. This 1 lakh, if this reduction exceeds the carrying amount of the asset, if the asset had been followed cost model, immediately the excess should go to P&L. ಅರ್ಥ ಆಯ್ತಾ? ನೀವು ಮೊದಲಿಂದಾನು ಕಾಸ್ಟ್ ಮಾಡೆಲ್ ಫಾಲೋ ಮಾಡಿದ್ದೀರಾ ಅಂತ ಇಟ್ಕೊಳ್ಳಿಪ್ಪ. ರೈಟ್ ನೌ ದ ಕ್ಯಾರಿಂಗ್ ಅಮೌಂಟ್ ಇಸ್ ಕಮಿಂಗ್ ಟು 3 lakhs. If at all you had followed cost model, how much is the carrying amount? 3. And the reduction in provision is coming to 4. ಅರ್ಥ ಆಗ್ತಿದೆಯಾ? If at all you had followed cost model, today your carrying amount would have been 3 and the reduction in liability is becoming 4. 3 will go to revaluation surplus because we are under revaluation model. 1 will go to P&L. ಅಷ್ಟೇ ಅವ್ರು ಹೇಳ್ತಾರೆ. All of you understood? Carrying amount is 3 lakhs. If you had followed cost model, I am repeating, carrying amount if you had followed cost model is 3 lakhs and the reduction in provision is 4 lakhs and the 3 will be adjusted in revaluation surplus normally. Generally what will you do if I had not told anything? Entire 4 lakhs you would have put under revaluation surplus. You would have debited revaluation surplus 4 lakh to provision account debit 4 lakhs to RR ಮಾಡ್ಬಿಡ್ತಾ ಇದ್ರಿ ನೀವು. ಅವ್ರು ಹೇಳ್ತಿದಾರೆ ಇಲ್ಲ ಇಲ್ಲ. When that is happening, only 3 can touch RR and 1 should go to P&L. Did you understand? So that's the thing. I don't think they will test anything from this part of the PP, but it's better for you to know. This one thing you should have known. Whenever there is increase in liability, what will you do? It should be recognized in the statement of P&L. Exception, it should be debited directly to revaluation surplus. Ade, whenever there is increase in liability, what will you do? We are under revaluation model. Increase in liability idre, liability is increasing, so credit provision and debit revaluation surplus. Simple. Now, you are debiting revaluation surplus. You don't have the balance of revaluation. Then what will you debit? RR balance illa. Then you have to debit P&L. So that's why they have told statement of P&L account. You don't know how revaluation works. When you're doing the revaluation first time, what will you do? Debit P&L alva. So while increase in liability adaga, credit provision, debit RR. When? If you have RR balance. If you don't have RR balance, you will debit P&L. When you're increasing in liability, what is happening? Decrease in liability, what is happening? Liability decreasing and the provision will be debited. And what will you credit? Revaluation surplus. Only to the extent of, but however we have this note now. In the event that if the decrease in liability exceeds carrying amount, then the excess will go to P&L. To the extent of carrying amount, it will go to RR. Which carrying amount? Carrying of amount of the asset as if they had followed cost model. Cost model first indanu cost model ಮಾಡಿದ್ರೆ ಇವತ್ತು ಎಷ್ಟೊಂದು carrying amount ಇರುತ್ತೆ, say that is 3. If the decrease is 4, then only 3 will go to RR and 1 will go to P&L. Did you understand, all of you? That is the idea. Okay. So we have some problems to solve from the RTP for AS10, which we'll do post break. Okay. Let's take a break. So let's solve some RTP questions on AS10 and then we'll proceed. Let's start. There is, I think RTP May 26 question only. Nice question. On 1st April 2024, Y Limited purchased an industrial plot of land for 50 lakhs. So they have purchased the land 50 lakhs. Should we capitalize it? Of course. For the purpose of constructing a new factory, the cost of rupees 50 lakh, including legal cost 2 lakh 50, incurred for the purpose of acquisition of this plot. Now 50 lakhs is what? Further they have incurred. Okay, and that includes 2 lakh 50 legal cost. Can we include it or are we supposed to exclude? Include only, no, because legal costs are directly attributable. The construction of the factory commenced on 1st May. Y Limited provides you with the following details of the costs incurred in relation to above construction. Now you should tell me whether I have to add it to the cost of building a nata. So first one. So first of all we have land. Cost 50 lakhs, that I will take. Next, preparation and leveling of land. Should I add it? Of course. Employment costs of construction workers. Of course. See, this cost, whatever they have given is per month. Correct, no? I should take it for how many months? Wait, read this. The construction of the factory was completed on 31st December 2024. And the construction started on 1st May. Till December 24 I have to capitalize. So May in the December and it is 8 months. Aita, April to December is 9. Okay. So it's 58,000 into 8 months I will take. Next, purchase of raw material. We have to add it. Cost of relocating the workers to new factory for work. What? Add relocation. Very clearly not allowed. Cost of inaugural function. Very clearly not allowed. Overhead costs incurred directly on the construction of the factory. Yes. Again, this is also per month. I have to take it for 8 months. Done. The construction of the factory was completed on 31st December and the production could commence on 1st Feb. Okay. Depreciation starts from when? It starts from December only. Correct? Because the moment it is ready to use, depreciation starts. I don't care when they started the production. The overall useful life of the factory building was estimated at 40 years from the date of completion. However, it was estimated that the roof would need to be replaced 20 years after the date of completion. What did you understand? Roof with the life to 20 years, whereas the building life is? So which life to use? Roof is there on the building only. We will use component depreciation. Alva. For roof, you compute depreciation separately, for building compute separately. Next. The cost of replacing the roof at current prices would be 25% of the total cost of the building. Okay. Okay. So whatever total cost you'll get, no, 25% of that is roof. The construction of the factory was partly financed by a loan of 56 lakhs raised from State Bank of India on 1st April 2024 at an interest rate of 9% per annum. So they have taken a specific loan. They are paying interest. Can we add it? It is subject to AS 16. So let's come to AS 16. Is it a qualifying asset? Yes. Yeah, which takes substantial period of time is a qualifying asset. Okay. So interest can be capitalized. Next. During the period when the loan proceeds had been fully utilized to finance the construction, Y Limited earned an income of 50,000 from the temporary investment of the proceeds. You understood the loan amount. Whatever excess you had, no, you had invested it somewhere and you have got some income. What should I do? Treat it as an income only in P&L. If you remember borrowing cost, no. If you have taken specific borrowing and if you have employed that funds anywhere, if you get that money, that will be subtracted from the borrowing cost only and remaining will be capitalized. So this 50,000 will be subtracted. It's a specific borrowing, no? Yes. Assume that all of the net finance cost needs to be allocated to the cost of factory and interest cost to be capitalized based on 8 months period. Why? Because construction has happened for 8 months. And to do the capitalization as per AS 16, there are 3 conditions, no? Otherwise, one of the condition was what? The construction should have started. It started on 1st February, 1st May. So you can start capitalizing the interest also from 1st May only. So 8 months, correct. You are required to compute the carrying amount of the factory in the books of I Limited as at 31st March as per the provisions of the ES. Okay, so now let's first try to find out the total cost of construction. So what all will I add? I'll first take land, then I'll take leveling of land. Then I've taken construction workers 8 months, which comes to 4 lakh 64. Then I've taken raw materials 42 lakh 48,000. Then I've taken overhead 50,000 into 8, 4 lakhs. Then interest. Interest I can capitalize for what period? So what is the total loan amount? Into interest rate is, that's per annum, into 8 by 12. So that comes to 3 lakh. Will I capitalize 3 lakh 36? No. Before that I will subtract that 50. So minus 50,000 that you have got from surplus investment. 2 lakh 86,000 I will capitalize. So total value that you will capitalize is 1 crore 5 lakh 58,000. Now we have to find out depreciation. What? Directly divide by 40? No. For roof you have to do it separately. For the building. Roof is 25% and the remaining building is 75%. So let's calculate the depreciation. So how will you do it? So first take 1 crore 5 lakh 58 which you got total capitalization. From that remove 50 lakhs. Why tell me? Because 50 lakhs is land, land is an appreciating asset. Remaining comes to 55 lakh 58,000. Now out of that 5 lakh 58, the building component is 75%. So take 75% and divide that by 40 years. Is that the depreciation? No. When did the construction got over? December. And the year ends on 31st March. So you can give depreciation only for 3 months. Jan, Feb and March. So into 3 by 12. Similarly, entire 55, it's not 44, it's 55 only. Aita. 55 lakh 58,000 into 25% comes to roof divided by 20 years into 3 by 12. That comes to roof depreciation. Now total, if you do, it will come to 43,422. That is the depreciation we will subtract. So the carrying amount is 1 crore 5 lakh 14,578. All of you understood? Calculate depreciation separately. Okay. Come to second question. Okay. Now one more small thing I'll discuss. You know, on existing assets we do subsequent expenditure. And I have already taken the asset. Now I'm spending some more money. Now the question is, whatever I spend money now on the existing asset, should I capitalize it or should I transfer it to P&L as an expense? Depends on what? By whatever subsequent expenditure you are doing. If the future economic benefits of the asset increases, or if the efficiency of the asset is increasing, you will capitalize it, or else you will charge it as expense to P&L. So let's see some example. Cost of day-to-day servicing. Will I capitalize or expense? Day-to-day servicing is to maintain the existing capacity. So that will be transferred to P&L as an expense. Okay, sir. But by replacing any, by doing any kind of servicing, if you think the efficiency is increasing, then it will be capitalized. Replacement of parts. You know, some old parts will be replaced. What will you do? Will you capitalize? Depends again. Ashte, alva. If it is not increasing any efficiency, you are normally replacing, just charge it to P&L. But of course, some major parts will be there. No, that will alter efficiency. Correct? So if these are replacement of parts which is altering the efficiency, then we have to capitalize. Correct? No? Of course. If I replace a part, if it is increasing efficiency, I will add it to cost of asset. But don't forget one thing, one more thing you have to do. This part, whatever is there, no. Whichever new part you replaced, that you add to the cost of the asset. But the written down value of the old part will be there, no. That what you have to do. Remove alva. Remove the value of the old part and then add back the cost of the new part. Correct? No? That is what we'll do. So to understand it better, we have an example there. Okay? We'll see that question. Now Precision Tools provides the following. It's an RTP September 25 question. Provides the following details relating to its fixed assets for the year ended 31st March 25. The company purchased a machine for 12 lakhs when on 1st October 24. The following expenses were incurred. Print and insurance. Will you add it? Yes. Erection charges? Yes. Testing cost. Raw materials. Will I add this testing cost? Yes. Testing is important. This also I will add. Sale of finished goods from testing. What will I do? Subtract it from testing cost. Correct. On 1st December 2024, it replaced the motor of an old machine with a new one costing 1,20,000. This improved the output capacity by 15. Andre, I have to capitalize this replacement. Okay. So what I have to do? Add the cost of the new part and remove the value of the old part. The old motor had a cost of 50 and the depreciation on that part has come up to 35. Till now, how much depreciation I have given on that part? 35. And what is the carrying amount of this part in the carrying amount of the asset? It is 50 minus 35, 15,000. On 15th March 2025, the company shifted machine from one factory to another factory. It incurred all the expenses. Should I add it to the cost of the asset? No. Why not? It is relocation. No, relocation cannot be added. So in none of it I will add it. Okay, I will not add. You are required to calculate the amount to be capitalized in each of the above cases. Shall we see? So first of all, purchase price 12 lakhs, I have added. Free turn insurance, I have added. Erection, I have added. Cost of testing, actually it's 25 plus 10 minus whatever benefit I have got from testing, that I have subtracted. So remaining 27,000 I have added. So total cost of capitalization is 13,27,000. And what is the value of the old component? 50 was the value of that old replacement part. Till now we have given depreciation of 35 and 15 is the carrying amount. Now what I have to do? Remove 15,000 and add the new part. How much is the new part? The new part is 1,20,000. So what I will do? Take 13,27,000, add 1,20,000 and subtract 15,000. Now what is the new carrying amount of the machine? 14,30,000. Did you understand? Why did I subtract 15? Old removed. New how much? 1,20,000. I have added. Now I will calculate my depreciation on 14,32,000. All of you clear? Coming to this one. This is one of the nice questions. Now one problem happened. This is a practical problem. Why is it? Now one problem happened, okay. In the previous problem, what we did? We removed that old carrying amount. There everything was easy, no? Cost also they had only given, depreciation also they had only given. 15 aram se we knew, we removed it. Sir, why did we not minus 50? Why are we minusing 15,000? Because over the time on that, on the machine if I have given depreciation, on the part also I would have given depreciation, no? How much I have given? 35. Anyways, everything was given in that question. But if they have not given, then what we have to do? We have to take the cost. We have to calculate depreciation. Then we have to find out carrying amount. That we have to remove. So that is tested here. Okay. Now my question was, sir, when we are taking a machine, we know the cost of full machine, sir. How will I understand the part of the machine? Okay, now to do, if I have to separate it, the part and the machine, I should know the cost, no? Now, how to find out that cost? Now, when you bought this asset, in the bill only if they have told how much is the differentiation, take that amount and do the bifurcation. Part to ಎಷ್ಟು ಅಂತ ಕೊಟ್ಟಿದ್ದಾರೆ, total ಎಷ್ಟು ಅಂತ ಕೊಟ್ಟಿದ್ದಾರೆ ಆರಾಮ್ಸೆ. If you are not getting, then try to find out what was the cost of that part on that day. On which day? On the day I bought the asset. You know, can you find out? Take that only. Sir, I am unable to find that also, and the breakup is also not given in the bill. I am unable to find. Now what to do, sir? Now what to do? How to find out what was the cost of the part that day if I don't have any information? Last rule what you can do is, at least you know what is the cost of the part today, no? Do one thing. Take today's cost. Maybe let's assume we are replacing this machinery at the end of 5th year. ಇವತ್ತು ಆ ಹೊಸ ಪಾರ್ಟ್ಗೆ ಎಷ್ಟು ಅಂತ ಗೊತ್ತಲ್ಲ? I want the cost of this part as on year 0, and then the day I bought it. Take it to present value. From year 5 you take it to year 0 by doing present value. You got the cost of the part, and that you treat as the cost of the part, then depreciate it, then do the bifurcation. Of course, you would have not understood it better, but however, same question we have, whatever I have explained. In this question, you'll understand. Okay, focus. MS Limited has acquired a heavy machinery at a cost of 1 crore. So this machinery is 1 crore. The estimated useful life is 10 years. At the end of 6th year, one of the major components, the turbine, requires replacement. The remainder of the machine is perfect. Andre adondu. Turbine bittu the remaining of the machine is perfect. So we are replacing what? Turbine. And is expected to last for the next 4 years. The cost of new turbine is 45 lakhs. The discount rate is assumed to be 5%. Can the cost of the new turbine be recognized as an asset? Now basically what they are doing here, from the existing machine, they are removing the turbine and installing the new turbine. When? At the end of 6th year. And the R we have already given depreciation on the asset also. Correct? Now what I have to do? Capitalize the cost of the new turbine, add, and what to subtract? The value of the old turbine. But I have to find out the depreciated value of the old turbine. No? Now my question is, do you know what was the cost of the turbine at the end of year 0? Have they given a? No. If they had given, I would have taken that. Or if I'm able to estimate what can be the cost that I would have taken that. Can I do that? No. But then what? Third option. They have given what is the cost. We know that what is the cost of new turbine today. How much it is? 45 lakhs. I'll take it 6 years back. Because this is happening at the end of 6 years, no? So how to bring it to present value? 45 lakhs into 1 by 1 plus R you have to take. What is the R that I have to take? They have only given the rate here, no? How much is the rate? To discount you are supposed to use rate 5%. So 1 plus 0.05 to the whole power n. How many years I have to go back? 6. So find out. 1 by 1.05 to the whole power 6. So it's 33 lakh 57,000 969. Okay. Now this is the cost of the old turbine when at the end of year 0. Alva? But we are doing replacement when at the end of 6 years. For 6 years this will be depreciated, no? So please do depreciation minus. Have they given depreciation rate? No. That means we'll do SLM. So 3357,969. What is the useful life of this thing? 6 years, no? Since useful life is 6 years, useful life, they have told something else. Wait, we'll see. The remainder of the machine is perfect. Next to 4 years. See, they are telling the life of this turbine which we are replacing still has economic life of 4. Already how many years elapsed? 6. Still we have 4. So total useful life is 10. So divided by 10 into how many years is elapsed till now? Into 6 years. $20 lakhs. This is the carrying amount of the old turbine. Subtract 3357 minus 2014. Atha neeve reduced helidra. Reduced alala. So what is the carrying amount? 1343. 197. Okay. This is what? Tell me the carrying amount today of the old turbine. Now this is the value I will subtract. And what will I add? 45 lakhs, which is the cost of new turbine. All of you understood? Now let's see the working. See, when I bought it, it was 1 crore. When are we doing the replacement? After 6 years. So let me give depreciation for 6 years. 1 crore divided by 10 into 6. What is the depreciation? 60 lakh. Right now when we are doing the replacement, what is the value of the machine? 40. From 40, I will reduce 13 lakh 43 and add back 45. So the carrying amount is 71 lakh 56 840. All of you understood? If you don't know the cost of the part, what will you do? Take today's new part, present value madkoli to that day, that is the cost. So that cost is depreciated till today. That is what is the carrying amount of the old part which you will remove, and then you will add back the value of new part. All of you understood? Done. So let's go to the next standard. Okay. So done with AS10. Next we'll go for let's go for AS16. Borrowing cost. Okay, one of my favorite standards. So what is borrowing cost? It is very related to PPE only. Now it's not only very related to PPE. Now say suppose you have acquired some asset. Now the question is, can I capitalize the interest to the cost of the asset? Alva? If that is the question, you cannot go to the respective standard. AS16 talks specifically about borrowing cost, correct? No? Can I capitalize this borrowing cost to the cost of the asset is the question. Whenever that is the question, you will automatically come to which standard? AS 16. First one, when I say borrowing cost, what all will come? Only interest, No, borrowing cost is a wide term. Borrowing, by taking a borrowing, what all cost you are incurring? No, all that will come under borrowing cost. One of the major borrowing cost that we know is interest. Some other examples? If we are talking about loan, then for loan we'll pay processing fee, etc., etc. All these are what? Borrowing cost only. Aita? Say suppose you have issued debentures. For debentures every year you will pay interest, that is okay. Say suppose you are redeeming these debentures at a premium, or you have issued these debentures at a discount. Now that is also cost to you, know. Is that also considered as borrowing cost for AS 16? Yes. If you issue debentures at discount or redeem them at premium, that cost is also borrowing cost. It's not only related to interest. All of you clear? Then, sir, this capitalization of interest can be done only for PPEs, it can be any asset. Okay. Say suppose you have inventory. On inventory you want to capitalize the interest cost. Is it possible? Yes. It's not only for PP, it can be interest. The criteria here in AS 16 is whether an asset is a qualifying asset or not. If it is a qualifying asset, we can capitalize the interest. Be it PP, be it inventory, I don't care. Inventory, no, in case if it becomes qualifying asset as per AS 16, you can capitalize. Now the question is, what is a qualifying asset? A qualifying asset is an asset which takes substantial period of time to get ready to use. Substantial period is what? As per the standard, the guidance they have given is 12 months. If a particular asset takes 12 months to get ready, then it becomes a qualifying asset. Then you can do capitalization of interest. When I say capitalization of interest, what do you understand? I can add interest to the cost of the asset. It can be inventory also, PP also, I don't care. What is the criteria here? It should be a qualifying asset and it should take substantial period of time. Are we clear? See, they are telling, when I say borrowing cost, even exchange differences is also borrowing cost, is what they are telling. Exchange difference andre now. I have taken a foreign currency loan. Correct? When I took the loan, it was, dollar was 80 rupees. By the end of the year, it has become 100. Is it a loss or profit to me? I have taken a loan when the rate was 80 rupees per dollar. Now the loan has become, now the rate has become 100 rupees per dollar. So I'll have to end up repaying more, no? So for me it is a loss. So that loss is also considered as borrowing cost for the purpose of this accounting standard. Okay. So I purchase a car. Is that a qualifying asset? Can I capitalize the interest? No. Why not? Car is available just like that, no? Is it taking substantial period of time? No. That means you cannot capitalize the interest. Construction of a building? Yes. That takes substantial period of time. Okay. Now this is a very important discussion. Now before coming to it, this we'll read, okay? The other parts will come back. When to start capitalization? Now a very important point. Most of the students ignore, but you focus. When to start this capitalization of interest? The moment I take loan, interest is started to charge, alva? Now will I start capitalization from that day only? No. AS 16 has given us 3 conditions. Only when these 3 conditions are satisfied, you can start capitalization. First one, the capitalization of borrowing cost should commence when all the 3 conditions are satisfied. First, expenditure on the qualifying asset should have started, and then you should have started incurring expenditure. Incurring a word use madirbodu, but most of the times how they do is, you should have started paid the money. Money na kharchu madake. You should have already spent the money. You should start spending the money. Once you start spending the money, then only the capitalization of interest also starts. Sir, I have not spent even one single paisa. Then till that point, capitalization will not start. But sir, till that point we will pay interest to bank, no sir. That you put it to T&L as expense. Until you have not started to spend the money, capitalization cannot start. Second condition, borrowing starts are being incurred. Andre, interest meter should start. Of course, the moment you take loan, interest meter will start. Okay. Third, activities that are necessary to prepare the asset for its intended use should have started. Okay, you have started spending the money. Has the construction started? That you have to see. So once you have spent the money, okay, spending money is one criteria. The construction activity also should have started. All of you understood? Andre, laying foundation, etc., etc. They should have started with the construction. One important point is, these activities encompass more than physical construction. So, sir, you told the activities related to construction should have started. Anta. Literal construction, no. They are telling, if there is any technical and administrative work prior to the commencement of physical construction, that is also considered as the activity, construction activity. For example, what they are telling is, you have started spending the money. Now still the planning, all that, literal construction has not started. Maybe you have gone for taking approvals from BBMP, or you are working towards building a plan. Okay, they are telling that is only considered as starting of activity. Physical construction of the asset is not required. Alva? ನೀವು ಅಪ್ರೂವಲ್ಸ್ ತಗೊಳಕ್ ಹೋಗಿದ್ದೀರಾ ಅಂದ್ರೆ, ಅಥವಾ ನೀವೇನೋ ಒಂದು ಅಡ್ಮಿನ್ ವರ್ಕ್, ಟೆಕ್ನಿಕಲ್ ವರ್ಕ್ ರಿಲೇಟೆಡ್ ಟು ದ ಕನ್ಸ್ಟ್ರಕ್ಷನ್ ಮಾಡ್ತಿದ್ದೀರಾ ಅಂದ್ರೆ, ದಟ್ ಇಟ್ ಸೆಲ್ಫ್ ಇಸ್ ಕನ್ಸಿಡರ್ಡ್ ಆಸ್ construction activity. Literal physical construction activity start ಆಗಬೇಕು ಅಂತ ಏನಿಲ್ಲ. All of you understood? Okay, these three conditions should be satisfied. Condition 1, very important. Expenditure, you should start spending money on the construction. Literally money should have gone out. Second, borrowing costs incur ಆಗಕ್ಕೆ start ಆಗಬೇಕು. Third, the construction of the asset activities should have started. That construction includes this other technical and admin work also, not only the physical construction of the asset. Okay, when these three things muru adaga, I will start my capitalization. Okay, then they have told suspend andre pausing of capitalization. Andre, when will you pause capitalization of interest? They are telling capitalization of borrowing cost is suspended when the active development is interrupted. Active development of the asset, maybe you are doing the construction or development of the asset, no, that has stopped. If that has stopped, even the capitalization of interest should stop. Okay, something happened and you have stopped the construction, capitalization also should stop. One exception we have, capitalization is not suspended during a period when the substantial technical and administrative work is being carried out. Now you have taken a pause, but that pause is because of some technical work or administrative work which is necessary for construction. And the construction is necessary agiruvanta admin work, adakke you have paused. Then interest will not suspend. Or maybe you have suspended the construction activity because of the construction process. Now for example, when you are building first floor, second floor, third floor, before going to second floor you have to wait for 15 days for the first floor mold to get dry. Without that you cannot go for second floor. Now you will wait for 15 days. Will you suspend the capitalization? No. That 15 days is necessary for construction. We will keep the capitalization continued. ಅದಕ್ಕೆ ರಿಲೇಟೆಡ್ ಕನ್ಸ್ಟ್ರಕ್ಷನ್ ರಿಲೇಟೆಡ್ ಆಗಿರೋ ರೀಸನ್ಸ್ಗೋಸ್ಕರ ಇಫ್ ದ ಕನ್ಸ್ಟ್ರಕ್ಷನ್ ಇಸ್ ಸಸ್ಪೆಂಡೆಡ್, ಯು ಕಂಟಿನ್ಯೂ ದ ಕ್ಯಾಪಿಟಲೈಸೇಷನ್. ಕ್ಲಿಯರಾ? ಅಂಡ್ ಸೆಸೇಷನ್, ವೆನ್ ವಿಲ್ ಯು ಕ್ಲೋಸ್, ವೆನ್ ವಿಲ್ ಯು ಸ್ಟಾಪ್ ದ ಕ್ಯಾಪಿಟಲೈಸೇಷನ್ ಆಫ್ ಇಂಟ್ರೆಸ್ಟ್? ಒನ್ಸ್ ದ ಕನ್ಸ್ಟ್ರಕ್ಷನ್ ಇಸ್ ಓವರ್, ಆರ್ ಸಿ ದ ವರ್ಡಿಂಗ್ ದೇ ಹ್ಯಾವ್ ಯೂಸ್ಡ್ ಇಸ್ ಸಬ್ಸ್ಟಾನ್ಷಿಯಲಿ ಆಲ್ ದ ಆಕ್ಟಿವಿಟೀಸ್ ಆರ್ ಓವರ್ ಅಂತ. ಓಕೆ, ದೇ ಆರ್ ನಾಟ್ ಎಕ್ಸ್ಪೆಕ್ಟಿಂಗ್ ಯು ಟು ಫಿನಿಶ್ ಕಂಪ್ಲೀಟ್ಲಿ. Maybe 95% of the building is over and it is ready to use. You can still stop it. 100% completion they are not expecting. Substantially, maybe more than 95%, if you have completed the construction, you can stop the capitalization. Aita, all of you. Now one more question. We are constructing the building. First floor is completely available, full. Now you can rent it out to others. Second, third floor is still under construction. Now my question is, should I stop the capitalization or continue? My intention is to build 4 floors. Continue. Why? Because the second, third floor is still happening. Anta. What they are telling? No. They are telling to the extent of first floor, you stop the capitalization. For second, third, fourth, you keep the capitalization continued. Proportionate borrowing cost, you have to stop the capitalization. And the first floor sambandhapattid matra stop mabadi. Second, third, fourth still happening. No. Continue that capitalization is what they are telling. See, when the construction of the qualifying items is completed in parts, and a completed part is capable of being used while construction continues, and you can rent it out if you want, the first floor, then you can, the capitalization of borrowing cost in relation to the part should cease. And then you should stop only for first floor, remaining you have to continue. All of you understood? So that's about capitalization. Okay. Now this is very important point. Exchange differences. Is exchange differences also borrowing cost? Yes. But they have certain rule for this. Okay. Now let's understand this rule. Say suppose I have taken a foreign currency borrowing which is about 1 million. $1 million, and when I took the borrowing, the rate was say 70. Aita. And you know, as per AS11, if it is a monetary item, at the end of every year we will do the restatement. Remember? Now say suppose that the loan we know it's a monetary item, and at the end of the year, say suppose it has become 90 rupees. Aita. Now what is the forex loss that I am facing? Beginning it was 70, now it has become 90. Is it a loss? Yes, 20 rupees is the loss. 20 into 1 million. How much is my total loss? 20 million rupees. That's why you can call it 2 crores. In rupees. All of you understood till here? This is my loss, no? When I took the loan it was how much? 70. At the end of the year it has become 90. 20 rupees is the loss. 2 crores is the loss. Which as per AS11 we will transfer it to P&L. But AS16 told no, you can capitalize this 2 crores. Now entire this 2 crores you can capitalize. Was the question. They have a limit. Okay, what is the limit? The limit for this is, see, where is it? Amount of exchange difference not exceeding the difference between interest on local currency borrowings and the interest on foreign currency borrowings is considered as the borrowing cost to be accounted for under this standard. The maximum difference is interest on local currency and the interest on foreign currency. The difference between that is the maximum cap. So I'll tell you, wait. Okay, 2 crores is our loss, no? Understand like this. Now since I have taken this borrowing, okay, I would have paid interest, I should pay every month interest, no. Say suppose on the loan that I have taken interest, the interest rate is 5%. How much interest I will pay? 1 million into 5%. Aita, how much? 5% of 1 million is 50,000. But this is in dollars, no? You will pay it in dollars. For us, we have to incur rupees, no? So how much? I will convert it at how much? I would have paid interest at the end of the year. Correct, no? At the end of the year, how much is the rate? 90 rupees. So into 90. That means, in terms of rupees, how much interest did I pay? It is. So can I say that this is the interest on foreign borrowing? Aita. Now what the A16 is telling, calculate the interest on local borrowings. Andre, if at all you had taken the loan in India, in Indian rupees, okay, how much is the interest you would have paid on that? Okay. Now if I had taken loan in India, the rate in India is of course, there 5%, alwa. In India it will be, say, rate is 8%, okay. And how much is my loan equivalent? The loan I have taken is 1 million. When did I take? The beginning of this year. Beginning of the year, what was the rate? 70 rupees. So into 70. This becomes 7 crores. That means what they are telling is, if at all I had taken loan in India, I would have taken loan of 7 crores. And what is the interest I would have paid? So into 8% ಎಷ್ಟು ಬರುತ್ತೆ? It comes to rupees. Correct? This is the interest on local borrowings. All of you understood? What is the difference between foreign borrowings and local borrowings? there is 11 lakhs. All of you understood till here? They are telling out of your forex loss of 2 crores, you can capitalize only how much? 11 lakhs. The difference between interest on local and interest on foreign currency borrowings. Okay. Now, totally how much you are capitalizing? Whatever interest you have paid, that you will capitalize. How much is the interest that you paid actually? 45 lakhs. So 45 lakhs you capitalize. Plus foreign currency borrowings, loss, how much you'll capitalize? 11 lakhs. So total you are capitalizing. See, this 56 lakhs is coming to this only now. Correct? So basically what is A16 trying to do? No matter what you are capitalizing, interest or forex difference, I don't care. It should not exceed the amount of interest that you would have paid if you would have taken a India loan. ಏನಾರ ಮಾಡ್ಕೊಳ್ಳಿ. ಆದರೆ ಇಂಟ್ರೆಸ್ಟ್ ಫಾರಿನ್ ಕರೆನ್ಸಿ ಎರಡು ಸೇರಿ ಇಂಡಿಯಾದಲ್ಲಿ ಲೋನ್ ತಗೊಂಡಿದ್ರೆ ಎಷ್ಟು ಇಂಟ್ರೆಸ್ಟ್ ಪೇ ಮಾಡ್ತಿದ್ರಲ್ಲ ಅದ್ರ ಮೇಲೆ ಹೋಗಂಗಿಲ್ಲ. ಸಿ ಟೋಟಲ್ ಅಲ್ಟಿಮೇಟ್ಲಿ ಕೇಮ್ ಟು ಹೌ ಮಚ್? 56. Okay. Sir, then out of this 2 crores, only 11 lakhs you capitalize. Remaining where it will go? It will go to P&L. All of you clear? Any doubts? Done, no? So the amount of forex, whatever difference is there, no, there is a cap. What is the cap? The cap is difference between interest on foreign currency and interest on local currency. Our difference anyway, that is the maximum that is allowed for the foreign currency difference. All of you understood? Clear? Very important point. Then we have something called as specific borrowing and general borrowing. Okay, very important. Specific borrowing is what? This is the borrowing that you have taken for the purpose of this activity. Say suppose I am constructing a qualifying asset. I have taken loan for the construction of qualifying asset. That is a specific borrowing. General andre, it is a borrowing that is taken for normal purposes of the business. It does not have any reason. I have just taken, like best example for general borrowing is OD. I have just taken it. The reason is not specified. These are what? General borrowings. And if you have taken for the sake of it, it is called specific borrowing. Okay. Specific borrowing is very simple now. Whatever interest you would have incurred, that you will capitalize. Because this loan is taken for the whole and sole purpose of this construction of qualifying asset. So whatever interest you are paying towards specific borrowing, it will be capitalized. Provided the 3 conditions are satisfied. Okay. Now let's discuss a little bit about this. Fast. Okay, now let's talk about specific borrowing. Okay. Now say suppose I have taken a loan of say 10 lakh rupees. Is it specific borrowing or general borrowing? Specific borrowing. Say the rate is 10%. I have taken it at the beginning of the year only, that is say April. Okay. But we know that capitalization can start only when all the 3 conditions are satisfied. Correct? So the conditions were satisfied on June, 30th to June. That means, but I would have paid the interest for entire 1 year, no, into 12 by 12, because the loan, when did I take the loan? I took the loan on April. The conditions are satisfied in June. So capitalization will start from June. So how much will you capitalize? 10 lakh into 10% into ಎಷ್ಟು? 10 30th June April, May, June andre 9 by 12 will be capitalized because 3 conditions were satisfied when? On June. Sir, what about the 3 by 12 here? First April, May, June. That will go to where? Capitalize No, that will go to P&L. So how much? 1 lakh. 1 lakh into 3 by 12 andre 25,000 will go to P&L because 3 conditions were not satisfied. It only satisfied on 30th June. So 75,000 will go to and will be capitalized to the cost of qualifying asset. Will be added to the cost of qualifying asset. All of you understood? Now during this time, what happened? No, you took the loan on 1st January. And say suppose the 3 conditions also got satisfied on 1st January only. But what you did was 10 lakh you don't need now only. So out of that maybe some 3 or 4 lakhs you have invested somewhere. And you are getting that money. What will you do? It's an income, no. 10 lakh only 4 lakh you are using, 6 lakh you have invested it somewhere and you got that interest. What will you do about this interest? We will reduce it from the borrowing cost. Aita? It will not be treated as income, it will be reduced from borrowing cost. This point what I told now about temporary investment, this is applicable only for specific borrowing. This is not applicable for general. General borrowing, if you invest somewhere, you cannot reduce the borrowing cost because it's general borrowing, it can be used for anything. So this is applicable only for specific borrowing. All of you clear? Very simple. Now if you come to general borrowing, no, general borrowing is a headache. Aita? Now we will be having various general borrowings, some 3-4. Say you have 3 to 4 general borrowings. Okay. Each borrowing has different rates. Now what to do? Which rate to take? What we have utilized. Correct alva? Now different loan is general borrowing. General borrowing it is not specific. It is not taken for the purpose of construction of qualifying asset. I have 4 different loans and 4 different loans have 4 different interest rates. Which rate shall I take for capitalization? You have to take weighted average rate. All of you understanding? So to understand best as to how to do general borrowing, let's solve one question we have in RTP. With that only we'll understand how to do it. So an RTP September 25 question is there. It's a small question but very important for understanding. Okay, let's see. Is it permissible to capitalize borrowing costs incurred on assets which are necessary for the construction of qualifying assets? A company is in the process of constructing a large manufacturing plant in a backward area. As a part of this project, it has also purchased a residential building which is to be used for housing the workers engaged in the construction of the plant. The purchase cost of the building is met by raising a long-term loan. The company intends to dispose of the building once the construction of the manufacturing plant is complete. If the manufacturing plant meets the definition of a qualifying asset, would the borrowing cost incurred on the funds borrowed to purchase the residential building will be eligible for capitalization? You understand the question? Here I am building one bigger asset. For that we need laborers. For laborers living we need a residential building. To build this residential building for the laborers, we have taken a loan. Now the question is, can I capitalize that interest? Yes or no? Why not? Correct. She has one valid point. We are not constructing, sir. It is already built. So it's not a qualifying asset, so we cannot earn. Yes. See, going by the definitions of AS 16, definitely yes, it is not a qualifying asset. So technically you cannot capitalize the interest. But see the bigger purpose. Why am I doing all this? For a ultimate construction of a qualifying asset itself, no? So it's directly related to that construction, not only this. Don't see that mere building which we have purchased. Why is it purchased? For a bigger purpose, for construction of a large manufacturing plant. That is a qualifying asset, and since this is directly attributable and related to that process. So how do you know it's directly attributable? Because once the construction gets over, this building will be demolished, and the one and only purpose of this purchased building is what? For the purchase of the, for the construction of the bigger plant. Henceforth we have to capitalize it. Very nice question. See, accordingly the company should capitalize part of the cost of the manufacturing plant borrowing costs incurred on funds borrowed to acquire the residential building. It should be capitalized. For which period? For the construction period of the larger plant. Did you understand? Technically it was a bouncer because the purchase of a building is not a qualifying asset, because it will not take substantial period of time for construction because you purchased it off. Yes, it is not a qualifying asset, but the bigger asset is a qualifying asset, and this building is taken for sole purpose of that. All of you understood? So question number 2. X Limited is commencing a new entertainment park which is to be financed by borrowing. The said park consists of several rides and facilities, each of which can be used individually. Very important point. What did they tell? These several rights and facilities can be used individually. The key dates are as follows. On 1st May we took the loan of how much? 15 lakhs. On 2nd June technical site planning has started, the site planning of the park. Expenditure we have started to incur on 1st July. 18th July the construction work started, physical construction. If the new construction project is considered to be a qualifying asset, when should the capitalization commence? First answer to this question. Out of the 4 dates, capitalization yavaginda start ಆಗಬೇಕು? All the 3 conditions should be satisfied. So it is. So question number 1, have we started to incur interest? Yes. Question number 2, have we started to expend the money, spend the money? From when have we started? From 1st July we have started. So by 1st July, second condition also satisfied, first condition also satisfied. Third one, when has it started? It is 2nd June. Physical construction started from 18th July, but what did I tell very clearly? That includes technical and administration stuff also, which has already started by 2nd June. That means, to be compliant, when should the capitalization start from? 1st July. Because on 1st July only all the 3 conditions are satisfied. All of you clear? Later in the next year, being 2024, 3/4 parks of the park has been constructed by 31st of July and will be open for public on 15th August to mark Independence Day. Okay. See, what did they tell? In the next year, which is 2024, 3/4 of the park has been constructed by 31st July. The 3/4 park completed. 1/4 of the park we are still constructing. Initially in the question they have given one hint. Each rights can be utilized independently. Independency law. The construction on the remaining part is continuing. X Limited wants to capitalize the eligible borrowing costs incurred up to August. Is it justified? Also you must note that the company had stopped constructing the park for the month of May in 2024 due to the issues in the local area with respect to park. Tell me, what should I do? First year we are clear. Which this year. We will start capitalization from 1st July. When will this year end? Next year being 24. So maybe this is 23 and 31st March 24. So till 24 though we have no problem. Aita? So 24, how much is the interest? How many months? 7 in the next month idike. 4, 5, 6 and it should be. What is missing? 1st July. This is 8 months. But 2023 why they have taken? Okay, from 1st July. Andre April, May, June. So 3 months are over by June. Oh, 9 months, correct. Okay. I'm seeing this for some reason. Okay. So how many months we have from 1st July to 31st March? April, May, June. So 9 months. 3 months agide 9 months. So for 9 months we can capitalize. So see here. How much we have spent till then? Oh, good. That part. Okay. So the question is, how much is the loan that I have taken? It's 1 lakh. This is very important point which you have to understand. 9 months agamel barana. The question was, is the money utilized for the full entire period? See, there is one thing you have to remember in borrowing cost. Okay. How much is the loan that you took? 15 lakhs. Now what you will do, sir, 15 lakhs is the loan taken. Directly I'll apply 10% for 9 months. And I will capitalize that number. Anta you will do. Correct, alva? 9 months is the period because 1st July till 31st March. You cannot do 9 months directly like that because this 15 lakhs, 10% per annum. No, this is for per annum 15 lakhs. Aita? Are you paying interest for full annum? No. You took this loan only when? 1st May. That means funds are available to you only for 11 months. You're understanding? So directly I cannot take 15 lakhs into 10%. Not possible. Because I got this loan only on 1st May. So what will I do? 1st May in the 31st March, how many months? 11 months. So take 11 by 12. So what is the fund you have? 1,37,500. Okay, this is what you have used. On this 1,37,500, now what you can do? This is the total interest, correct na? In this 11 months interest, okay, you can capitalize how much? 9 by take 11, or directly do 9 by 12 also, which should be okay, but I want you to understand the difference. Even if you do like this, you'll get the same answer. 15 lakhs into 10% into what is our period? 9 by 12. How much you'll get? See, 1 lakh. Don't do all this nonsense, it's okay. Do it like this only. 15 lakhs into 10% is the specific rate into why 9 months? Because our capitalization can start only from 9th month. Here it will not matter. Here it is a specific borrowing. So doing directly doesn't matter. When it is a general borrowing, no. What calculation they have given, that matters actually. We'll see it in the next question. Wait. So all of you understood now? For 9 months we have capitalized 1,12,500. Next what they have told? Later in the next year, being 2024, 3/4 of the park has been constructed by 31st July. Andre, from 31st July, on 3/4 of the park, capitalization should stop. From when? From 31st July. Andre, for first 3 months, interest can be capitalized fully. After 3 months, on 3/4 I cannot. That means I can capitalize interest only on 1/4. Okay? So see here. So total interest that I will pay in the next year is how much? 15 lakhs into 10%. So total will come to 1,50,000. Here, one more thing we should not forget. In the end, they told one dialogue. Also, you must note that company had stopped constructing the park for the month of May due to the issues of local area. What did we understand? If the construction stops, capitalization should stop. Construction has stopped for what reasons? Construction reasons. No, other than that. That means for 1 month I cannot capitalize. So what will I do? Out of that 1,50,000, for 1 month you remove. So 1,50,000 into 1 by 12, how much? 12,500 I will immediately remove because during that period construction did not happen. If construction has not happened, I cannot capitalize. Aita? Next, remaining what I have to remove? From July, on 3/4 of the project, I cannot capitalize the interest. Correct? So total is 1 lakh and 15 lakhs anta tagoladadre into interest comes to 10% into 3/4 because 3/4 stopped. For entire year, no. For April, May, June, we have to charge. From July it has stopped. Andre remaining 9 months. This I cannot charge. I have to remove it. 31st July. By 31st July. Andre 8 months. So 31st July andre April, May, June, July. 4 months is gone. Remaining is 8 months. So it comes to 75,000. So that 75,000 also I cannot touch. So remaining is 62,500. That can be capitalized. So there is one more way of arriving to this number. I thought they have done ulta. They have taken total and they have subtracted all the not required items. You can do the direct approach also. Okay. I think this is only simple. So this is the interest that you have incurred for total year. Full you can charge full you can capitalize as interest. No. For 1 month you cannot touch because during that period construction was halted, suspended. Then in this 12 months, until 31st July, can I capitalize full interest? Yes, because the construction was still happening. But for remaining 8 months, what happened? 3/4 was completed by 31st July Adrinda. For remaining 8 months, for the 3/4 part, I cannot capitalize interest. That's why I have subtracted that also. See, 15 lakh, 10% for the 3/4 part. For the remaining 8 months, I cannot capitalize. That also I have subtracted. Okay, remaining 62,500. That can be capitalized in the next year. All of you understood? So let's go to the next question. So this is very important. It's about general borrowings. Focus. Now H Limited began the construction of a new building on 1st April 2022. It obtained a special loan. So is it a specific borrowing or general borrowing? Special loan for the purpose of construction. It's a specific borrowing. What is the rate of this specific borrowing? When did we take? At the beginning of the year only. What is the rate of this specific borrowing? 12%. Specific borrowing, no headache. General borrowing is the headache. The company's other outstanding to non-specific and what you have to understand, general borrowings, how much it is. We have some 20 lakh borrowing that has the interest of 14. 54 ಇನ್ನೊಂದು ಯಾವುದು ಇದೆ that has the interest of 6. We are utilizing it from the beginning, and this is existing, loan is existing from the beginning of the year. ಅಂದರೆ ಮುಂಚೆಯಿಂದನೂ ಇದೆ. At least from beginning of the year it is there. Okay. Now should I take, see, for specific borrowing I will take 12%, no doubt. For this general borrowing should I take 14% or should I take 6% was the question. Aita? How to do it is, first you have to see, when did I take this loan? Much before 1st April only, but is it active from the beginning of this year? Yes. This also, is it active from the beginning of this year? Yes. And completely I am using 2020, no doubt. So what you will do is weighted average you have to do. Okay, how to do weighted average? Calculate the interest. 20 lakh into 14%. What is the interest? Now one small change, since we cannot do more questions, I'll tell the change here only. If at all I had taken this loan on 30th June ಅಥವಾ 30th September, ಅವಾಗ ಏನು change ಮಾಡ್ತಿದೆ? The loan is taken on 30th September. So what you have to do is, you cannot apply this entire math for 20 lakhs because when did you take the loan? The loan was only taken on 30th September. That means you are using this fund only for 6 months. So into 6 by 12 ಮಾಡಬೇಕು. So you will take 10 lakhs. So then you will do 10 lakhs into 14%, it comes to 1 lakh 40. This is what you would have done if you had taken the loan in mid of the year. But here we are not taking the loan in mid of the year, both are beginning. So I am taking for full year. Aita? Then do the same thing for here also. 54 lakhs into 6%. 3 lakh. So total interest comes to. So now calculate the interest rate. Interest divided by total loan. 6 lakh 4,000 divided by total loan comes to. So it comes to 8.16. Something general. We are getting 8.16%. 30 lakhs into 14%. They have taken 30 in the question. They have taken 16%. This is 16, huh? Oh yeah. This should be 16%. And also this amount of loan they have taken 30 lakhs. See here. So make this 30 lakhs. Aita? To keep the question and answer aligned, okay? Now, what is the answer? This 54 lakh into 16% comes to 8 lakh. And this one? 4 lakh. 30. Okay? Now do the interest by amount of loan. So ಇದು 30 ಆಯಿತು ಅಂದರೆ ಇದು 84 ಆಗುತ್ತೆ. And total interest is 12 lakh. What is the interest rate? So the weighted average rate that you have to use for general borrowings is 15.29%. All of you understood? So the first thing is you have to calculate this is the rate I'll use for general borrowing. Now the expenditure incurred on the building. Now that is the loan part, source part. Aita? Now source part we have thought. Now let's see the application part. Out of the money that I have got, what I have done? On 1st April I have used 12 lakhs. On 1st July I have used 15. On 1st October I have used 27. On 1st March I have used 7 lakh 20. It's used at different stages, no? Entire total, now whatever total comes, have I used it on 1st April only? No, I have used it over the time. So directly I cannot take the effect. So what I'll do is, I'll take proportionately. How to do this? Now first, 12 lakhs is used. It's used for how many months? If I've used it on 1st April andre, for the entire year I've used it. So 12 lakhs into what I'll do is, next come to 15 lakhs. Is it used for entire 12 months? No. From 1st to July, April, May, June, I've used it for 9 months. So 15 lakhs into, similarly 27 lakhs is used for 6, October, November, December, Jan, Feb, March. Last one, only for 1 month. This is the amount that I will use for capitalization. Okay. This is 12 lakhs only. This is 11 lakh. This is 13 lakh. 60 ah? 60 or 50 ah? Next one is, that is the money that I have used. Okay, what is the money that I have used? Add it. 12 plus 1125 plus 1350 plus 60. It will come to 37 lakh 35,000. So this is the money that I have used, weighted average money. Will I apply the general borrowing rate on the entire 3735? No, I already have some specific borrowing. No, first I will use it off. How much is the specific borrowing that I have? 6 lakh I have taken it on 1st April only. I will subtract that first. Minus. So remaining is, on 31 lakh 35,000 I will apply my, because 6 lakhs is funded from where? Specific borrowing. So I will apply that rate. Remaining is funded by general borrowing. So I will apply this rate. So 31 lakh 35,000 into 15 point into is equal to. So how much is your? 342 is the interest on general borrowing. How much is the interest on specific borrowing? So it is 6 lakhs into rate is 12%. So 6 lakh into 12%, 7 lakh. Sorry, my bad. It is 72,000. So I will add that also. So what is the total interest that you will capitalize? This is the total amount that you will capitalize. Specific borrowing is simple. When did you take? 1st April. It is outstanding for the entire 12 months. So 6 lakh into 12%, 72,000. Remaining general borrowing. You understood how? What did we do for general borrowing? Find out weighted average rate. Then find out weighted average spend. To that spend amount you have to apply the percentage. Weighted average rate, weighted average spend. Okay? All of you clear? Done na? Now we have some more questions. This is okay, we'll see later. This one question is very important. Okay, we'll do it. Loyal Limited has undertaken a project for expansion of capacity as per the following details. This is one crazy question. It was asked in RTP September 2024. Okay, nice question. Try. See, Loyal has undertaken a project for expansion of capacity as per the following details. See, one column is talking about plan, one more is talking about actual. Plan and the budget, actual and the actual spend. Which will we take for our computation? Plan or actual? Huh? Of course actual, no. Plan ena madre nanige nakkedu. I am paying interest on actual spends. So we will consider actual. Plan is given, biscuit. Don't consider plan, actual. The company pays to its bank interest at a rate of 15%, which is debited on monthly basis. During the half year, the company had 20 lakh rupees overdraft. So here we are talking about overdraft. Company has overdraft. All of you know what is overdraft. Bank will give an ability to overdraw your account. Is it specific borrowing or general borrowing in nature? It is general borrowing. Clear? See, during half year, company had 20 lakh overdraft up to 31st December. Surplus cash in January and again overdraft of 14 lakh from 1st February. Did you understand? In a year, till December, how much overdraft negative balance I had? Throughout December, I had a negative balance of 20. Suddenly in January, I had excess cash. I hope you know how bank overdraft works. Negative balance irata. If someone puts money to your bank account, automatically it becomes positive. Negative 20. Someone has put some 25 lakh rupees into your account. What will be the balance of your account? 5. Till December it was 20. Suddenly in January, maybe someone has put the money, it has become surplus. Now that it is in surplus, do you think in that month interest will be accrued? No. Only whenever the overdraft balance will be negative, during that time interest will be accrued. Aita? Whenever the balance is positive, interest will not be accrued. Okay. And again overdraft of 14 lakh from first year. Again January positive with, from February the balance has come to 14 lakhs. And again in March the balance has become 30 lakhs negative. Aita? The company had a strike during December and hence could not continue the work during the said period. However, the substantial administrative work related to the project was continued. So understood what happened? Company had a strike, it seems it is stopped. Okay. But some substantial administration work has taken. So what should I do? Should I suspend the capitalization or should I continue the capitalization? Why? See, it is stopped because of a strike only. I thought during that time they have done a what? Administrative work. So technically, in that period we have to suspend the capitalization. Wait, we'll see. See, as per AS para 18, capitalization of borrowing costs is not normally suspended during a period when substantial technical and administrative work takes place. Therefore, the interest for that period, for the month of December, has also been capitalized. So since the substantial technical work is happening during that day, see, first they had told strike. If they had told strike and if they had not given administrative work, during that time you have to suspend. Because that line they have given administrative work, it is allowed, it is treated as construction, you can continue the capitalization. Okay. Anyways, next. On-site work was again commenced on 1st January and all the work were completed on 31st March. Okay. So for what period it was suspended? December, 1 month. Assume that the expenditure was incurred on first day of each month. Calculate interest to be capitalized, giving reason wherever necessary. And very important point, assume overdraft will be less if there is no capital expenditure. And then what do you understand from that last line? Assume overdraft will be less if there is no capital expenditure. Andre, if at all you have large balances in overdraft, it is used for construction. Did you understand the point? If at all you have huge balances in overdraft, it is used for construction is what they mean by that last line. Arthaida? Okay. Now how much is your overdraft rate? 15%. So for all the 6 months they have given us the spends. I will take only actual. I will not consider plan at all. Aita? So on October 1st I have spent how much? 4 lakh. Aita? What is the interest rate? 4 lakh into 15% into only 1 month I am taking until next month. Okay. So into 1 by 12. How much is the interest? 5,000 for 1 month. Can I capitalize the interest? Yes. Now what is your total outstanding amount? 4 lakh plus, please understand, overdraft account works like this. The interest is charged to the overdraft only. Later when you pay, it will be paid off. So that's why the outstanding amount has come to 4 lakh 5. Okay. Yeah? Now total outstanding amount is 4 lakh 5. Now that will be carried. 4 lakh 5. Again in November how much did you spend? In November I have spent 7 lakh 95. So 4 lakh 5 plus 7 lakh 95. Total becomes how much? 12 lakh. 12 lakh into 15% into how many months? I'll take only 1 into 1 by 12. So total interest comes to 15,000. That is capitalized. No problem till here. Now your total outstanding is 4 lakh 5 plus 7 lakh 95 plus interest 15,000. Guys, you're understanding why I'm adding interest to the outstanding amount? Because in overdraft, the interest is charged to the same account. Now that will also become liability, no? I thought it will not be paid like a loan. Now total outstanding is 1215. Again in December, did you incur anything? No, in December suspension happened. Strike happened. So nothing they have spent during that period. So that's why utilization is 0. But will I incur any interest for that period? You have an outstanding amount of 12 lakh 15,000, on that you will incur interest, no? So 12 lakh 15,000 into 15% into 1 by 12. So during the strike, how can we capitalize? It's okay, that substantial administrative work was happening. No, you can still capitalize. So interest is 15,188. Your total outstanding became 12,30,188. All of you understood? Next again, how much did you spend in January? Come here, in January we have spent 50. So add that, how much? 12,80 plus, sorry, 50,000. First, 12,30,188 plus 50. Okay. But I have not calculated interest only. Why? Because in January we had surplus balance. I told you how overdraft works, no? Whenever it is positive balance, interest will not be charged. So it is remained. So 12,30,000 plus total, how much I have spent? 50. So total outstanding amount is 12,80,000. Aita? Next again, February we again came back to the same circle. Aita? So 12,80,000 plus how much did I spend? 2 lakhs. So total comes to 14,80,188. But they have taken 14 lakh. Why? Because if you see, no, the balance in February, overdraft balance is only 14 lakhs. On 1st February, the balance is 14. If the balance itself is 14 lakh, how come you can capitalize interest for 14,80,000? Alva. So that's why they have capped it to 14. So I have calculated interest only on 14 lakh, 15% into 1 by 12. Interest is 17,500. So 12,80,188 plus 2 lakh is what I have spent, plus interest 17,500. Total outstanding is 47,688. Then again in the last month, how much I spent? 12. So 14,97,688 plus 12 lakhs will come to 26,97,688. Will I calculate interest on that only? Yes, because in the March month, the overdraft balance is 30 lakhs and my spend is coming to 26,97,688. We are within the limits. I will calculate interest on 14,97,000 plus 12, which comes to 26. Sir, but the overdraft limit is 30. Hey, our spend is only coming to 26,97,000. If the balance is 30 lakh, means they have spent it for some other reasons. Aita? Into 15% into 1 by 12. So 33,721, which will be capitalized. So total outstanding comes to 27,31,409. What is the total interest that you capitalize? This column, 86,409. All of you understood? In January we did not calculate interest only because it was surplus. Aita? In February we capped the maximum amount to 14 lakhs even though the spend was more than 14 lakhs. Why? Because the overdraft limit was only 14 lakhs. How can you pay interest for more? Aita? Ultimately when we came to March, we have taken the actual amount only because overdraft limit had gone to 30 lakhs. All of you understood point correctly? So done. Huh? ಏನೇನು 14 ಹಾಂ ಚೇಂಜ್ ಇತ್ತು ಅಂದರೆ ಯಾವ ಅಲ್ಲಿ ಗೊತ್ತಾಗ್ಲಿಲ್ಲ ಇದಲ್ವಾ ಹಾಂ ಚೇಂಜ್ ಅಂದರೆ ಕ್ವಶನಲ್ಲಿ ಚೇಂಜ್ ಆದರೆ ಅಂತ ನಾ ಈಗ ಆಯ್ತು ನಾನೇ ಒಂದು ಎಕ್ಸಾಂಪಲ್ ತಗೋದು ಈಗ 16 lakhs ಇತ್ತು ಅಂತ ಇಟ್ಕೊಳ್ಳೋಣ ಬ್ಯಾಲೆನ್ಸ್ ಏನು ತಗೋಬೇಕಿತ್ತು ನಾವು 12,80,188 plus how much I've spent in February? 2 lakh. So my outstanding is coming to 14,80,188. But my overdraft limit is 16. That means I can calculate interest on 14,80,000 completely. 15 ididre 14,80,000 ತಗೋದು. 14,50,000 ididre the overdraft limit. I would have calculated interest for 1450. Aita? Sir, we have spent 14,80,000 and we have balance of only 14 lakh. How come? Maybe we have some excess money in our account. That's why overdraft balance is becoming a little less. That is okay. But my borrowing cost, which I am capitalizing, cannot exceed the interest amount itself. No. So I know you have spent 1488, but that time the overdraft balance was only 14. So you would have paid interest only on 14. So take 14. Then March bandaga our spend was how much? 1497 plus 12 andre 2697 was our spend. I have calculated interest on 2697 only. Why? Because the overdraft limit is 30. Are overdraft limit 25 ididre? What I would have done? I would have calculated interest on only 25 though the spend was 26,97,000. Did you understand? Okay. So with that we are done with AS 16. Good question. There are chances that they will ask this because my favorite question. Okay. So let's go to the next standard. Okay. Let's go to which standard next? Let's go to AS 19. I hope we have AS 19 here. So let's come to AS 19, which talks about leases. Aitha? Again, one of the easy standards to score also. Aitha? So what is lease basically? Lease is basically you pay rent to a person and he is allowing you to use the asset for a period of time, and you are paying him rent. That is a lease. How will we account for lease is the question. Now as per AS 19 we have two kinds of lease. One is operating lease and one is financing lease. Operating lease is very simple, alwa. Now if I am paying lease, I am a lessee. The person who has allowed me to use the asset is called lessor. When I pay normal lease rent, for lessee it is a expense and for lessor it is a income. Normal, simple accounting. So operating lease ಏನಂತಂದ್ರೆ it's a normal lease. No need to apply our brains. Normal lease. For one person it's an expense. For one person it's a asset. Ashte. Accounting also is very simple for operating lease. Let's come to finance lease. What is finance lease? Finance lease, here we'll do our substance over form accounting. Aita? Andre, I know it's a lease agreement. People have shown it as a lease agreement, but in substance is it a lease agreement? No. It's a finance agreement. Okay. So that's why what will we do? We do separate accounting for operating lease and separate accounting for finance lease. So how to classify it as operating or finance lease? Say AS 19 has given us 5 conditions. If out of any 5 of these 5 conditions, if any one condition is satisfied, that lease will be considered as finance lease. Aita? So what are the 5 conditions? Condition number 1. See, first condition. Lease transfers ownership to the lessee by the end of the lease term. Okay. That means the lease agreement is in such a way that after the lease term is over, say lease term is for 3 years, and in the agreement they have written that after the lease term, the asset will be transferred to the lessee. That means what? For the lease term, you are a lessee. Automatically at the end of the lease, however the asset will be transferred, that means who was the owner all the while? It was lessee only, no? You're understanding? So if the lease agreement tells that the asset will be transferred in the end, it will be considered as finance lease. Second, we have given an option to the lessee in the lease, saying that, for 3 years, this asset I will give you on lease. At the end of the 3rd year, now I am giving you option, okay, to buy. And if you pay this much, you can buy the asset, and that option at a price sufficiently lower than fair value. And the option is in such a way that after 3 years, now the asset is say 3 years old. If you have to buy that 3 years old asset somewhere else, you have to pay 50,000. But in my agreement, I have allowed him to buy it at 20,000. Okay? Tell me, will he exercise it or not? Of course he'll exercise it, no, because fair value is 50. We are allowing him at 20. So if the agreement gives an option to the lessee to buy the asset at a price lower than fair value, that means, of course, though it is an option, we know that he will exercise because it's a favorable option to him. Even in that case, it will be considered as finance lease. Aitha? Third, lease term is the major part of the economic life. Say a lease term of an asset is also 5 years. The life of the asset is also 5 years. That means what you have to understand. The lessee is using the asset for the entire useful life of the asset. That means who's controlling the asset? It's lessee only, no? Then why are we doing this lesser lessee nonsense? When lessee is the one who is controlling the asset for the entire useful life. Correct, alva? So if the lease term is major part of the useful life of the asset, then it will be considered as finance lease. See, they have told major part. Andre, if the useful life of the asset is 5 years, are they telling the lease term should also be 5 years? No, major part. 4.5. Say the useful life is 5 years and the lease term is 4.5 years. Still will be classified as finance lease, Yes, because major part. It's coming almost 90%. Not exactly. Out of the total useful life, if the lease term is 90% or more, it will be classified as finance lease. At the inception, PV of MLP is more than or equal to substantially all of the fair value of the leased asset. So MLPs, present value of MLPs, and for now you understand, MLPs are lease payments that is made by lessee to lessor. What is MLP now? We learn. MLP is what? Lease payments paid by lessee to lessor. It is paid over period. No, you bring all of that to present value. That PV of MLP itself is more or almost equal to the fair value of the asset. Then they are telling it's a finance lease. You are understanding the logic? See, the present value of the lease payments that you are paying is 5 lakhs. And the fair value of the machine today, that means if you have to buy it newly from a showroom, the price is 5 lakhs. On lease also is 8 lakhs. Idrallo 8 lakhs. Which idiot would select lease? He would have gone for purchasing the asset only, no, if both were same. But even in that case, if it is under lease only, that means it is a finance lease. When will you classify? When PV of MLP is 90% or more of the fair value of the asset. Okay? When PV of MLP is minimum lease payments. When PV of MLP is 90% or more of the fair value of the asset, it will be treated as finance lease. And last one, leased asset is of a specialized nature such that only the lessee can use it without major modifications. It's a customized asset. I know you are the lessor and I am the lessee. But whatever asset you have given me, no, this can be used only by me. Alva. Even if I give it back, to whom will you give it? Alva. To whom? You will tell it to me, hey, take appa. I don't have any use. You only use it and they will again give it to me back, no. Whenever it's a customized asset which can be used only by me, and it is a lease agreement, then even if I give it back, say suppose, can he use it? No. So ultimately it's a finance lease only, because that asset is of no use to anyone else. It is only for me. So in substance, I will only use it. I am the owner. So it will be treated as a finance lease. So these are the 5 conditions. If any one of the condition is breached, it will be classified as finance lease. All of you clear? Now let's come to the accounting part. Okay. See, whatever we write down here, no, that should be sufficient. We learn accounting. First we'll learn accounting for finance lease. Operating lease will come later. Aita? Finance lease. So we have to learn accounting in the books of lessor. Then we have to learn accounting in the books of lessee. So let's come to lessee first. Okay. See, when a lease is classified as a finance lease, then who is the true owner of the asset? Lessee only, alva. Henceforth, he should only, who is controlling the asset? Lessee only. Henceforth, lessee should recognize this asset even though he is not owning the asset. So what is the entry I will pass in lessee's books? Asset is coming in, so a bit to lease liability account. Same thing. Lease liability increasing credit. This is the entry I will pass. Sir, at what value? Anyone remember? It is fair value or present value of MLPs, whichever is lower. Fair value on the, if you have to buy the machine today, what is that you have to pay? That is the fair value. That is given in the question most of the times. Or you have to take the MLPs. What is MLP? Minimum lease payments paid by lessee to the lessor. So MLP means what all will come? All the lease payments that you are doing plus GRV. Aita. What is GRV? RV is residual value. GRV is guaranteed residual value. UGRV is unguaranteed residual value. And the other particular asset here. If 3 lakhs is guaranteed, if 3 lakh is residual value, out of that lessee will guarantee. Out of 3, 2 I will definitely give it to you. No matter what is the actual residual value of the asset, I will give you 2 anta. So out of 3, 2 lakhs is guaranteed residual value and 1 lakh is unguaranteed residual value. Did you understand? So here to MLP, am I taking UGRV? No. I am taking, why am I taking along with lease payments GRV also? Because lessee along with lease payments will also pay GRV. So that's why I'm taking LP, lease payments plus GRV. All these lease payments I will take, bring it to present value. We know how to bring it to present value. So the question is which rate to use, discount rate. They are very clearly told, first preference is for the IRR of the lease. IRR of the lease from whose point of view? Lesser. Yes, that is what they have told. IRR of the lease from lesser point of view. Aita. What is his investment? Machine. What is his returns? Lease payments. So his IRR I have to see. What he will give? Very difficult. Why will he give his IRR? So if IRR of the lessor is not applicable, is not available, then the second preference is incremental borrowing rate of the lessee. And the incremental borrowing rate, and today if the lessee has to go take loan, what is the rate of interest he has to pay? That is called incremental borrowing rate. First preference IRR of the lessor. Second preference is incremental borrowing rate of the lessee. Did you understand, all of you? So using that rates, I will bring it to present value. Aita? So whichever is lower, I will record it at that. Then what will I do? Right now liability is at present value. So what do I have to do? Over the lease period, I have to take it to future value by booking interest. Because this finance lease is a finance arrangement, no? So every year I have to book interest and take the lease liability to future value. Aita? You know, you used to do that amortization table. Remember, in AS 19. Okay. I don't know whether we can do it. Wait. I will show it to you very simply. Okay. Understood? All of you. Do you want me to show an example for the lesser accounting? Want? Let's do it. We'll take some question. Before that, let's understand lesser accounting also very briefly. What will lesser do? Since lessee recognized the asset, lesser will, who is the actual owner, lesser, should de-recognize the asset. So what will he do? He will credit the asset account, and what will he debit? Lease money is receivable, no? From the lessee. So he will debit lessee account, debit, and asset account, credit. Why is he de-recognizing the asset? Because he is the actual owner, no? Then why is we debiting lessee? Because he is supposed to give us the lease payments. So at what value? At net investment. I will recognize this lessee receivable at net investment of the lease. All of you? What is net investment? Remember, we have lots of formulas. What is net investment? I told you in the beginning of this session. It is revision. Okay, what is my assumption? That you already have read and know everything. If you look at me like it is something new. So net investment is what? It's gross investment minus unearned finance income. So this is net investment. Remember, net investment is what? Gross investment minus unearned finance income. Alva. Sir, what is gross investment then? See, gross investment is all the cash flows that the lessor is getting, because we are doing accounting from the point of view of lessor. What all this guy is getting? He is getting lease payments. Then he is getting RV also. He is getting GRV also. Then will he get UGRV also? Yes, no, this guy will get. GRV is given by lessee and UGRV will get it from some other people by selling, that's it. This is all the cash flows. Without present value, under gross cash flows. If I bring all this to present value, then what will we call it? Net investment. Net investment is nothing but present value of gross investment. Ashta. ಈ gross investment present value ತಂದ್ರೆ it is net investment. So tell me, with that knowledge in mind, what will be the difference between gross investment and net investment? And I'm basically asking you the difference between future value and present value. What is the difference between future value, present value? Interest. That interest here is called as unearned finance income, because that interest is only income now under finance lease to the lessor. So it's unearned finance income. All of you understood? Clear? So instead of calling this lease payments plus GRV, can I replace this lease payments plus GRV with MLP? Yes, no? So MLP plus UGRV. That also you can understand. So these are all the required things that you should know. However, the lessor should recognize this lease receivable at what value? Net investment. What is net investment? Present value of gross investment. What is gross investment? Lease payments plus GRV plus UGRV. Then present value that itself is net investment. You will recognize the lessee receivable at that value. Did you understand, all of you? I'll take a small example, Aita, so that we'll understand that main amortization table. Now, say suppose I'm finding out PV of MLP. Aita, lease payments is as given below. Year 1, 2, 3, 4. Say suppose the lease term is 4 years. And how much I'm paying every year? Lease payments. Say suppose it's 10,000. Okay, we are doing accounting from the books of lessee. So I will record it at what? Present value of MLP or fair value, whichever is lower. Right now we are calculating MLP. I've taken lease payments. One more thing what I have to take for MLP? GRV I have to take. See, GRV is coming up to 5,000. Aita. GRV is generally received at the end of the lease term. So that's why I have taken it on 4th year. So these are the cash flows. Lease payments plus GRV. This is the MLP. Aita. Now this, I will bring it to present value using which rate? It's IRR or incremental borrowing rate. Aita. Say IRR they have given in the question, it's coming to 10%. Okay. So what will you take? Tell me PVS at 10%. Six eight four. 684. Next to? Huh? Oh, sorry. 684. What is the present value? 683 na? Take 440. 6830 and the other one there. 6830. Present value 90. Either 3415. Okay. Now add. This is the present value of the MLP. 35,113. So this is the present value of MLP. I will record the asset at present value of MLP, assuming that it is lower than fair value. All of you understood? Sir, okay, what is the entry we will pass? We know the entry. It is asset account debit to Wait, I am telling accounts in the books of lessee only. Okay. Asset account debit to lease liability account 35, 113, 35, 113. Since I have recognized the asset, who? Let's see. He should give depreciation. Depreciation for what term? It is lease term or useful life, whichever is lower or higher. Whichever is higher. Okay. Say lease term, sorry, 3. Lease term is 3 years. And useful, whichever is lower. Okay. See, it's lease term or useful life, whichever is lower. Correct only, no? Lease term ಈಗ 3 ವರ್ಷ ಇದೆ ಅನ್ಕೊಳ್ಳಿ, ಯೂಸ್ಫುಲ್ ಲೈಫ್ 10 ಇದೆ ಅನ್ಕೊಳ್ಳಿ, ನಾನು ಅವಾಗ 3ಗೆ ಮಾಡಬೇಕು ಆಯ್ತಾ. ಲೀಸ್ ಟರ್ಮ್ 10 ಇದೆ ಅನ್ಕೊಳ್ಳಿ, ಯೂಸ್ಫುಲ್ ಲೈಫ್ 3. ಕರೆಕ್ಟ್, ಇಟ್ಸ್ ವಿಚ್ ಎವರ್ ಇಸ್ ಲೋವರ್. ಓಕೆ. ಸೊ ಅಸೆಟ್ ಟು ಲೀಸ್ ಅಂಡ್ ಹ್ಯಾವ್ ಟು ಗಿವ್ ಡಿಪ್ರಿಸಿಯೇಷನ್. ಡಿಪ್ರಿಸಿಯೇಷನ್ ಯು ನೋ SLM. How will I do? If say suppose we know that lease term here is 4 years. So 35, 113. Minus, will you do residual value? Sir, we have GRV, UGRV. Hey, that GRV, UGRV is for lesser. Aita, nimagalla. So your this thing is 0. Divided by lease term is 4 years. So what is your per annum depreciation? 8,000. So for 4 years you will pass depreciation entry. What is depreciation entry? To asset 8,000 aita. This depreciation one thing will do. Who? Lessee, because lessee recognize the asset. Now will the depreciation come in the books of lessor? No, he de-recognized the asset. No. What is the entry he passed? Lease receivable account debit to asset he has done. Asset is de-recognized there. So depreciation there it will not come. It will come in the books of lessee. Then what is one more thing that lessee will do? Right now the liability is at present value. So he has to take it to future value by booking interest. Aita? So for that, before going to the entries, we'll create one table. Remember, opening balance. What is the opening balance of our liability? Opening balance of liability is to, you recognize it at 35, 113. So this is opening balance. On this you will charge interest. Interest at what rate will you charge? At the rate at which you bought it to present value. At which rate did you bring it to present value? 10%. So 35113 into 10% comes to 1. Aita? So you will add interest. Why are you adding interest? Because I am further supposed to pay interest. No, my liability is increasing to the extent of interest. Minus, am I doing any payment? Yes, no. Every year I am paying the lease payments. How much? Every year I am paying the lease payment of first year 10, second year 10, third year 10, fourth year 15. So that will reduce my liability or increase my liability? Reduce. So minus cash flow. So what is your closing balance? 28. So again the new opening is again 28, 624. Again interest. It comes to 2862 minus what is the cash flow? 10,000 only. Second year also you are paying 10,000 only. No. Now closing balance 480. Then again third year 21,486. How much is the interest? 2149 minus third year also I am paying a payment of 10,000, which will reduce my liability. So closing balance comes to. Then the opening balance for fourth year is 13,635. Interest is 1364 minus in the fourth year how much I am paying? 10 plus 5. You'll get 15. Automatically your closing balance should become 0 because you have paid all the liability. So what is the total interest expense that you will book for all the 4 years? No need to total it. It's that second column. Aita? All of you, this table is very important. Now what is the entry? I have to book interest no first year. So interest is expense or income to me for the lessee? It's an expense. So interest account debit. How much is the first year interest? 2. What is happening? My lease liability is increasing. So lease liability increasing credit 3511. One more entry. I am paying the lease payment. No, when I pay lease payment, lease liability is decreasing, no? So lease liability account debit to bank account credit. It's 10,000. Understood? This is the entry that will pass in the books of lessee. We now say suppose, what is the entry that the lessor will pass? Lease receivable account debit to asset. So its receivable is booked for what amount? Net investment of the lease. Assume that net investment is 35,113 only to keep the calculation simple. Aita? So first he will recognize the receivable and de-recognize the asset. Then even this guy who lessor also prepares the same table, same exact table. Opening balance of the receivable is 35,113. Then he will add interest, subtract the lease payment. Same exact table. In this case, to lessor, this interest will be what? Income. So tell me what will be the entry for the interest? Whenever he is booking the interest, lease receivable is increasing. So lease receivable account debit to interest account. Then he is getting lease payment. When he gets lease payment, lease receivable is decreasing. So for this entry is bank account debit to lease receivable. So what is the entry in the books of lessor? Entry. First he de-recognized the asset and recognized lease receivable. At what? At net investment. Second, he will do the same exact table and he will book the interest. Now for him it is the income. So his lease receivable is increasing. So asset increasing debit to interest is an income increasing credit. Then what will happen? He is also receiving the lease payment. When he receives the lease payment, bank is increasing to lease receivable is decreasing. You are understanding? What is the number that will come for this journal entry? Tell me from the table. 10,000. That is the lease payment we are receiving. Interest 3511. Same exact table. But you will take the receivable amount, do the same exact table. Here interest is an income and lease is a receipt. Depreciation will come. No, he has de-recognized the asset. No, depreciation will come in the books of lessee. So that's about the accounting of finance lease. Okay. Now coming to operating lease accounting. This is very simple. We have accounting in the books of lessor and accounting in the books of okay. So operating lease was a normal lease only, no? So how will you record? When someone gives us, say suppose let's first see it in the books of lessee. For lessee, lease rental is what? It's an expense. Correct, no? Expense. Expense increasing what? Debit. So in the books of lessee, so it's lease expense account, debit. To what? For lessee money is going out. So to bank account. Do you understand? Simple. It's an expense to the lessee. So lease rent is 10,000. Write it down as 10,000. Any difficulty here? Rent is an expense. Similarly for lessor, it is what? Entry. For him it is an income. So he is receiving money. Bank account. 2. Lease rent is an income increasing credit. All of you understood? That's all. Accounting over. And ankonidre, it is your dreams. Okay. See, entry is this much simple only, but one extra guidance they have given. So they are telling whatever lease rent they are booking as expense or income. Now lessee will book it as expense. Now whatever expense is booking, no, it should reflect the pattern of economic benefits consumed. Anta heltidare. Andre, since I have taken an asset on lease, I am paying rent alva. That expense whichever I am charging, no, it should match with the benefits that I am getting from the asset, it seems. Okay. If you are able to do it properly, if you have any other information in the question which helps you do that, you can book the expense in that ratio only. For example, you have taken this asset on lease. First year you're able to generate 50,000 units. Second year you're able to generate 40,000 units. Third year 30. Fourth year 20. Fifth year 10,000 units. Aita? And every year the lease rent is say 10k, 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 10k and 10k. But the benefits that you are getting from the asset is 50,000 first year, 40,000, 30,000, 20,000, 10,000. So they are telling this should match. To match this, what you have to do? Take the total rent for all the 5 years. What is the total rent for all the 5 years? 50k. This 50k you divide it in this ratio, economic benefits. 50,000 into 50 by 150. And 50k into 1 by 3, 15,000. It will come like this. $13. Next. Yeah. Next. Something like this. This is how you have to book the expense. How much lease rent you are paying as a lessee? I know 10k, 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 10k only you are paying. The expense which goes to P&L should be 10k, 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 10k only. Huh? No. What it should be? This. Why? You have matched it with the benefits. First year you are getting the major benefits, no? Because how much units is the asset producing? 50,000 units in the first year. That means majority of your lease expense should be booked in first year, 15k. So if you see, it's matching. The benefit is also decreasing. The lease expense is also decreasing. 15, 13, 10, 6. Understanding? So this and all they have not given in the question, sir. Nonsense. Then what I have to do? Then simple. Do it straight line. Say suppose in the contract the lease payments are given like this. 30, 60, 90. 3 years is the lease term. 30, 60, 90 kottidare. These are the lease payments. Do you know the economic benefits from the asset? No sir, that and all they have not given. Then what will you do? Straight line. How to do straight line? Take the total of the lease payments. 90 plus 90. It comes to 180. 180 divided by, what is the number of lease payments? 3. So per year it is coming to, so how much expense you have to book every year? 60, 60, 60. If you are not getting any other way to do the division of the total lease payments, do SLM. SLM is mandatory. If they have given this units information and all, then take the total which comes to 50k, divide it in the ratio of the benefits, which is 50, 40, 30, 20, 10. Did you understand? Huh? Okay. Now let's take a question. Very nice question from the recent RTP, my favorite, Sikkapatte favorite question. Okay, please solve it. Can you take a photo for a second? Just take a photo. I have to see the other part of the, or else it's okay. You can see it. No need to. I'll see it here. Try to solve it. You have 1 minute. Yeah. Where is it? Ah, anyone with the answer? C. I know, I have only marked it. Very simple, no? Just now, whatever you have learned, it's there only. Suraj Limited acquires machinery on the lease from Chand Limited on April 1, 2025 for 3 years. The economic life of the machinery is also 3 years. So what you have to understand from this hint? It's a finance lease. The fair value of the machinery is rupees 2,50,000 and the guaranteed residual value is 2. As per the lease agreement, the lessee is required to pay rupees 1 lakh per year from April 1, 2025. So lease payments is 1 lakh, 1 lakh, 1 lakh for 3 years. The lessor has guaranteed residual value of 20. Lessor's GRV is how much? 20. Sir, how come? Just now they told GRV is 2,000. That is the guaranteed residual, that is the residual value guaranteed by lessee to the lessor. Aita, what is the guaranteed residual value to the lessor from his point of view? 2,000 from lessee. Maybe some other third party has guaranteed some more value, which is coming to plus 18, it is coming to 20. Because if you see definitions of GRV in AS19, it is any money guaranteed by the lessee or a third party. Third party no guarantee madirabo. So to lessor, some other party has also guaranteed. That's why lessor's GRV is 20,000. But how much lessee has guaranteed towards the asset? Only 2. So lessee's GRV is 2, lessor's GRV is 20. However, the lessor estimates that it would have a useful life of 15. At what value the machinery would be recognized? At what value machinery should be recognized, Andre? They are asking who's accounting? Lessor accounting or lessee's accounting? They are asking lessee's accounting. And is it operating lease, finance lease? That means asset will be recognized at what value? Correct. Fair value or present value of MLPs, whichever is lower. Very good. Fair value they have given 2,50,000. One more thing that I have to compare it with is PV of MLP. Aita? Okay, what are the MLPs? It's lease payments plus MLP is from the point of view of lessee, no? So it's lease payments plus GRV. Our lease payments we know 1 lakh, 1 lakh, 1 lakh. Then GRV is 2,000. Okay, I took the MLPs. I should bring it to present value, no? What rate should I use? First preference, IRR of the lessor. Second preference, incremental borrowing rate. Have they given anything in the question? No, now what to do? Have to find out IRR of the lessor. And do we know how to find out the lessor? I mean IRR of the FM. Okay. That's the rate at which PVCF is equal to PVCF. Hey, where we had done it now? Here. So first, I will take the cash flows of lessor. I thought, what is the cash outflow of lessor? 2,50,000, because that is what he would have invested in the machine. What all he got? 1 lakh, 1 lakh, 1 lakh for 3 years he has got. Correct? Then, what is the GRV of the lessor? Please don't make mistake. The GRV of the lessor is 20. I thought. This, because I told no, should you take IRR of the lessee or lessor? You have to take IRR of the lessor. That's why I have taken cash flows of lessor. By taking these cash flows, I will find out the IRR. That process you know. One rate we have taken is 10%, one more rate we have taken is 15, and our IRR has come to 13.08. Use this 13.08% to bring the MLPs to present value. What are our MLPs? Its MLP is this. 1 lakh, 1 lakh, 1 lakh, and GRV of the lessee is 2. This I will bring it to present value by using 13.08. I will get a present value of 2,37,173. Now fair value is how much? 2,50,000. Present value is 237. Which is lower? 237,173. The answer should be option C, approx. Okay. Nice question. See, for MCQ they asked this. Or if you understood now how we did. IRR of the lessor is not given. You have to literally find it out. Okay. ಇರಲ್ಲ, ಬಟ್ ಈಗ ರೀಸೆಂಟ್ RTP ಕೊಟ್ಟಿರೋದು ಹೇಳಕ್ ಬರಲ್ಲ ಅಲ್ಲ, ಅದು ರಿಯಲೈಸ್ ಆಗ್ಬೇಕಲ್ಲ. ನನ್ನ ಪ್ರಕಾರ ಮೋಸ್ಟ್ ಆಫ್ ದ ಸ್ಟೂಡೆಂಟ್ಸ್ ಕ್ವಶನ್ನೇ ರಾಂಗು ಅಂತ ಮುಂದಕ್ಕೆ ಏನು ರೇಟೇ ಕೊಟ್ಟಿಲ್ವಲ್ಲ, ಕ್ವಶನ್ ನಾವು ಗ್ರೇಸ್ ಮಾರ್ಕ್ಸ್ ಅಂತಂದ್ರೆ So understood, all of you? Now one more very important thing you have to know is that sale and leaseback transactions, correct? What is sale and leaseback? I have sold a particular asset to someone. From A I have sold the asset to B, and the B has further leased the asset to A. This is a sale and leaseback transaction. Why would anyone do that? Sale and leaseback, correct? No. Why did he sell? Why is he taking it back? All problem. That means there is some gotala here. So we have to do substance over form accounting. Aita? So how is the accounting? Now say suppose A, B are there. First A sold the asset to B. Later B leased the asset back to A. Aita? Here it is selling. Here it is lease, no? First you have to see which is this lease. Is it operating? Is it financing? Two possibilities. Aita? If it is financing, very simple. Okay? Because first of all, finance lease classification itself is gutala. Adru mele sales and lease back is gutala. So this entire thing is only nonsense. So what we'll do, whatever profit or loss is recognized by A in this transaction will not allow it to recognize it immediately. Sir, profit or loss? Yes, no. A sold the asset to B. So if A has sold the asset to B, there can be profit or loss on machinery, no? Where will that generally go? That profit or loss on machinery will generally go to P&L. But if it is a sale and lease back, and if it is classified as finance lease, aita, whatever profit comes, no? Maybe there is a profit of 2000 rupees. What is this? Profit on sale. In whose books this will be there? In the books of A. Will I immediately allow you to recognize this? No, no. We will defer and amortize. Correct? We will defer and amortize it over the period of the lease. All of you clear? Matter artha aita? A B ge asset sell madidare. Since he has sold, he has a profit of 2000. And it is that lease is classified as what? Finance. Will I allow you to recognize this 2000 as profit in that year? No. What you are supposed to do? Spread it across the lease term of the asset, which is 5 years. All of you clear? That's all, that's all. No other accounting to know. But if it is operating lease, if this lease is classified as operating, then you have some items. Okay, let's focus on the items. Three possibilities. Aita? So first one, it is classified as operating lease, and this A has first sold to B, no? Okay, the selling price is there, no? That selling price is equal to fair value. Now please understand, if someone sells and leases back the asset, no, it is not a lease transaction, it is what? Finance transaction, no, it's like loan. Whenever you sold, whatever money you got, that is like loan, and whatever lease payments you are doing later, that is like EMI. So it should be treated as a finance transaction, not as a lease transaction. Now it is sale and lease back, and the price at which you have sold an asset to B, that price and the fair value is equal. If fair value and sales price are equal, what to do? Good only, no? If fair value is equal to sales price, that means maybe it's a genuine transaction. So for whatever profit or loss that lessor is getting, the seller is getting, whatever profit or loss. Now in my case, how much was the profit? 2000. I will allow you to record it fully. You can record it as record in the same year. 2000 you can normally record, no problem. Nothing related to finance. Why nothing related to finance? Because the fair value of the asset that you sold is equal to the sale price. And the fair value, market value estide ನೀವು ಅಷ್ಟಕ್ಕೆ sell ಮಾಡಿದಿರಾ. That means it's a genuine transaction. Second case, where the fair value is lesser than sales price. Before coming to this, let's come here. Fair value is greater than selling price. That means what? Fair value is 5 lakhs. Here we have sold it to be at 4 lakhs. Is it a normal transaction? Why not? 5 ಲಕ್ಷ ಫೇರ್ ವ್ಯಾಲ್ಯೂ ಇದೆ, 4 ಲಕ್ಷ ಕೊಡ್ತಾ ಇದ್ದೀರಾ. We are considering it still as normal only. There are chances that you will sell the goods at lesser than fair value also. Maybe you have dire need of money now. Now this building is worth 10 crores only, but I want money today. So what will I tell to the buyer? Hey, if you give money today, I will give you at 8 crores. Then he will somehow arrange the money, no? So there are chances that you will sell the asset at a price lower than fair value. Still it is considered as normal. So what will I do in this case? If the fair value is greater than selling price, I will still allow you to recognize profit or loss in the same year, in the first year only. First year only you recognize the profit. This is the third situation where fair value is less than sales proceed. Andre, the fair value itself is 5 lakh, but you guys have sold it for 7. Idantu agak sadhya illa. When the fair value is only 5, how come that person is paying 7? That means there is 100% Gotala stuff is going on here. Okay, so that's why what will we do here? Whatever profit is there, profit or loss, we will defer and amortize. Will I record it in the same year? No. I will amortize it over the lease term. Aita? Now there is one similar some cases here. Aita? SPFE. Okay. Say suppose the carrying amount is here. Okay. Say selling price is 1 lakh. This fair value is 80,000. And carrying amount is 50,000. So tell me how much is the profit here? How will we always calculate profit? It's selling price minus carrying amount. Selling price 1 lakh, or carrying amount 50,000. So how much is the profit? Tell me, it's an operating lease. I am only telling you. What should I do about this 50,000 now? Should I defer and amortize or should I recognize it immediately? Sir, since selling price is greater than fair value, we have to defer and amortize. Correct. But this is a peculiar situation. Aita? See, the carrying amount is much lesser than fair value. Aita? So what they are telling, till this extent, how much is this extent? See, I know carrying amount is 50 and selling price is 1 lakh. But the fair value of the asset itself is 80 now. So till 30 it's a genuine profit only. So they are telling out of 50, 30,000 you recognize fully. Remaining 20,000, defer and amortize. This you recognize fully. Understood? All of you. This famous question, pakka they will ask. Aita? Sir, one more possibility. Same. Selling price is 1 lakh. Fair value, now fair value, both fair value, carrying amount, both are same numbers. Now how much is the profit? What to do? So the profit is 50, it's operating lease. Since selling price is greater than fair value, entire 50,000 we will defer and amortize. Simple. Third possibility. Selling price is 1 lakh. Carrying amount is 50,000. Fair value is 30,000. Now, how much is the profit? Profit is 50. It's 50 only, correct. So profit is 50. What to do? Defer and amortize. Again, some small thing is there. See, if you see, the carrying amount is much more than the fair value itself. Asset is impaired. Correct? Carrying amount itself is greater than fair value. First you write down the carrying amount to fair value. And then first book a loss of how much? First P&L alli 20,000 loss you have to book. And reduce the carrying amount to fair value. Now how much is your carrying amount? From 50 you bought it to 30 by booking an impairment loss. Hello? 50 alitapa, you booked the loss of 20. Now the carrying amount became 30. Now you tell me what is the profit. 31 lakh and the profit is that 70,000 should be deferred and amortized. First you book the impairment. How much is impairment? You don't know. If carrying amount is greater than recoverable amount, it is what? Impairment, no? So 50, 30. First book the loss of 20,000. Aita? Once you book the loss of 20,000, carrying amount will come to 30. Now what is the new profit? 30 is carrying amount. Selling price is 1 lakh. 70,000 rupees you can book as, you can defer and amortize since SP is greater than fair value. All of you clear? Understood? A very important question. That's why I've done it. Aita? Clear? Huh? These three situations can come only under operating lease. Finance lease is the finance lease is one day defer and amortize. Whatever profit you have, defer and amortize. Aita? Only in operating lease, this selling price, all this will come. All of you clear? Okay. So there's one question. Let me see what is clear. Yappa, it's already 2 o'clock. Almost we are there. We'll extend. What do you think? Hey, wait, we are under recording now. On first, wait, we'll finish this question and I'll pause it and I'll let you know. On 1st April 2024, Mansi Limited sold a plant for 8,52,800. Okay. Continue. On 1st April 2024, Mansi Limited sold a plant for 8,52,800. The carrying amount of the plant on that date was rupees 1,80,000. The sale was a part of the package under which Akash Limited leased the asset to Mansi Limited for 8 years term. The economic life of the asset is estimated as 8 years. The minimum lease rents payable by the lessee has been fixed at 1,60,000 payable annually. See, 2 times they have asked in 2 RTPs. Aita? The incremental borrowing interest rate is estimated at 10%. Calculate the net effect on the SOPL in the books of Mansi. So first of all, what kind of transaction is this? It's sale and lease back, correct? Is it operating lease or finance lease? It is very good. As we can see, the economic life of the asset is 8 years and the lease term is 8 years. Hence, it will be classified as finance. So it's a sale and lease back classified as finance lease. Appa. Simple only then. It is very simple now. What will we do under finance lease? Whatever profit on sale you have, defer and amortize. Same thing you do. The minimum lease rents payable is 1,60,000. Incremental borrowing rate is 10%. First calculate the net effect. So let's see the answer. The lease term is 8 years, which covers the entire economic life. So at the inception of the lease, the present value of the MLP. So they have done the other test also. Present value of MLP. So what is present value of MLP? It has come to 8,53,600, which is almost equal to the fair value, no? Alva. How much is fair value? 852. MLP is 853, almost equal. Henceforth, one more reason why it is finance lease. Thus, lease is a finance lease. Okay. As per Nen, if a sale and lease back results in a finance lease, so what is the profit here first of all? How will you calculate profit? Sale minus carrying amount. Sale minus carrying amount always. It is sold for how much? 8 lakh. And what is the carrying amount of this asset? Really? The carrying amount is 1 lakh. So what is your profit? 6,72,000. What will you do about this profit? Will you recognize it immediately or defer and amortize? That's all you have to write. So this profit of 6,72,800 will not be recognized as income in the year of sale, but it will be deferred and amortized over the lease term in the proportion of the depreciation. Guys, when you spread it over the leased asset, in which ratio will you spread it? In the ratio of depreciation. And every year whatever depreciation you are charging, no. In that depreciation ratio, you will spread the profit. Okay. Therefore, assuming that the depreciation is charged on SLM, okay, so your depreciation will be, how much will be the depreciation in the books of, it's a finance lease, no? So finance lease ಆಯ್ತು ಅಂದ್ರೆ depreciation ಯಾರ books ಅಲ್ಲಿ ಬರುತ್ತೆ? Lessee. So what is, at what value you would have recorded? At present value of MLP or fair value, whichever is lower. So here it comes to 8 lakh 52,800 divided by 8 years. So what is the depreciation? So that is the depreciation that will be booked in the books of lessee. Clear? Normal, no? In finance lease, lessee is the one who's booking the depreciation. And the profit also will be amortized straight line only. What is the profit? 6 lakh 72,800. Since SLM and the ratio will be 1:1:1 only, no? Every year same depreciation. So divided by 8. So 84,800 rupees is the profit that you book every year, and depreciation that you book is 1,06,600. Net comes to 22,500. What net? Expense of 1,06,600. Income of 84,100. So net effect is 22,500. ಅರ್ಥ ಆಯ್ತಾ? ಅದು ಡಿಪ್ರಿಸಿಯೇಷನ್ ಲೆಸ್ಸಿ ಕೊಡ್ತಿರೋದು because it's a finance lease. And profit of 6 lakh is deferred and amortized in SLM for 8 years, and that profit comes to 8,400. Expense minus income, that's the net. All of you understood, no? 2 times they have asked. Chances that they will ask in your attempt also. Hello? Correct. Important. So let's go to the next standard. Okay. And the next one should be, let's go to AS26, intangible assets. We'll finish all the asset based standards. AS26. So let's first understand the scope of the standard. What is scope? For what all it is applicable, for what all it is not applicable. It is not applicable for intangible assets that are covered by other accounting standards. For example, goodwill. Goodwill arising on amalgamation, all that we have AS14 only. And for consolidation we have AS21. So they are only talking about those intangible assets. So here we'll not talk about them. Aita. Then financial assets. What are financial assets? I thought 4 things will come under financial assets. You remember, Anyone? See, a financial asset is 4. It is cash, or it is a contractual right to receive cash or another financial asset from another enterprise. One thing is cash itself is a financial asset, or if you have any contract which gives you the right to receive any other financial asset, that is also a financial asset. Then if you have any contractual right to exchange the financial instruments with another enterprise under conditions that are favorable. Here what you are doing is you are exchanging the financial instruments. Cash is not involved. You are exchanging financial instruments, okay, and you have a favorable situation. For example, a derivative or an option contract. Option forward contract ella gottala. What is forward contract? Best to take option contract. What is option contract? It's again we are delving in very deeper. So there is a contract, assume, keep it simple. However, you learn this concept in Ind AS 109, okay? No need to go deeper now, we don't have time. So it's a contractual instrument where you are exchanging financial instruments and our entity is in a favorable position, positive position by exchanging the financial instruments. That is called a financial asset. And one more is if you have ownership in the other enterprise. That means if you are holding any equity shares of another company, that is also considered as financial asset. What are financial assets? 4 things. Cash, any agreement or contracts that is giving you financial asset, that is a financial asset. Where you are exchanging financial instruments and you are in a favorable situation, that is a financial asset. And 4th one is if you have invested in equity shares of other company, that is a financial asset. For these financial assets, again AS26 is not applicable. Aita? Then mineral rights, expenditure on the exploration, all these items, minerals, anything related to mines and all, again your AS 26 not applicable because they have their own industry practices. Intangible assets arising in insurance companies, again for insurance enterprises, if there is any intangible assets, this AS will not come into picture. For other things only AS will come. Okay, so let's understand. What is an intangible asset first of all? An intangible asset is a identifiable non-monetary asset. An intangible asset is an identifiable non-monetary asset from which, without physical substance, held for use in production or supply, or for rental, or for admin purposes. First thing you understand, intangible andre, we know it's without physical substance, and it cannot be touch, felt, or seen. So this point we came to know. It's identifiable non-monetary antandre. Identifiable means separable. Okay, whatever you have, no, this financial asset, financial antini, whatever asset you have, no, you should be able to separate it from the entity. Entity in the separate mode, you should be able to rent it. Separately, you should be able to generate cash flows. Then this asset is said to be identifiable. So they are telling if there is an intangible asset, no, it should be separable from the entity. If you are not able to separate it from the entity, then it cannot be an intangible asset itself. Next, it's an identifiable non-monetary. You remember what is monetary, non-monetary? Monetary means anything, it is money. Monetary assets means it's money held or money receivable or payable in terms of fixed determinable amount of money. And they are telling that monetary items means it's either the cash in hand, that is also considered as monetary items, or any other asset or liability which is either receivable in a known amount of money or payable in the known amount of money. For example, debtors, creditors, loan given, loan taken, all these are what? You know how much money it is receivable or payable in money, and you know how much is the amount also. So these are what? Monetary items. Other than monetary items, remaining all is called as non-monetary. For example, PPE. If PPE receivable in money, no, it's receivable in services. Understanding? So they are telling an intangible asset should be identifiable and they're separable from the entity, and second, it should be a non-monetary entity, a non-monetary asset. No physical, and it should be held for production or supply of services, or for rental purposes, or for admin purposes. And admin, that table, because some of you might ask, sir, the table which is there in the reception, how is it giving future economic benefits? No economic benefit. It cannot be considered as an asset until you can ask. Correct? No. No. Even if it is admin table, no. If it is helping us to do the main job easily, then those assets are also considered as assets that are generating economic benefits, even if they are assisting you. So that's why admin purposes also comes. Okay. Then this and all we have. It is very similar to AS10. Okay. I thought that cost and all we let know what all cost to be capitalized, not capitalized. That is very similar to AS10 only. Okay. If you acquire an intangible asset as part of an amalgamation, remember amalgamation, transferor company transferor acquires transferee company, maybe has acquired one intangible asset also. How to show it in my books, in the transfer rebooks, they have told. An intangible asset acquired in an amalgamation in the nature of purchase is accounted for as per AS14. AS14 has told how to do the accounting, you follow that. A transferee recognizes an intangible asset that meets the recognition even if that intangible asset had not been recognized in the financial statements. Very important. Now you already have read AS26, correct? Can you recognize self-generated goodwill as an intangible asset? No. Can you recognize self-generated brand, mastheads, publishing titles, anything self-generated, these brands and anything cannot be recognized as a asset. Why? Because it's self-generated. Its cost cannot be estimated reliably. Now what point they are telling is, say suppose A Limited, B Limited. We were A Limited. A Limited transferred all of its assets to B Limited. This brand which was not recognized as A Limited because it was self-generated, can it be recognized in B Limited is the question. Yes, it can be recognized in the books of B Limited because for B Limited it is what? It is not self-generated brand, it is a purchased brand. All of you understood? Now A Limited cannot recognize its own brand because it is self-generated. But when A transfers the assets to B, then for B it becomes purchased and not self-generated. They can recognize. One more best example is, if intangible assets are produced internally, then whatever money we are spending on intangible assets is divided into two parts. Which are those two parts? If you are constructing the intangible asset, no, then whatever money you are spending is divided into two parts, research phase and development phase. Whatever you have spent in research phase will be transferred to P&L as expense. Whatever you spent in development phase will be capitalized as an asset. You remember, much villa, sir. Everything is going above the. Remember, no? There, okay, let's do it from first in the only. Aita? Now, if you are yourself developing a intangible asset, no, then whenever you are spending money, the entire development phase is divided into two parts, research phase and development. Research phase, and it's a planned investigation. That means you are still finding out as to what should I do. You are researching. You have something in mind. I have to bring a new process. I have to bring a new product. I have to bring a revolutionary product. These are ideas. Towards that you are doing the research. Planned investigation to find a idea. This is called what? Research phase. Whatever money you are spending in research phase, no. Can you capitalize it as an intangible asset? No. It should go to P&L as expense. Once the idea is finalized, once you have an idea in mind, this is what I have to do. Let me develop on this. Until when you decide, no, that becomes development phase. Whatever you incur in development phase, okay, that can be capitalized as intangible asset, provided there also we have 6 conditions to satisfy. If those conditions are satisfied, you can capitalize. But whatever is incurred in research phase, that is forever P&L. All of you understood? Clear? So we were learning about as part of amalgamation. So what did they tell? If the cost of the intangible asset acquired as part of an amalgamation in the nature of purchase cannot be measured reliably, then the asset is not recognized as a separate intangible asset. See, whatever you bought from the transferor company, if you can estimate the cost reliably, then record that intangible asset as an asset in the company that has purchased. If you are not able to estimate the cost itself, then you cannot recognize such intangible asset in the books of transferee also, is what they are telling. If you're, same thing now, because what is asset recognition criteria? 2 things. There should be probable future economic benefits, and second is cost must be estimated. If cost cannot be estimated reliably, you cannot recognize it as a asset. Basic thing, okay, simple. This government guy will understand later. So internally generated goodwill cannot be recognized. We already know it. Internally generated tangible assets, we have 2 phases, research phase, development phase. Whatever you spend in research phase goes to P&L. Whatever you spend in development phase can be capitalized. Aita? So even in development phase, okay, you have 6 more conditions. Can you see? These are the 6 conditions. Now once you come to development phase, only if these 6 conditions are satisfied, then only you can capitalize. Sir, any one of the condition gone, then even if you are in development phase, you cannot capitalize. What are the 6 conditions? First one, the technical feasibility of completing the intangible asset so that it will be available for use or sale. See, in the research phase you got an idea. Aita? Is that idea technically feasible? Can you do it? Do you have sufficient requirements to do that? Technical feasibility there, va? You understanding what is technical feasibility? I get lots of ideas, but can I implement it? That possibility is there, adun nodbeku. Chandra, Indra anta ಏನೋ idea research ಮಾಡಿರ್ತಾರೆ. Is it possible? Not possible. So first what you have to do is technical feasibility. Technically, is this possible to do? That much technical support do we have? That much technology has come forward to apply this idea. So that you have to see. If that much technical feasibility is not there, then you cannot capitalize money spent in development phase. Did you understand? First thing is what? Technical feasibility. Second, you should have intention to complete. Research ella madidri, but you don't have intention to complete only. Will I allow you to capitalize the money in development? No. Its ability to use or sell. Okay, you developed and everything, but will you be able to sell it and make money? Only if it is a yes, continue. No, I will not allow you to capitalize the money in development stage. The intangible asset will generate probable future economic benefits. Now you researched it, now you are developing it. From that asset, will you have future economic benefits? Yes andre continue, no andre will not allow you to capitalize that money spent on development phase. Then what will happen, sir? You have to expense it in P&L. Do we have the availability of adequate technical, financial and other resources? Now I have an idea. To complete it, do I have adequate technical resources? And that much that much engineers, that much technique is there today, that much technology is there today. That is first thing. Financial resources, that much money I have. All this you have to see. If you don't have that much resources, then I will not allow you to capitalize. Then ability to measure the expenditure, same thing. Our second condition, are you able to estimate the cost reliably? And are you able to measure the expenditure that is attributable to intangible asset? Yes. Then only will allow you to capitalize. Under development phase, these 6 conditions should be satisfied. Then only you can capitalize. What are the 6 conditions? You should have technical feasibility. Second, intention to complete. Third, you should be able to sell it. Fourth, there should be some future economic benefits. Fifth, you should have adequate technical and financial resources to complete it. And sixth, you should be able to measure the cost reliably and apportion it reliably so that you can capitalize. Understanding? Most of the questions you'll get in exam as to whether it is research phase or development phase. Should be able to answer. How will you classify? Research phase and you are still finding, see one liner I will tell. Research phase and you are still finding out for an idea. You have not got the idea, you are finding the idea, exploring various alternatives, ad nodna, id marna, e technology nodna, a technology. This is what? Research phase. Once you hold on to an idea, then what you do? This idea is good. Let me develop one prototype and see how it works. Now it has entered development phase. Prototype martira, then it will work out. Then you start you start showing it to investors, you'll get the money. You'll develop furthermore. You're developing on an idea. That comes under development. If you're still finding out an idea, it is under research phase. Just to keep it simply. But what I recommend is try to solve more and more questions on this research and development phase. Okay, to get a proper clarity. Okay. Do we have anything? Then just like how for AS10 PPE we do depreciation, for AS26 intangible asset we will do depreciation only. No, we do amortization. For PPE it is depreciation and for intangible assets it is amortization. Okay, so let's understand about those matters a little bit. So tell me whether it is research phase or development phase. Okay, nice example they have given. You are planning. It is what? Research phase. So that's why expense it. Application and infrastructure development. Okay, what are we seeing? It is not an example. Okay, that is something else. Don't worry. Let's come to subsequent expenditure. Similar point we had in AS10. What is subsequent expenditure? On existing intangible asset only if you are spending money. That is what? Subsequent expenditure. When will you capitalize it? Only when you are getting future economic benefits. Same logic. It's very similar to AS10. From the subsequent expenditure, if you are getting economic benefits, additional economic benefits. See, for that existing asset, already economic benefits you will be getting. Am I talking about that? No. By spending extra money, are you getting extra benefits? Yes. Then only you will capitalize, or else you will not capitalize. Second, expenditure can be measured reliably. Same thing, exactly like AS10. Amortization. Okay, every year, what will you do? Subsequent measurement. Every year, which like depreciation, we charge amortization. Okay, so what is the useful life? While calculating depreciation, the denominator we need useful life. So let's understand for intangible asset what I should take as useful life. So first one. Amortize the intangible asset over the best estimate of its useful life. Okay, you estimate the useful life as to this intangible asset is dina barbod. Use that useful life for calculating the amortization amount. Okay, But there is one rebuttable assumption as per AS26, that is 10 years. AS26 is telling, no, in AS10 we don't have this, only in AS26. AS26 is telling, for intangible assets, according to me, maximum useful life is 10 years. Ashte. Rebuttable assumption. That is what standard is telling. But that means you are not allowed to use the higher useful life. Huh? Did you understand the question? Now AS26 is telling, intangible asset alva, adakon useful life irutte alva. AS26 is telling the maximum useful life is 10 years. No matter what is the intangible asset, maximum useful life is 10 years anta. Rebuttable assumption. Ekandre, please understand. This is intangible thing now. How can I give you more useful life? You cannot control it now. So that's why they have told maximum useful life is 10 years. Anta. So your question is, sir, that means we cannot use only more than 10 years? You can. If you are able to justify, you can. That's what they have told. In these cases, the presumption that the useful life generally does not exceed 10 years is rebutted and the enterprise. So that means if you think and if you are able to prove that the useful life is more than 10 years for my intangible asset, then you are allowed to use more than 10 years. But what is the rebuttable assumption by the standard? It is maximum 10 years. What? The useful life of the intangible asset. Okay. This point will however lead in AS28 also. What they are telling is whenever you take useful life as more than 10 years, no, one additional condition will come. We will go to impairment of assets, AS28. What is impairment? You remember for all the assets we do impairment testing. When will you do impairment testing? Generally as per AS28 we do impairment testing only when there is indication. Correct? But they are telling, if for a particular intangible asset, if you took useful life more than 10 years, no, I gave you maximum 10. But if you use more than 10, no, then annually you have to do impairment test. Every year. Sir, the indication is not there. Even if indication is not there, every year you have to do impairment test if you use useful life more than 10 years. Did you understand? Then, what about residual value? Correct? No, whenever you are calculating amortization, two estimates are there. One was your useful life. What did you learn about useful life? Maximum 10 years. But if you want to use more, if you think, yeah, you can use more, but one additional thing is the impairment test happens annually. Whereas impairment generally happens whenever there is indication. But if you take more than 10 years useful life, impairment test should happen annually. Then one more thing, residual value. They are telling the residual value of an intangible asset should be assumed to be 0. Like how useful life was assumed to be 10 years, here they are telling residual value for intangible asset should be 0. That means what? We cannot use a higher number at all. Yes. You can use higher number, but when the conditions are given. First thing is, there is a commitment by third party to purchase the asset at the end of useful life. See, AS26 is telling RV 0, default. But if you are able to prove that, see sir, after 10 years, there is one person who is ready to pay me this much. We have already entered into a contract. And if you are able to show it, then that number you can use it as a residual value, or else RV is generally 0. Or one more condition is there is an active market for an asset. Active market, and for shares we have an active market now. What is it? Share market, your BSE, NSE. For this intangible asset also, if there is an active market, then you can use residual value, provided two more conditions are there. What are the two more conditions? This residual value can be determined. First of all, you have an active market. From active market, can you find out the residual value? Yes, no. Today, is it easy for me to find out how much is the share of Wipro company? Yes. Like that only for your intangible asset also, if you have an active market, it will be easy for you to take the number. So from this active market, can you take the number? Yes. Second, Alapa, after the useful life, see residual value when will you get? After useful life, no. After useful life also, this active market exists. That is the second question. If these both conditions is a yes, then you can take residual value to be more than 0. Generally RV is 0, but can you take it as more than 0? When? First there should be a commitment from third party saying that, sir, I will purchase at the end of useful life. Or there should be an active market. Further condition is this active market in the price na ತಗೊಳ್ಳೋಂಗಿರಬೇಕು first. Like how we can take the price of a share easily. Like that, for an intangible asset also, you should be able to take the price. And second most important thing, at the end of the useful life, this active market should be there. Correct? No, then only you can sell the asset and get the residual value. If you think, sir, right now this active market is there, but after 10 years this will not be there, Andre, can I take the residual value? No, because that market is only not there. Understood? So these are assumptions, but you can take different things provided to those conditions. Whatever amortization period which you have selected, or whatever amortization method Andre, same. For depreciation also we have methods, no? SLM, WDV, etc. For intangibles also we have some amortization methods. Same thing, SLM, WDV, etc. Okay? That you have to review. Should be reviewed at least every financial year. That means my useful life is correct. The method which I am applying is actually correct. You have to review every year. When will you de-recognize an intangible asset? If it is disposed, and if you sell or if you throw the intangible asset, you will de-recognize. Or you have not thrown it, but the economic benefits, the future economic benefits that you get from the asset has stopped. At that point, you will stop the amortization also. Did you understand? When will you stop? Either you have sold the asset, or the asset is still there, but the future economic benefits have stopped. Then what will you do? What? De-recognize the asset from the books of accounts. Okay? So that's about AS 26. Okay? So let's see if you have any questions. No question now. Yeah, it's okay. There are no that important stuff. Okay, in AS 26, you should be able to manage. What you focus is that research and development phase. One thing, aita. And one more thing. I will just tell it to you as a reference. Okay. Later when we do the discussion, you should be knowing this thing. Just note it. Okay. Whenever there is change in accounting estimates, what will we do? You can think it from AS 10 point of view also. PP in the Yochane Madi. Now you thought the useful life was 10 years. But later you came to know useful life was 12 years. What will we do? Whenever there is change in accounting estimates, we will do prospective accounting. And very simple. Whenever it changes happens, change the carrying amount. Change the useful life. Find out revised depreciation. Whenever something changes, something changed, useful life change aito. So one more estimate is residual value change aito. What will you do? Will you worry about whatever has happened before? No. Just take the carrying amount, current carrying amount. And today, whatever the value at which you are carrying, take that carrying amount. Minus, if the residual value has changed, then take the changed residual value divided by changed, you take remaining useful life. Changed remaining useful life. Sir, what does that mean? Say suppose the useful life is 12 years only. Earlier it was 10, you thought it was 10, but later after 4 years you came to know it is 12. Now in denominator what will you take? 12 No, change the remaining. And the 12 only 4 already agide, right? Change the remaining is 8. Aita. Under 10 remaining is 6. Aita. Now that it has become 12, now the change remaining is 8 because 4 is already elapsed. So take that change remaining useful life. You will get the depreciation. Whenever the carrying amount changes, you are supposed to calculate the revised depreciation. Sir, yavaga. Say suppose at the end of third year, you did revaluation. Carrying amount changed. Then for the next year, how to find out depreciation? This method. Changed carrying amount minus changed RV by changed remaining useful life. Remaining togobeko. Don't calculate it for 10 only. Say total useful life is 10. And at the end of 4th year, revaluation happened. And for the 5th year, now you have to find out depreciation. No, will you take 10 only? No, forget. The moment revaluation happened, take the carrying amount minus residual value by remaining useful life, not the total. Whenever value changes happen, in denominator you have to take remaining useful life. Sir, when all will you change the value? Revaluation adag change ಮಾಡ್ತೀರಾ? Estimates change ಆದಾಗ change ಆಗುತ್ತೆ. Impairment loss book ಮಾಡಿದಾಗ value will change. So whenever such value changes and if you have to find out the next year's depreciation, one more thing, If you refund a government grant, see, when you receive government grant, you'll subtract it from cost. We'll read it tomorrow. If you refund it, you'll again add it back to the cost, no? So, carrying amount changed. How will you find out next depreciation? Revised carrying amount minus scrap value divided by remaining useful life. Whenever the value changes and you have to find out next depreciation, don't do the earlier depreciation. Do it new. Take revised carrying amount, scrap value by remaining. I'm repeating. You have to take remaining useful life. Did you understand? Everywhere, whenever the value changes, and next you have to find out, this is the formula. So wherever we are doing this, no, just keep this in mind. All of you. So with that, we are done with AS 26. Okay. So enough for today. Okay. Tomorrow we'll do the remaining standards. Are you